in the favors of declines. The broader markets continue to see pressure. You have 1500 odd declines versus 800 odd advances. So right now, the bearish momentum in terms of where the broader market stands. Let's try to pull up the mid-cap 150 and the small-cap 250 because that will give you a picture. The mid-cap 150 almost in tandem with where the benchmarks are, up by about 0.2 odd percent, but the small-cap 250 in the red down by about 0.3 odd percent. Let's try to pull up the BSE 500 and see as to what stocks are buzzing in trade. You have counters like ITI, Teamly. So a lot of hiring companies are in focus on the back of the new labor code coming in. Positive stance coming in for counters like Teamly's, up 10%. Something like an NBCC, Polymedicure, Asahi India Glass also up 3 to 4% each. But something that's not doing well, HAL after the Tejas aircraft crash down by about 3.5%. You have DCM, Shriram, Mishra Dhatu, as well as Deepak Fertilizer down by about 2 to 3% each. So that's with regards to where some of these stock-specific names are concerned. You have Grow also, which is up 2%, almost 3% now as we speak today. Let's also welcome in our guests for the day. Saurabh Jain, Equity Head Research at SMC Global Securities, and Kunal Rambia, Fund Manager and Trading Strategist at The Streets, joining us now. Kunal, quickly before I go on to the caller who's waiting by, your view with regards to how early can we expect to reach those life highs?
Good morning. Thanks for having me on the show, and good morning to all our viewers. So everyone is waiting for the new high to come in, but at the same time, one needs to keep in mind that the previous highs are not those easy levels to take out. So a bit of sideways consolidation with positive bias is likely to continue. I think tomorrow, because we are heading for the month expiry, I think we can see the new highs coming in during the first week of December. That's likely target, but Nifty should protect 25,950 levels decisively. If that's happening, then I think, as soon as the next expiry begins, we should see the new high coming in Nifty.
Got the view, Kunal. But, let's go across to our first caller for today. Chandu is dialing in for a stock query coming in from Hyderabad. Chandu, a very good morning to you. And welcome to Ask Profit. What's your query?
Very good morning.
Good morning, Chandu. Go ahead.
Related to PNB Housing Finance.
Okay.
So I have a 550 shares.
Got it. And do you want a long-term view on the stock?
I'm a long-term view on quantity, long-term view on that. I have average price of 962.
962, okay, got it. So you are sitting at a loss of almost 45,000. So let me go across to Saurabh real quickly. Saurabh, very good morning. Welcome to Ask Profit. What should Chandu do with PNB Housing Finance? He's bought it at 962 rupees per share.
Hi, good morning. See, first of all, there were some management changes happening in the PNB housing, and that is why the stock got corrected. And if you look at the operational numbers sequentially, there is not much growth. Moreover, what we feel is that maybe if you look at the real estate stocks also from the last 1 year, they haven't done anything. If you drill down further, you'll see that the sales, real estate home sales is also the growth is tapering off, and so and this is what is reflecting in the housing finance and the real estate stocks. So instead of parking money, investing money in the housing finance, we would recommend that it would be better if you go for the banking stock. So I would. My advice would be better to get out of the PNB housing as and when you get opportunity, and take that money and park that money in the banking stocks like maybe ICICI or for that matter Canara or Indian Bank.
All right, so that's the view with regards to where PNB housing is concerned. But the next question is from Sarma, who's writing us from Hyderabad. She's got IRFC 575 shares at the levels of 26. Is that correct? Let's try to pull the chart up. Yes, she's sitting on profits of 52,000 rupees. So she's got at a very crucial level, and that's why she's sitting on those profits. But she wants to know whether she can continue to hold this or book partial profits, considering that it's not done much in the past 1 year. Kunal, I'll come to you on this one. What are the charts indicating for something like an IRFC?
See, the entire railway pack was in a really decent momentum till the mid of, 2024, and then we saw some kind of correction. Even the sudden correction was seen in the IRFC. Now, this counter is down by around 50% from its all-time high and not doing much since 1.5 years. In fact, Jan 24, the counter was somewhere near to 110. It's back to the same level as of now. So I think, it's better to take the money off table and go for the counters where good momentum is seen. So from the technical point of view, I'll suggest an exit. But if the view is long term, then hold this counter with the stop loss of 110. If the counter decisively breaks 110, then it's an exit. And if the counter manages to break 125 on the higher side, I think the momentum can be seen at that point in time.
Okay, all right. So that's the view with regards to where charts are concerned for IRFC. We've got our next caller. Arun is calling us from Punjab. Arun, hi, a very good morning to you. I believe you have a question on Scient.
Thank you, madam. मेरा क्वेश्चन लेने के लिए I have got 170 shares of Scient at the rate of 1800 रुपए 1800 for long term investment.
ठीक है,
लंबे समय के लिए रख सकता हूँ, क्या व्यू रहेगा? इसको और परचेज करके एवरेज करूँ या बना रहा हूँ?
समझ गए, ठीक है अरुण, समझ गए आपकी क्वेश्चन. सौरभ, यू नो बिकॉज उनका लॉस ऑलमोस्ट 1,15,000 का है, डू यू रेकमेंड कि वो एवरेज आउट करें एट दीज लेवल्स एंड कंटिन्यू टू होल्ड फॉर द नेक्स्ट 2 odd years from a long term perspective, या फिर अब now is the time कि वो एग्जिट करे इस काउंटर को?
गुड मॉर्निंग. मेरा ख्याल ये रहेगा कि आईटी सेक्टर से निकलना अभी ठीक नहीं रहेगा. साइंट एक अच्छी कंपनी है, ग्रोथ नहीं आ रहा है, बॉटम लाइन में भी शायद थोड़ा सा डी ग्रोथ देखने को मिला लास्ट क्वार्टर में सिक्वेंशियल बेसिस पे. अगर आप देखें तो ओवरऑल हो क्या रहा है, अमेरिका में इंटरेस्ट रेट कटने की बात हो रही है और मुझे लगता है कि इससे शायद डिस्क्रिशनरी स्पेंडिंग को बूस्ट मिलेगा, जो कि इंडियन आईटी कंपनी के लिए अच्छा होगा. अगर दिग्गज कंपनी की आप चाल देखें इन दिनों पे, जैसे कि इन्फोसिस हो गया, HCL हो गया, ये और बड़े शेयर हो गए, वहां पर हमें थोड़ा सा बाइंग देखने को मिल रहा है. मुझे लगता है कि वैल्यूएशन के लिहाज से भी साइंट काफी नीचे आ चुका है. थोड़ा सा कॉन्ट्रेरियन प्ले है, लेकिन मैं समझता हूँ अभी इसके साथ बने रहना चाहिए.
That's Saurabh's view on Scient, and it has had a tough time to say the least. But let's go across to our next query from WhatsApp. Srinivas from Hyderabad is actually writing into us for a stock query on RVNL, holding roughly 500 shares at 354. So he's currently sitting at a loss of almost 20,000 rupees and asking if he should still continue to hold or exit. He's not mentioned any kind of time frame. So Kunal, let me come back to you. Do you expect RVNL to get back to the 350 odd price point so that someone like Srinivas can exit this counter?
The performance of RVNL on the chart is just similar to IRFC, which we discussed before this. The sideways consolidation and with lackluster behavior so far. The support is placed at around 305 right now. It's trading at 315. I would advise a hold for now because the time horizon is not clearly known to us, right? So with the stop loss of 305, one can hold on. One positive thing which I can see on the chart is good volumes were seen near these levels. So from here on, the risk reward ratio is extremely favorable for someone who wants to create new position. Momentum is certainly missing. The breakout is placed at 335. Any trigger above 335 can show us the levels of 360, 365. But for now, I would advise and hold because the stop is very closer to the CMP level.
So hold on RVNL according to Kunal. Wait for the some kind of positive move on this one. But another caller coming in from Hyderabad now. Kiran is dialing in for a stock query. Kiran, very good morning to you. Welcome to Ask Profit. What's your query?
Sir, good morning, sir. My query is regarding Axis State, sir.
Okay.
I have purchased 263 shares at 1530 rupees, sir.
Okay.
For a short-term trade, I have purchased these shares, sir. Around 4 lakh rupees I have invested in these shares.
Got it. And I can see that the current share price is below your buying price. So can you hold it for some more time so I can get you a fundamental view?
Actually, as of now, I'm currently in loss. If I could hold it for 1 more month, could I get back to my buy price and get into profits, or should I book my losses and shift to something like a good counter like Adani Green, which made a high around 1140 and is trading at 1020 for a short-term trading idea? Is my query, sir. Or something like DLF.
Got it. Understood.
DLF.
Kunal, let me come to you on Axis case. Do you expect, Kiran's price of 1,532 to come back, and any other option that you would suggest if that trade does play out? Where should he find any other opportunity right now? Is this something like Adani Green, as you mentioned?
So again, on this counter, since October, we are witnessing the third bottom getting formed almost near this 1400 to 1415 levels. The first bottom was somewhere near end of October. Then we saw the similar level in mid of November, and third time it's coming back to the same level. But the momentum is absolutely missing. So I think, at this level, I would advise a hold on this counter. By any chance, if there is a decisive trigger below 1400, it's an exit. But otherwise, it makes sense to hold this counter for now from the risk reward point of view. As far as Adani Green is concerned, this counter again has shown good momentum in between, but it just fizzled out. Near to the support level, 1000 can be a good stop loss, and momentum can be seen only above 1160. So out of two, I think Axis Trade would make a lot of sense than Adani Green, and switching over to Adani Green as of now.
All right, okay. Viewer standard disclaimer, Green is also a part of the Adani group of companies, and so is NDTV Profit. Moving on to the next question, which is from Sanjay, who's writing us from Bengaluru and asking about PFC. He's got 50 odd shares at the levels of 373. Wants to know if he can continue to hold for the next 1 year or not. Kunal, on the charts for a slightly longer term perspective, do you think PFC is a good counter to continue to hold?
Absolutely sideways again, almost 1.5 to 2 years. This counter has not broken 350 mark, but at the same time, there is no momentum. Now, because our viewer is already hold with the stop loss of 350, it's fine. But if someone wants to switch, I think IT sector is showing good momentum. So if someone is comfortable, should move on to IT sector to capture the upcoming rally.
Okay. Any specific counter that you're looking at, Kunal, in the IT space?
In IT space, we are very comfortable with TechM and TCS. TechM is today up by around 3.5%. It's showing the reversal right from the support level with the stop of 1400. One can certainly go for short term as well as positional trade. The targets can be as high as 1625 to 1630. Similar view is on the TCS. The counter has shown good momentum in the recent past with the stop loss of 3050. One can go long with the target of 3350 to 3400.
Okay, all right. We've got our next caller. Mohan is calling us from Bengaluru. Mohan, hi, a very good morning to you. How can we help you today?
I just wanted to long-term perspective of this Vatek buyback. Whether can I buy this? Can I buy this share for long-term perspective?
Okay, Mohan, any specific reason as to why do you want to buy this counter?
Just for this company is having a huge orders of water treatment plants expansion throughout India and also in Middle East.
Right.
So long term, I thought it would be better to buy enter into the share too for a long term. So I just wanted to know whether can I buy the share for long term perspective.
Okay, understood. I'll take this up with Saurabh. Then Saurabh, what's the view like for Tech Wabag?
Yeah, it's a good, a very old company, especially engaged in the water treatment, and they have a good order book. If you look in the last few quarters or a few months, the stock has done nothing. But if you look on the operational numbers, they keep on growing. The management is quite confident about the future outlook also. On the valuation side, the stock is trading around 25 times to its trailing earnings and around 4 times to book value, which is not expensive at all. So in my opinion, if you are a long-term investor, keep holding it.
That's sort of view on Tech Wabag, and a lot of interesting companies in that space that have actually listed, the likes of Concord Enviro amongst others. So the space really starting to show promise amongst a lot of investors as well, and in terms of other orders that it keeps getting. But we have another caller actually dialing from Dubai. Khadak Chaudhary is actually dialing in for a stock query. Mr. Chaudhary, a very good morning to you, and thanks so much for joining in. What's your query?
Very good morning, sir.
Good morning, Chaudhary.
My query is regarding ITC. I'm holding 5,000 quantity at the average cost of 330.
Okay.
And from the 500 top, it came down to 400 odd, 5 something now. So should I hold it or come out of it?
Mr. Chaudhary, if you don't mind me asking, when did you buy into it? Because you've gotten at a decent price. You're sitting at a decent profit of almost 3.8 lakhs. And while some money has been lost, when did you buy it and what was the rationale?
I'm holding it, accumulating it for quite long, like 4-5 years.
Okay. That's great. Great to hear that, Mr. Chaudhary. Let me get in Saurabh's view actually very quickly on ITC. Because Saurabh, as a stock, it has fallen from the highs, but largely do you expect that any kind of GST boost momentum could have a better prospect in the H2 for this counter?
I think for that, we have to listen to the management after the December quarter earnings will be out. But if you look at all the segments per se, tobacco, paper and boards, hotels, and stationery, all the and also the food business is also doing good. there has not been much growth in terms of revenue and profitability, and that is why maybe the stock is languishing for the last few months. It's a kind of a portfolio stock, but if you are looking for a quick gains like what growth stocks offer, it won't the ITC won't give you that much growth year on year. So in my opinion, I think if you want to book partial profits, you can do so, and maybe you can invest that money maybe in the banking or maybe IT stocks.
So that's with regards to where ITC stands. We've got our next question, which is from Satish, who's writing us from Chennai and asking about two counters in the solar space. You have Vikram Solar and this is Vari Energy that he's talking about. Wants to know if he can invest in one of these or both of them. He's not given the kind of corpus that he has to invest in both of these. But Saurabh, which one would your pick be?
I think out of the two, Vari Energies would be my choice because it does hold a long-term promise.
Got it, Saurabh. We have another query now coming in on something like a Bellrise as a key stock, and what Shahid is very interestingly hold it at 90 rupees per share. So he's sitting at a very decent profit right now. 166 shares is what he holds, asking for the next 1 to 2 years. Saurabh, it's actually done very well for its investors. What would you recommend Shahid to do? Should he continue to hold this counter?
I think it is a relatively new listing, not encouraged.
But amongst the auto ancillaries, Saurabh, the outlook, if you have any, because Bellrise I think has a lot of revenue coming, almost 60% of its revenue coming from the two-wheeler space. So how would you see an auto ancillary company with majority revenue coming from the two-wheeler space? Do you think that it's a good time to continue holding any kind of stock in that, given the GST boost amongst others?
I think, in my opinion, two-wheeler sales will continue to rise, and it is experiencing actually a GST benefit. So the companies like TVS Motor, Bajaj Auto, Hero Motor, we have a positive outlook on that. And considering that fact, I think he should hold on to the Bellrise.
Okay, all right. So that's with regards to where Bellrise is concerned. It's that time of the show where we bring you Sharad, who helps us break down what the F&O market is, looking like today. Sharad, what is the setup looking like today?
Mahima, overall the sentiment is on the positive side, but over the next 2 to 3 odd days, there will be the monthly expiry at play and also the MSCI adjustments which are there. So the last hour of trade, we might see much more volatility coming in Sensex, but net, the technical levels are pretty strong, aided by the IT names in the front. But apart from that, most of the stocks are in a range, except the defense stocks. That's where the beating is taking place, and also the high beta stocks. Looking at the contracts, overall, there is a push and pull when it comes to both the call and the put segments. But largely, we would say there is a call writing still taking place on the higher side. Let's look at the active contracts where the movement is happening for BankX as well, and you see the key gainers. HDFC Bank is on the positive, but it's not being supported by ICICI Bank, and that's why we could say some divergence is happening. And look at that ICICI Bank here in the list. It's of course there in the red as well. Overall, the contracts also, it seems like the monthly expiry is at play, and we are seeing much action in the put side. So there is a divergence when it comes to the BankX and Sensex going ahead. But what are the stocks which should be in focus? A key long development coming in AB Capital and Indus Towers, but the strength is on the lower side. Of course, looking at the short covering also, there are two names coming in. This includes NBCC on back of order win, and even Tech Mahindra. Most of the IT stocks are showing good strength. These are technical up moves. Long unwinding for delivery and BL counters. That's the defense one. And another defense stocks would be in focus. That's HAL. That's down 3.5%. Major short build up coming here. And even solar industry, that's also down almost 2%. So this is the action coming up in the F&O space. But do remember, MSCI adjustments and monthly expiry will make this volatile space.
Thanks for that, Sharad. And definitely you will see something like a Tata Motors PV also being excluded from the Sensex. So you will have to keep a monitor of that. Indigo likely to be included in that index. But let's go across to our next query on WhatsApp. Balasubramanian from Bengaluru is writing into us for a stock query on Siemens. He's bought roughly 30 shares in August 2024 at an average price of 3,200. Stock's not done too much post that. He's asking if he should exit and buy into something like an L&T right now, given that there's no appreciative movement on Siemens right now. Saurabh, would you recommend that trade?
I would certainly concur with the view. I would suggest the same thing. He can certainly switch from Siemens to the L&T. But in the last few months, L&T has already risen by 30%. Doesn't mean that it cannot rise more, but it would be a prudent strategy to buy L&T in a staggered manner in corrections too.
Okay. The next one is from Nayan, who is writing us from Udaipur and asking about KPR Mills. He's bought 25 shares at the levels of 1125. From a short-term perspective, he wants to know whether he can continue to hold or not. Kunal, he's sitting on a loss of around just 800 rupees right now. But considering the volatility that we have seen in textile stocks this year, keeping into consideration global factors, US trade deal as well, do you think that this is a counter to continue to hold from a trading perspective?
Absolutely. So even if you look at the last 15-20 days behavior on this counter, it's clearly making higher top, higher bottom formation. Weekly charts are also positive. And right now the counter has taken the support right near the extreme support of short-term behavior. That's 1070, 1075. I think with the stop of 1070, one can certainly hold on to the position and the targets can be 1150 to 1200. Again, if the trend continues, one should not be in hurry to exit the profits because we might see the previous highs of 1300 also.
That's with regards to where KPR Mills stands. But viewers, Saurabh as well as Kunal, it's time for a first rapid fire round of this segment. You both know the drill. Try to keep your answers as short as possible. The first one is on ICICI Bank. This is from Fareed Chaudhary, who's asking, from a short-term perspective, what are the key levels to watch out for? Kunal?
Support being 1330 and the resistance being 1400. These are the two levels to watch out for.
Dixon Tech is the other counter. Bhupendra is asking, he's bought at 15,800. Should he add more or continue to maintain this level? Saurabh?
Continue to hold, do not add.
Okay, Naveen is asking the next one on HAL. He's at 6% losses. Shall he exit or hold? Kunal, on the charts?
Overall trend is sideways with a positive bias, so hold as of.
Indian Hotel bought at 740. Ravi is asking if he should continue to hold for the next 3 months. Kunal?
Overall trend again is sideways. I would advise an exit because it's just fallen from the resistance of 740 mark.
Railtail is the next one. Ahmed has bought 2 months ago at the levels of 396. Should he continue to hold or exit? Kunal, on the charts?
Again, sideways with negative bias, it's an exit.
IDFC first, our viewers bought it at 81 rupees and Ashwini from Chennai is asking if he should switch out or continue to hold. Saurabh?
Switch to Bank of Maharashtra.
KC is the next one. Anil has bought at the levels of 777. 400 is the quantity that he has. Should he hold or sell? Kunal, on the charts?
Absolutely negative trend. It's an exit as of now.
Transformers and rectifiers, a stock we've discussed a lot over the last 2 weeks. Murthy is holding at 336. Should he continue to do that, Saurabh?
Try to get out.
Okay, NTPC is the next one. Mahesh wants to know that whether he can continue to hold or exit. He's bought at the levels of 110. Kunal, on the charts?
Sideways since 1.5 years, support at 320, exit if the counter breaks below 320.
Global Spirits is the other one. Rajesh from Singapore actually is writing into us, is asking if we should continue to hold or switch to anything in the liquor space. Saurabh?
You can continue to hold or maybe switch to United Breweries.
Well, viewers, that's the end of the first round of the rapid fire for this edition of Ask Profit. Stay tuned. We have a lot more queries on the other side. Do keep sending them on the numbers flashing on your screen. A lot more action on the other side. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen right now. And on this side of the show, we're also joined by Ajit Mishra, Senior VP Research at Redington Broking, joining us now. Ajit, very good morning to you. The first question that we have is from Prashant, who's asking about Subros. He's bought 100 odd stocks at 1,000 rupees each and wants to know if he can hold or sell from a short-term perspective. Ajit, I'll come to you on this one. What are the charts indicating?
Yeah, good morning, Mahima. So, Mahima, it's been almost like 2-3 months now that the stock has been experiencing gradual profit taking. But the good part is that the volumes are missing. So it seems like healthy profit taking so far. We are very close. In fact, we are trading at the long-term averages on the daily chart. So that gives us further comfort that there could be a possibility of a rebound due to oversold position. So since he is holding it from 1,000 plus levels, my recommendation would be to maintain a stop at 800 now and use any recovery, let's say towards 950, 960 to reevaluate his position, because around that area we have multiple resistances and the kind of volume that it experiences on the rise is something that's going to be more important to watch out for. But as of now, it's a hold with 800 as a stop.
All right, so that's with regards to where Subros is concerned. We've got our next caller. Anupama is calling us from Bengaluru. Anupama, hi, a very good morning to you. How can we help you today?
Hi, good morning to all. I'm a regular viewer of NDTV Profit.
I'm so glad, Anupama, that you watch us daily. Thank you so much for that. You've made our day.
Yeah, I'm having 2,300 shares of NTPC Green Energy.
Okay.
At the rate of 106.30.
Okay.
I don't know why the share price is falling, although having good order book and showing good profit also quarterly. I don't know why the share price is falling, so I want to know the review.
Okay. So I'm guessing that you want a fundamental view on NTPC Green. Is that correct?
Yes. Yes. Okay. I can hold for more than 2 years also.
Okay. All right, Anupama. Got your question. I'll take this up with Saurabh then. Saurabh, I think we did take this counter in the rapid fire round, but slightly from a long-term perspective for NTPC Green, what's the view like? As she's saying, and she's sitting on losses also, what would you recommend her to do right now? Can she continue to hold this counter for the next 2 odd years?
Hi, good morning, Mahima. If you look at the utility space has done nothing because there was the expectation of the demand, energy demand was not there in this 2025 calendar year because of the erratic weather conditions. If you look at other stocks like NTPC, NHPC, SJVN, or maybe other stocks, all the stocks have done nothing apart from the correction. Now, coming back to the NTPC Green, if you look on the valuation side, it is trading after the correction also close to 4.5 times to book value and more than 100 times to its trailing earnings. Last quarterly earnings were also not good. Although we are bullish on the overall utility space, but NTPC Green, if you are long-term investor, then it is okay for 3 to 5 years. And if you want to switch to some other stock in the same space, so I would recommend to switch your money to the maybe company like SJVN or NHPC.
Got the view, Saurabh, but we have another caller actually dialing in from Hyderabad. Aishwarya has a stock query for us. Aishwarya, very good morning and thanks so much for dialing in to Ask Profit. What's your query?
Good morning, sir.
Good morning, Aishwarya. Go ahead.
So I had some 1 lakh to invest in. I thought of investing it in IOB. Like I wanted to know the short-term outlook on that particular stock.
Okay, Aishwarya, got it. And is there any particular reason for IOB or are you open to other opportunities in the banking space as well?
No opportunities as well.
Okay, Ajit, let me come to you. First, your view on Indian Overseas Bank for a short-term view. Is it advisable to invest 1 lakh for Aishwarya or is there anything else that you like much better in both the public as well as the private banking space?
So Puneet, IOB has been underperforming for quite some time. It's been almost like 1.5 years now that we are seeing this trend unfolding. And despite the kind of robust rebound that we have seen across the PSU pack, there's hardly any traction in IOB. So in my opinion, definitely one should refrain from the underperformance, especially if the view is very short term. And we have counters like BOB, Canara Bank, SBI from the PSU space, which one can consider. Then we have Axis and SDFC from the private banking space, where one can look for fresh investments.
Okay, all right. So that's the view with regards to where the banking space is concerned. The next one is from Satyan. Satyan is saying that he's been holding PCBL at an average price of 290, which did touch 498 and has come back to 325 now. Wants to know if this is the time that he can book some of the profits that he's seeing and switch to something like a Voltamp or Tarrell. Ajit, I'll stick with you for this one. Do you think that's the right thing to do?
So Philip Carbon Black, Mahima, at one point of time, everything was going in the favor. But off late, we have started seeing, after the failed breakout attempt, the stock has been gradually inching lower. There is a possibility that this correction might further extend if it fails to hold 320. So in my opinion, we are very close to that mark. So at least wait for that level. In case if it breaks, definitely you can consider switching to the other counters.
Got the view, Ajit. We have another query actually coming in on something like a Vishal Mega Mart. Now, a stock that's done very well since its listing. Angad from Indore is asking if he can buy into this counter for the next 1 year. Saurabh, would you recommend that particular trade? Is there anything else that you like in this space?
See, we do like companies like Vishal Mega Mart or V-Mart, especially after the GST cut. These companies are seeing some kind of attraction, volume growth, and as well as store expansion too. The rate of growth is higher in these kind of companies.
Okay. All right. So that's with regards to where Vishal Mega Mart is concerned. The next one is on urban company. Shailja from Hyderabad is asking this question. She's got 55 shares at the levels of 164. Can she average? Although Saurabh, her time period is a short one, but I'm sure there's not enough data on the charts for urban company right now. But from a slightly short-term perspective, 6 months perspective, do you think she can continue to hold this counter? Because from what I understand is that valuations being, extremely expensive for this counter, until and unless the results are, on a stellar note, the stock is going to be sideways going forward. But what's your expectations with regards to where urban company stands?
See, you are absolutely right, Mahima. The valuations are on the higher side. That is why the stock is taking a halt. And it will take a while for the market to get confidence till the maybe 2 quarterly or 3 quarterly earnings comes out. But overall, the management is quite confident of giving profitable growth and maybe venturing into the newer opportunities too. The management is quite agile. All that I can say. I think it is better to wait for the December quarterly earnings, wait for how the profits pan out and what is the management guiding for.
Got the view, Saurabh, but we have another caller now actually dialing in from Mumbai itself. Ankit has a stock query for us. Ankit, very good morning to you and thanks so much for joining in. What's your query?
So good morning. My name is Ankit Mishra and I'm holding currently 1,000 share of Canara Robeco AMC at a average price of 326 rupees, and I'm looking out to add more.
Okay.
And I'm having a long-term horizon for nearly next 10 years.
Got it. And got it. Ankit, you already have built quite a decent position. So is there any particular reason you want to add more of this particular AMC stock?
Looking at the current, all the details which I'm getting, like 10 years will be, my financial market will be better. So that's why I want to hold more than 10,000 shares of this AMC.
Okay. That's an ambitious target, but got it, Ankit. Saurabh, he already holds roughly 1,000 shares of Can Robeco at 326. Your quick view first for the next 10 years, if you can, on this counter, and if he can add more, should this counter be that one, or he can spread it out amongst the other AMC or any other capital market plays as well?
See, while the argument is actually good, that in the 10 years the market would be much higher and the AMC stocks should do good. But if you look at the global valuations of the AMC stocks, that are not that richly priced as they are priced here in India. Now, Canara Robeco is trading 9-10 times to its book value, which is quite expensive. Normally what happens, a higher multiple is given to AMC where equity portion is on the asset average, on the overall average asset side is higher. Now, overall, the valuations here in India are higher. So I think which are discounting future growth, profitable growth, earning potential also. So in my opinion, I think it is better to take out some money and better to invest in the bank.
Okay. All right. The next one is from Siddhartha Chaturvedi, who's writing us from Jaipur, asking about Quest Corp. What he's saying is that, is this the right time to make an entry into Quest Corp, considering the long-term benefits that it will have due to new labor code that has come in? Saurabh, I'll come to you on this one. We've seen that counters like Quest Corp or Team Lease have been buzzing on the back of that. But do you really think that this could be a structural change for these companies, considering that the new labor code is now going to be more organized? The shift that is going to be happening is from unorganized to organized sector. Do you think that will be a structural change for these companies?
I think as of now, today, what is happening is a tactical play because of this announcement. I think it is very hard to predict whether these companies will actually be able to get benefit out of this labor law changes that has happened. So in my opinion, I think when such things happens, I think it is better to take money off the table rather to invest in it. I think one should wait for a while taking such a decision.
Okay. All right. So that's with regards to where Quest Corp is concerned. We've got our next caller. Rajan is calling us from Chennai. Rajan, hi, a very good morning to you. How can we help you today? Hi, Rajan. Can you hear me? Okay. I think we seem to have lost the caller, but we do have his question. It's on Redington. He's got 1,000 odd shares at the levels of 190. Ajit, he's already sitting on a profit of around 1 lakh rupees. Would you recommend him to continue to hold this counter from a chartical perspective, or would you recommend him to book his profits?
So Mahima, we are seeing a volatile swing in the stock, means in the range of 230 to 315 is something that the stock has been hovering in. But off late, we have started seeing a bit of a stabilization of the short-term averages, so which gives us comfort that there could be a next leg of up move, left. So yes, he can continue to stay put despite having decent profit, but with a trailing stop loss. So let's say we stop at 270 now. One can continue to hold the position with 330, 340 as a positional targets.
Got the view, Ajit. We have another stock query actually coming in on something like a JSW Energy for a 7 to 8 month view. And Arjun writing to us from Kolkata is actually holding 132 shares at 527. So he's currently sitting at a loss. Ajit, any kind of view that you have on JSW Energy on the charts? Can it come back to 527 for Arjun?
So Puneet, it's very tight range congestion that the stock was experiencing for almost 3-4 months now. And the recent price action indicates a breakdown. So unfortunately, Arjun, indications are more in the favor that the stock might drift towards 450 levels first before any meaningful recovery. There could be intermediate rebound every now and then, but I doubt that it can convert into a trend reversal until we decisively close above 540 mark, which is closer to your buying price as well. So in my opinion, at least reduce your position right away and wait for any dip towards 450 or a breakout above 540 to re-enter.
Got the view, Ajit. We have another query actually on WhatsApp, and it's an interesting one on Team Lease actually. And we just discussed Corp. So Ajit, any view on Team Lease on an intraday basis? What our viewer is asking, the stock's already up 10%. So if someone's actually bought it, what should they do with the stock? And if someone wants to enter the stock right now, is this the start of an up move which could last for quite some time?
So if you see Team Lease on a broader time horizon, Puneet, you'll see that 1600 was a zone where last time when the stock witnessed a very sharp rebound towards 5400 mark, the record high zone. So are we going to see this similar trend? It's practically impossible to tell on the first candle, because today we are seeing a decisive candle for the first time with noticeable surge in the volume, almost 9 times of the average volume we have already seen so far. So yes, possibility of recovery, further recovery seems high, means 1980, 1990 is something that the stock might test. And for that now, at least this 725, 730 area is something that the stock should hold. Still, the risk to reward is favorable, 1:2. So if the view is very short term, one can consider to hold the long positions. Around 990 area, one should review again.
Right, so that's the view with regards to where Team Lease is concerned. We've got our next caller. Rajiv is calling us from New Delhi. Rajiv, hi, a very good morning to you. How can we help you today?
Madam?
Yeah, hi.
I want to know about NHPC.
Okay.
I got it at 106.35. Price of shares.
Okay.
For long term, I want to know what is the shares, because as of now it is under loss, around 15,000.
Okay. Got your question, Rajiv. I'll take this up with Saurabh then. Saurabh, he's sitting on losses over 15,000 rupees. Would you recommend him to continue to hold NHPC?
Yes, we are positive on the utility side. This year, the stocks hasn't performed. Any of the utilities haven't performed because of the erratic weather condition, as I have said in the previous query. Now, with respect to the NHPC, lot of capacities will be commenced this year and going next year, which will lead to double-digit kind of a good double-digit growth in the both in bottom line and the top line. So for the next 3-5 years, it looks a good hold to me.
That view, and that's Saurav's view coming in on NHPC. We have another query now coming in on something like a Tata Steel, and our viewers holding roughly about 145 rupees per share, 5,000 quantity. So he's sitting at Anil is sitting at quite decent profits here. He's asking if we should hold or sell. So Ajit, let me take this up with you. On the charts, any kind of continuation of up move on Tata Steel?
So in fact, Puneet, after this recent outperformance, we are seeing that most of the metal counters are either witnessing profit taking or consolidation, and same holds true for Tata Steel also. Means after the new record high, the stock has witnessed a sharp correction. Now we are trading closer to the 100 EMA, which coincides with the breakout area also. So the prudent approach is to maintain the stop at 165. In case if it breaks, you should definitely book profits, because again, it might drift towards 160, 158 area, which is very close to his buying price. So as of now, seems like profit booking is an ideal strategy. In case if it manages to hold 165, then probably 175, 180, it's something that the stock can retest. So if the view is short term, around that area also one can consider booking complete.
Okay, all right. So that's with regards to where Tata Steel is concerned. We've got our next caller. Rajesh is calling us from New Delhi. Rajesh, hi, a very good morning to you. How can we help you today? Hi, Rajesh, can you hear me? Okay, I don't think he can hear us. I think we seem to have lost him, but we do have his question. It's on Shakti Pumps. He's got 125 watt shares at the levels of 810. Saurabh, I'll come to you on this one. Should he continue to hold the counter? He's sitting on losses of around 16,000 rupees.
See, in the last few months, the stock has already has shown correction, and it got re-rated. I think back in 23-24, and the valuations gone off the roof. As of now, also on the price to book side, it looks expensive to me. I think it would be better to get out.
The view, Saurabh. We have another query on SBI, and Arijit from Kolkata is asking a short-term view. He's holding 10,000 shares at 973, and his target is something that he's mentioned. He wants to know if it can hit 1,097 in the short term. How long should he wait to achieve this target? Ajit, a very interesting query to say the least. He already has a target in mind. Any view on SBI when it can reach 1,097?
Right, Puneet. So it's good to have target in mind, but at the same time, since you are maintaining a short-term approach, the stop loss is more important, because what if we see some profit taking after this phenomenal surge, means from 800 to 980? So in my opinion, the recent consolidation zone, which also coincides with the 20 EMA, close to around 950 should be a strict stop loss, because the moment we break and close below this mark, this momentum might fade away, and there could be a next leg of consolidation in the stock. The moment we see this, average holding, means the 20 EMA continuing with the trend. So probably, yes, gradually we can inch toward 1,090 or 1,100 mark, or maybe higher, in case if this momentum continues. But as of now, 950 is this strict, make or break area for SBI. So that should be a strict stop.
Right. The next one is from John, who's writing us from Dubai and asking about HAL. He's bought 120 shares at the levels of 4739. Wants to know from a short-term perspective, 2 to 3 months, can he continue to hold or not? Ajit, today, of course, it's down on the back of the Tejas crack. But do you Do you think that from 2 to 3 months perspective, it's possible that the stock can see an upward momentum?
Mahima, if you see, it's been almost nearly like 5-6 months now that this range has been continuing 4,300, 4,900, 5,000 on the higher side. So we are very close to that lower band. So with stop at 43, definitely one can stay put. In case of a rebound, close to around 4620, 4650 will be the first area of resistance, and around 4,900, 4,950. So in that case, in case of the view is short term, use recovery to reduce the position, because the texture has definitely changed from positive to slightly sideways now. So it might consolidate further, maybe for a month or two, before any meaningful move.
And HAL was in focus because of that unfortunate crash in Dubai Air Show, and the prayers with the family. Of course, it's a terrible loss for them as well. So for Wing Commander Namansh Sanyal, rest in peace to him as well. But we have another query that's coming in from Hyderabad. Snigdha is dialing in for a stock query. Snigdha, very good morning to you and welcome to Ask Profit. What's your query?
Hi, good morning everyone. So my query is regarding cement space. I just want to invest 1.5 lakhs. So as JSW Cement corrected a lot and it is trading at 119 rupees right now. So I just want to know if I would invest in JSW Cement or Ambuja or Ultratech. Yeah.
Is this a long-term or a short-term query, Snigdha?
It is for 3 months.
3 months, got it. Ajit, anything in the cement space that you like for the next 3 months for Snigdha to invest roughly about 1.5 lakhs?
So Puneet, in my opinion, one should continue with the leader. So means Ultratech, after this recent surge, we are seeing marginal profit taking. Other counters which she mentioned are either underperforming or trading at the 52 weeks low. So one should utilize this correction in the leader to accumulate. So 11,600, 500 is the area basically where one can look to accumulate. 11,000 is a very strong base, so that should be the stop loss for next 2 to 3 months. And 13,000, 13,500 should be the target zone.
Okay, all right. So that's with regards to where the cement space is concerned. We've got our next caller. Sridhar is calling us from Madurai. Sridhar, hi, a very good morning to you. How can we help you today?
Good morning, ma'am. Good morning, ma'am. I'm Sridhar from Madurai. I'm having Canara Bank 105 shares, ma'am, at the rate of 197.
Okay.
Can I hold this or for a long time? Long term?
Okay, Sridhar, got your question. I'll take this up with Saurabh then. Saurabh, from a long-term perspective, would you recommend him to hold Karnataka Bank?
See, on the valuation side, it is trading at close to 0.7 times to book value. Overall, the bank is not that great in the private space, but if since he hold it, so he can continue to hold. We have a positive, constructive view on the banking space as a whole. But if he want to switch his money, he can switch his money to maybe companies like Indian or Canara Bank.
That's Saurabh's view on Karnataka Bank. But we have another query now from Nagraj. An interesting one again. He wanted to know all about the all cargo as well as the Gati shares which will be moving to the merged company. Saurabh, do you track this space and any view what should Nagaraj do post this particular transaction?
Won't be able to give you.
Ajit, anything on the charts that you can give us a quick view on all cargo Gati?
So I guess ACL, if I'm not wrong, is it's the symbol ACL Gati. So Puneet, after this prolonged underperformance, we are seeing some sign of rebound now. Though it's too early to say that it's turned out to be a reversal or not. But yes, the moment let's say we surpass this 68 barrier, which is the long-term averages area, we can see a further rebound, let's say towards 78 to 84 levels. So as of now, one can continue to stay put with the 62 as a stop loss.
Okay, all right. So that's with regards to where Alcargo is concerned. But it's time for our second rapid fire segment. Ajit and Saurabh, you both know the drill. Try to keep your answers as short as possible. The first one is from Ankit, who's writing us from Faridabad, asking about Bajaj Housing Finance. He's bought at the levels of 171 and 175 shares. Should he hold or average it out? Ajit, on charts?
Hold, but avoid averaging.
Anantraj bought at 598. A 6-month view is what Jairam is asking. Ajit?
Anantraj. So consolidation is more likely. Hold with stop at 580.
Okay, Patel Engineering is the next one. Rishu wants to know whether they can continue to hold and maybe accumulate at the current market price. Ajit, on the charts?
Avoid. And in fact, if you have an existing position, you may consider exiting.
South Indian Bank for the next 1 to 2 months. Ajit, would you recommend that trade?
Hold with stop at 35.
Okay, BEL is the next one. Gul is holding at the level of 297. Wants to know if he can hold for the next 2 years. Saurabh, your view?
Keep on holding.
Tata Motors EV, 250 shares was Major BV Nayak from Pune holds. Saurabh, would you recommend continuing that particular transaction?
Pressure is there, better to exit.
Persistent Systems is the next one. 500 shares bought at the levels of 6137. Can he continue to hold? Ajit, on the charts?
Hold with the trailing stop at 6300 now for position target of 6550.
Godfrey Phillips, a view on the charts, Ajit?
Consolidation is more likely hold.
Kirloskar Brothers is the next one. Shrikant from Chennai has got 70 shares at the price of 1850 on the charts. Ajit?
Looks sideways to me. Better to exit.
L&T Technologies seen correction over the last few years. Saurabh, any view?
Keep on holding as a contrarian call on IT.
Okay, Utkarsh Small Finance Bank. Is this the right time to make an entry on the charts, Ajit?
No, in fact, if you have an existing position, you may consider exiting.
All right, okay. So that brings us to the end of this edition of Rapid Fire as well as Ask Profit round. But Ajit and Saurabh, thank you so much for taking out the time and answering those 52 queries for us. So we've not still broken the record of 55, but we'll try to do that anytime soon now. But viewers, thank you so much for tuning in and of course asking those queries. Stay tuned, KYC on the other side.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope
Hello and welcome to KYC. I am Sharad Dubey, and the company on KYC's radar today is Rubicon Research. It's a newly listed company. It's a pharma player. But the key question is, why have we got this company today in our show in the KYC? And what are the key elements which we'd like to know about this company? The first one, of course, is what is this opportunity coming in the nasal spray market? Is it a very large market? Is there any kind of a niche mode does the company have? That's something we'll be looking at. What's the contribution coming ahead in the specialty segment? Now, of course, high margin also kicks in when we speak about this. The third question is, overall, more product launches to be going ahead. Why? Because companies focusing a lot in the R&D space, and that's the something which we will be looking at. Now, strategy against the US trade policy. We have seen a lot of, you could say, kind of a movements happening in this pharma space where the concerns are still there, and also the headwinds that's coming from the US generics industry, and that's why the pricing pressure is there in this segment. It's a new segment which the company is operating in, but I would like to give you some more details when it comes to about the company. These are the questions which we would like to know about it. This was recently listed company on October 16, 2025. It's an R&D-led pharma manufacturing company, and you could say the peer is Shilpa Medicare. The current product portfolio actually has four important fours: oral solids, oral liquids, nasal sprays, which we spoke about, and topicals, which are basically ointments. Interestingly, the scaled up portfolio they have launched on a faster basis, and roughly 70 of them have already been commercialized by this June 2025. R&D spending, that's very interesting data, 11% of the total revenue, and that's the higher coming as compared to the sectoral spends. That's roughly around 6% odd. And also there are 2 US FDA facilities coming in. One is in India, another is in Canada, and 3 other US FDA manufacturing facilities are there in India, which includes places of Ambernath, Satara and Pithampur facilities. So of course 5 total facilities are there if you include both R&D and the manufacturing setup. So this is what we have got to know about the company. What are the important questions which we'll be asking in today's management? We have discussed that, but let me take you through the format of our show in KYC segment. And if you look at it, we have 8 parameters where we judge a company in our show. One by one, we'll give ratings to it. This, of course, includes the main numbers, income statement, balance sheet, and cash flow. In return ratio would be our 4th operating parameter. Apart from that, shareholding street cred, which is nothing but the stock returns coming in. Of course, this is a newly listed company, so the data will be less. Valuations, where does it stand? And the outlook going ahead, where does the company give its strategic view? So these are the 8 parameters where we will be judging the company and giving the numbers. So let's start with the first parameter, that is the income statement. Largely looking at these numbers, we have taken it from the IPO's RHP itself because the company doesn't have a history. It was just recently listed on October 16th. Look at the revenue and EBITDA numbers. There's a significant jump coming in. Operationally, even the margins, that was just 5% in FY23 and now higher teens in FY24, and then a jump coming for 20% in FY25. Even the H1 numbers have been on the strong side. Q2 numbers, let's have a look at it. A very superlative performance coming in. Revenue jumping almost 17% on a sequential basis. EBITDA also jumping 25%. Margins also comfortably above the 22% mark, and that is actually industry leading, you could say that. Of course, the company has a very short history, but overall, if you look at the performances, the margin trajectory, now we have taken these numbers over the last 4 to 5 odd years. It is maintaining that up move coming in. Look at that, in FY22 it was negative, but after that FY23 there was a turnaround year. FY24, 25 till this Q2 numbers are comfortably in the higher category coming in with the returns between 18 to 22%, and it is sustaining. So net, the income statement, be it the revenue, be it the EBITDA, be it the operational margins, have been showing a strong footing. And the Q2 numbers, the recent numbers to judge the company post its IPO, still stand strong. So overall, for the income statement, we will be giving a +1 going ahead. Also, let's move on to the balance sheet. That's a very important aspect to look at. And here, overall, we look at the book value numbers. That has gone up, of course, post-IPO proceedings. These numbers have gone up. Borrowing, that is almost 568 crore rupees. But if you do the debt-equity ratio, it is still in a comfortable level. There's nothing to panic when you look at the balance sheet, especially when you compare the borrowings with the equities. Cash and bank, that has significantly gone up, and IPO application of proceeds will be taking place. So because of that, you're seeing a higher cash balances as well. So net, the debt equity ratio is comfortable. Cash bank balances are on the higher side, 116 odd crore rupees. Last year in H1 FY26, which you should be looking at, that's more than 150 odd crore rupees. So it would be a neutral rating coming from my side. The third important parameter is the cash flow parameter for the company. And overall, if you're looking at these numbers, they are pretty decent. The PAT numbers have gone up. The FY25 numbers, 134 odd crore rupees. Even H1 numbers are good. And overall, the conversion to PAT, the cash flow operations to PAT, that ratio is also strong. Net cash flows, there was a lot of variation in the last 2 to 3 odd years, but in FY25 and H1 to FY26, the numbers are on the positive side. So net, I'll be giving a neutral rating when it comes to the cash flows. Return ratio, that's very much important. FY22, for all the numbers which we had calculated in our analysis, it was on the negative side. But look at the growth coming in 23, 24, 25, and it is sustaining. ROC above 26%, ROE above 29%. Generally, for these industries, an ROE or ROC above the 17 to 20% mark is showing strength. And that's what I had mentioned earlier. that it's industry leading in a lot of ratios, and that's what coming into these return ratios as well. Look at that, FY25 it's 26% plus, and ROE also is 29 odd percent. So significant returns coming in for the stakeholders. So net this would be coming in as a thumbs up from my side, and I will be giving a +1 rating to this. Also, let's move on to the shareholding segment. We always spoke about the numbers, but shareholding doesn't has much of history. And if the company doesn't have a history, we'll take a neutral stance. Promoters are having roughly 60 odd percent. That's decent. FISDI is holding roughly combined basis 20% stake in the companies, and public holding 20 odd percent. So net, it is a neutral rating coming from my side when it comes to the shareholding parameter. Now, of course, we spoke about the very short length coming from the IPO to judge the company, and the street cred 1 month return has been 18%. Recent listing, it's just been 7 odd percent, and the issue price, because of a pop-up listing, we are seeing that return to those investors has been 38 odd percent. Stock has not had much of a history. So net, I will be giving a kind of a neutral rating for street cred. Also, moving on to the valuations, that is also a very key parameter which we judge the company on. And net, the valuations look decent, and the history over this timing is on the lower side. But the EPS numbers, the P numbers, the FY26, let's point it out, that's 49 times. That's on the higher side. But for FY27, if you get these numbers, it's coming in tandem with the industry averages. Generally, the larger players in the pharma, they do have that 35 to 45 P ratios, and some mid caps also come in this range. So net valuations, just because on a shorter timeline, I would be giving this a neutral rating. Most importantly is the outlook segment. This is our last but not the least. It's a very important parameter, outlook going ahead. This is largely an undiscovered company where the talks in the investor circles and the broking circles are pretty less. That's why we have picked up this company as well. Interestingly, looking at the new launches in the generic space, especially the nasal spray category, which we had earlier mentioned also, that why we actually want to call this company in KYC, because of the total addressable market. That is something which augurs well for the company. Also, they'll be focusing much more on the enhanced prescription-led business in the CNS therapy. This is a bit technical, but to put it in perspective, the prescription-led businesses do have high margins. So companies slowly moving out from the generic category which they were there. They did grow in 2010 to 2015. That was a cycle. But now they are moving into the specialty space. That means higher margins coming in. Also, a stable R&D productivity. And whenever a pharma company invests a lot in R&D, their product pipeline, that increases. And why this is important? Because 11% of the revenue from R&D just comes out of sales in this space. And the industry average is 6%. That means if you put more money in R&D, your product portfolio goes up. And in regulated markets, you get a moat. Also, lastly, the curated approach coming in the supply chain management. This seems basic, but this adds up later on, especially when it comes to the operational leverage of the company, and that helps the margins going ahead front. So there are two engines for this company. First is, of course, your specialty segment. That's where the revenues is going up, and also company is doing operational efficiencies, backward integration. So that's also helping the company increase their EBITDA numbers. So net outlook, it seems very strong. So I have given a plus for this. Now, let's give you all the entire details for the ratings which we have given in, and one by one, we will explain you why the parameters were there and what numbers we have given. Income statement, very strong. Q2 numbers also coming in strong. So I've given a +1 to it. Balance sheet, the debt level has gone up, but so has the cash bank level, and the debt equity ratio is still stable. A neutral rating coming in. Cash flow also, not much happening because it's a very limited time frame we are judging the company on. So I've given a neutral to it, but return ratios, they have done really well. FY22 was a watershed year, and then the conversion started coming and going up and up. Shareholding, largely nothing to talk about, and same thing goes for street trade because of a lesser time frame. So stock was listed on October 16, and it's just been almost a month since its listing, but net it's neutral. Valuation wise for FY27, the numbers are neutral, in line with what the industry is there and their peers in the small cap space. But the thing which I like the most is the outlook going ahead. How does the company have its moat? How does it actually benefit despite headwinds coming from the US markets? how company is defending its moat. So I've given a +1 to it. So the total addition comes to 5.5 out of it. And generally, historically speaking, that's on the higher band when we give these numbers in our KYC segment. But of course, you must be wondering, what are the questions we need to ask the management? How important it is that what lies ahead for this company? And even broking house Motilal Oswal is very bullish on this company. They had recently come out with the initiating report as well. And we will be talking with the management. And of course, the first thing from the management joining us is Parag Sancheti. He's the CEO at Rubicon Research. A very good afternoon to you, Parag. First question, of course, is the US markets. They have shown headwinds coming in, tariff uncertainties coming in, but despite that, as what the company has stated, brokerages are very bullish and you are maintaining your moat. So the first question the investors, the community wants to know is, what's your actual moat?
So thanks for having me on the show. From the actual moat which we have is across three pillars, I would say, and which is based on our very strong foundation of science, regulatory and innovation. And those three moats are our portfolio selection, our execution rigor, and the capital allocation. So these are the three moats which we have consistently followed over the last 10 to 12 years.
Parag, let's go into detail, segment-wise. First of all is the nasal spray segment, and that has been doing wonders for your company. But I want to understand what's the total addressable market you're looking like, and give us a flavor of the market share which the company is having, because we don't have those numbers yet. But if you could just give us some flavor of that, because nasal spray is a big opportunity for your company. So what is it? Quantify that, Parag.
Yeah. So nasal spray is again a carefully thought through strategy which we initiated way back in 2020. And again, this is a broader umbrella of drug device combinations which we are looking at. Any things which get delivered through the drugs getting delivered through device. And we picked up nasal spray because I think it's a space which is very complicated and scientifically very challenging to develop. In addition, I think in our branded business, we are looking to nose to brain delivery. Now going to, I think, the addressable market size, I think there are quite a few approved products in the market, in the US market, and there continues to grow a lot of other products which are getting approved, including the Neffy, which is a epinephrine nasal spray, which kind of replaces the EpiPen, which is a pretty successful product, though has had some medical limitations. So I think the market space is expanding. Don't want to put a number to it because it's a very growing space, and multiple products getting approved from the innovators creates a sizable size for companies like us. And also we in turn will also be creating market through innovative products.
That's a pretty interesting take coming in, Parag. They have actually picked up this nasal spray base, and that's actually doing well. There are two reasons coming from the management. First is, of course, it's a niche player. And also they're getting a lot of approvals from the regulated markets. When I speak about regulated markets, I just want to inform my audience that this is the US markets where US FDA is very active. That's why we call it regulated markets. But coming back, apart from this regulations where there's a lot of strength coming in, the specialty segment revenue contribution, that has gone up. Something which was a commodity related business from generics. After that, the company has moved out to the specialty segment. Now, what's the current contribution in the revenue segment, and what's the target going ahead for this specialty segment?
Specialty products this quarter contributed 33% of our total gross profit. And that number has been increasing and continues to increase over a period of time because of our differentiated product portfolio. So this business segment will continue to grow as the company gets more approvals with limited combination. And as we define specialties, one or less than one competition is what we define as specialty, just for the audience. And we continue to have strong approvals in that category.
All right, the margins, let's just have that look as well. It's of course constantly going between 21 to 23% and it's decently set. And there has been, of course, a very big turnaround from FY22. But Parag, now the question remains is, there are two engines we spoke about, the specialty segment revenue going up. Then, of course, we discussed about the operational efficiency also kicking in. Now, what would be the margin outlook? Are we looking at touching that 25% mark on a blended consolidated basis in the coming quarters?
Yeah, so the current quarter was close to 23%, and we are guiding to that, which was a growth from 21% previously. So we're guiding to that, and we are also guiding for a sustained revenue traction. So as of now, I think we feel that we'll be able to sustain the increase in EBITDA we have depicted in this quarter.
That means, to put it in a simple manner, 23% EBITDA margins we can expect at least in the coming quarters?
Yes.
Okay. So 23% expectations would be there, investors. That's an important point coming in from the company. But apart from that, of course, there's an important question lying is the R&D space. Your company is doing it much larger, almost double of the industry average. So much R&D expenses are happening, and generally when this happens, there is a time frame also when these products start coming in. Just give us the rationale why the R&D expenses are so high, and if the benefits are coming in, what would be the timeline for this?
So if you look at the history of the company, and obviously we are a newcomer in this space, we've been obviously disproportionately spending on the R&D to kind of gain that R&D momentum on approvals and product approvals. We have guided in the long run around 10 to 11% of the revenue would be spending on R&D. The benefits, if you see the spend which we've been doing, which is quite significant as compared to our larger listed peers, we've been already seeing that in our margin profiles, our growth. If you look at the performance of this quarter itself, all these approvals are playing out. And as we go ahead with the significant spend we are doing on R&D, we definitely look at this playing out across the specialty and the generic segment.
Well, Parag, if these approvals are coming in fast, and if I'm not mistaken, almost 70 odd commercializations has already happened, and you're scaling up portfolio is something which the street is very gung-ho about. So this number 70 commercialization in June 25. Now, what are these numbers we can expect? If you could just give us a broad figure in the the end of FY26.
Yeah, so I'll just give you a broad number which was there in the DRHP. I think we have roughly 71 approvals. 81 approvals, 71 we have already, 71, 72 we have commercialized. Commercialization number is one of the best in class, 93%. As put it in our RHP, we had 80 products which are filed with the FDA at different stages of R&D. 17 are filed with the FDA. So if you look at it, it's almost that we are doubling up our portfolio in the next 2 to 3 years, along with very near-term 17 approvals which are already filed with the FDA.
When you speak about doubling of portfolio, this is at a consolidated level, or is there a sector-wise kind of a view?
No, it's at a consolidated portfolio level.
All right. So consolidated portfolio level, you will be doubling this portfolio in the next 2 to 3 odd years. And that's pretty much interesting. So nasal spray is something which the management has been bullish on. Their approvals and also a 23% margins, that's something which you will be holding it up for. But apart from this R&D spending, let's go on to your other segments also. But before that, the US trade policy, that is something which has been a cause of concern for the pharma players. What would be your strategy or your hedge? Because that has surprised the broking houses as well, the way you have actually fought back when it comes to the US trade uncertainties, and what actually lies, what is your strategy?
Yeah, so if you've seen the US policy also from the discussions to now, it's kind of evolved. And if you look at generics, primarily have been put out in different trade deals which have been done. And in fact, President Trump categorically saying that, or in the recent press release saying that generics are out of this discussion. Even when they discussed about brands, I think there was one tweet and nothing followed beyond that. So we feel that it's the policy currently stable. And I think with that initial noise, I think things have panned out with the various trade deals which have been done. Going ahead, the kind of portfolio we have. So now coming to Rubicon specific, the kind of product portfolio we have, where we have a pretty significant percentage of specialty products which have no or very, very limited competition. I think we have a decent pricing power there. So if in case there are tariffs, we could pass it on to the customer. If you look at the other part of the portfolio also, so 33% of the gross profit, as you know, comes from specialty. But even for the rest of the portfolio, if we assume our competition is from Indian companies who are from the same geographical cost point, we today also have a good market share in these products, which depicts that we remain very, very competitive. So in case if there is tariffs, I don't think we'll be at a disadvantage to any other play. And if there is ability to pass it on, we'll definitely pass it on. But even if at a status quo, we would be able to keep it, we'll be able to keep a market share without any or very negligible impact of the tariffs.
So there is a negligible impact of tariffs coming in for Rubicon Research. But Parag, apart from nasal spray, oral solids, oral liquids and topicals, these are the three segments you are operating in. We just wanted to get the sense of what are the demand trends and the client confidence looking like?
So we don't, from a generics perspective, I think we don't look at only, we are very product specific. So we don't go, a topical or, what a injectable or what a oral solid looks like. We look at the product, we look at the competition scenario there, we look at what is the underlying patient trend there, and accordingly we invest in our research to ensure that our wasteful R&D is less than 5%. So if you look at, I think we've been very, very product specific. In our specialty part, we obviously focus on neurology in a big way. So in neurology, we are looking to solve for unmet patient needs, where I think there are lots of gaps in the current, medications, which we are trying to solve through innovations which allow patients to get the full benefit of the therapies they are taking. So that's, I think, how we look at it. We don't go primarily by just the dosage form.
I'm looking at your numbers. Your compliance record has been very strong. There was 10 US FDA inspections and at your manufacturing site, and there has been never an OAI classification. So right now, currently, of course, you cannot share the entire details, but in this quarter or something, has there been any inspections or something?
No, currently there have been no outstanding EIRs pending for us. So currently there have been no inspections.
All right. So that's the management coming in for this company, Rubicon Research. Thank you very much, Parag, for taking out your time and giving the views and the outlook ahead for Rubicon Research. But let's give a revision for what are the key takeaways from this conversation we had with the management of Rubicon Research. First and foremost is nasal spray base is getting faster approvals from the US FDA. Mind you, this is a high margin niche business and the company is having a significant revenue coming from this segment. Also, the second important thing, profit, the management has stated is doubling of portfolio every 2 years. The commercialization numbers are on the high side, 70 in June 2025, and the recent RHP numbers had stated. And lastly, they will be able to sustain 23% margins going ahead. They had a turnaround quarter in FY22, and after that they have been significantly going up, and Q2 numbers also suggest that numbers at 23% will be stable, and that's what the management has stated again. But let's give you the ratings, what we had actually given in an income statement. It was a positive coming in because of a solid show in the numbers. Balance sheet cash flow, net neutral coming in, and return ratio, significant up move coming in. Small time frame, that's why shareholding street trade valuation have been given neutral parameters. And lastly, the outlook that has been on the strong side. So net we have given a total of 5.5 out of it, and historically speaking, KYC rating, this is on the higher side when it comes to Rubicon Research. So we have given you an entire setup of what actually it means in the KYC segment for Rubicon Research and why broking houses like Motilal Oswal are bullish on this counter. Well, that's all for KYC today. Stay tuned to NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Benchmarks kick off the week on strong footing amid US-India deal optimism. Nifty holds above 26,000 levels. IT Bank lead the gains. Defence Realty on the back foot today. Government notifies implementation of 4 labour codes to streamline the existing labour laws. These codes ensure better wages, safety, social security, and enhanced welfare for India's workforce. Rupee recovers after Friday's low after RBI stepped in aggressively to slow pressure, slipped past a key psychological level last week. Justice Surya Kant takes oath as the 53rd Chief Justice of India, marks the start of his 15-month tenure at the helm of judiciary. Indian Navy commissions a silent hunter anti-submarine vessel INS Mahe designed for high-tempo ASW missions, coastal patrol, and also underwater surveillance. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and take a look at the markets. It started on a good footing, but remember that this particular week is likely to be volatile, and therefore Nifty 50 at the current moment flattish in trade, but still holding up on that 26,000 levels. When we look at the sectoral play, the banks are on the divergent mode, but IT is the one which is shining because of the kind of depreciation that the rupee has seen. That will have a direct impact on the performance of the IT sector as well. So that is the shining star in trade. But remember that this week is the expiry week, and also MSCI rejig, which kicks in today, and those two are going to have an impact on the market and therefore the volatility aspect in the market as well. Now we are talking about one important company, which is Kotak Mahindra Bank, and the large deal on which has been a buzz that Kotak Mahindra Bank could be the front runner when it comes to the IDBI share sale, which is being done by the government as well as LIC. Let's take stock of this and how will it really pan out. And also remember, Kotak Mahindra Bank, with its 40th anniversary of the foundation, has also called for a stock split. Aditya Shah, who's the founder of Hercules Advisors, joins us now. Aditya, always a pleasure speaking to you on NDTV Profit. My first question to you today, how do you see the move in Kotak Mahindra Bank, and especially after the announcement of the stock split?
So the stock split has a mental impact, but the bigger news is that Kotak is the leading front runner to acquire IDBI Bank. From my perspective, IDBI Bank comes with a liability franchise of 3 lakh crores. The government has spent a lot of time cleaning up the books, and from a peak NPA of about 27%, the NPAs have fallen to about 2% with a 99% capital adequacy ratio. So from my perspective, IDBI is a good candidate for takeover. Kotak, with its strong capital, will do a cash plus equity swap deal, and it will be beneficial for Kotak as it will expand nearly about 50 to 60% of its current AUM base. So from my perspective, positive for Kotak. We need to see how the deal details come in, but from my perspective, this is really very good for.
All right. So when you say, Aditya, that it is really very good, IDBI Bank, being a legacy bank, has a lot of wholesale book. And how do you see that really affecting the Kotak's overall book and therefore having an impact on the performance, and also the time that will be taken for really syncing and merging this particular company as large as IDBI Bank?
Kotak has a history of acquisitions. Kotak did acquire ING Bazaar, and it took about 2 to 3 years for them to integrate that into their own books. As a result of the bigger wholesale book, the margins for Kotak will dive down over a shorter period of time, and then it will move on. But from my perspective, if I look at it, Kotak is not really buying IDBI for its assets. Kotak is really buying IDBI for its reach and its liability franchise, which is the deposit franchise that IDBI has really got. A 3 lakh crore of deposit, which Kotak already has a 3 lakh crore base, and on top of it, 3 lakh crore of deposit will then mean that it nearly doubles the size of Kotak Bank. So from my perspective, yes, in the shorter term, on the advances side, there will be a erosion in margins, and it will take time for the bank to stabilize the acquisition. But from a longer term perspective, if you are a 5 or 7 year shareholder of Kotak, it does really make sense to acquire this.
All right. So, Aditya, you enumerated the various synergistic benefits that Kotak could really get because of the merger of IDBI Bank. Now, 2 aspects in terms of the valuations. The way IDBI Bank's valuations have really reached over 100 rupees per share, over 1 lakh crore rupees of market capitalization. How will it, and if it will, impact the kind of ratio as well as per share dilution, where because there is a merger also involved with Kotak's stock split? Have you done that scenario and that valuation and the ratio scenario check as well, Aditya?
So it depends on how much cash Kotak is willing to give and how much of stock Kotak is willing to use. at 2 times price to book, which IDBI Bank is currently valued at. It is not a cheap acquisition. It will be an expensive acquisition. So from my perspective, it will not be an all-cash deal. Some part of it will go in cash, and some part of it will go in stock swap that Kotak will do with respect to its share. Also the acquisition amount percentage is only 60%. So if you look at about 1 lakh crore of market cap right now, you are looking at about 50-60,000 crore that Kotak will have to flush up. So I think nearly about 20 to 30% will be in cash, and most of it will be in a stock swap that Kotak will do with IDBI Bank.
All right.
From my perspective.
Right. So you mentioned that 20 to 30% could be in cash, and also the rest could be a merger. So essentially, it's an equity merger of IDBI Bank as well as Kotak Mahindra Bank, where remember that the government, Aditya, holds a large stake, and LIC and government together are selling their stake. And do you see a likely scenario where LIC will hold a large stake by way of this merger process as part of the merger?
So from my perspective, LIC will become a passive investor in Kotak Bank. Mind you, LIC already has investments in Kotak Bank. So what I think the government will sell majority of its stake, because government is in requirement of some money. LIC not so much. LIC has its own investment and own cash pool. So I think the government will cash out much of its stake. A small stake will remain with the government, but a major stake will remain with LIC, where LIC becomes a passive investor in the Kotak plus IDBI mega merger that way.
Right. So, Aditya, coming from a purely stock perspective then, with one important aspect of Kotak stock split, then second being the IDBI Bank merger, where a large part could be equity merger, a smaller portion would be the cash component. Putting all this together, and also remember that the merger takes its own time. So the time value spent also on that. Putting all that into perspective, what is the target of Kotak, stock price that you would really peg as part of this big merger if it were to happen?
I'll refrain from giving any stock price, but what I will do is, I will say this, once the merger goes through, there could be a little bit of rally in Kotak on the positive optimistic scenario. But in the near term, things will become a little bit difficult for the bank. And once Kotak gets on top of the merger problems are synced out, then the Kotak stock will take off from there. So from my perspective, near term, some bit of rally, but then a little bit of lull, and from there on, the stock price will move.
Right. So including the in-between period of merger and the lull time, in how much time do you see Kotak totally digesting this merger and then showing stock appreciation according to you?
Mind you, this is a very large acquisition that Kotak is really doing. ING Bazaar was a very small acquisition that they did. If they need to digest about 80 to 100% of their book, I think it will require a minimum of 2 to 3 years. We look at HDFC and HDFC Bank. It is taken about 2 years, and still HDFC and HDFC Bank have not completely come out of the merger problems that HDFC Bank is really facing. So from my perspective, it does take about 2 to 3 years minimum to iron out all the merger problems, and for Kotak to revert back to the older margins of about 4.5 to 5% that it currently lends at. So near term, 2 to 3 years will look difficult, but from there on, the stock price will continue to do well as the merger continues to have some synergies.
All right, Aditya, very, very valuable analysis on this large merger that could really take place. And the key highlight being that every such large merger takes 2 to 3 years to finally start showing that benefit. We have seen that in the past. So that's what the equity investors in Kotak Mahindra Bank must note. Thank you so much, Aditya, for joining us right here on NDTV Profit. All right, moving from this big bank merger that could be in the play, let's also talk about one sector which is really making headlines today. We are talking about the IT sector, and it is the top sectoral gainer, a bunch of tailwinds for the sector. In fact, our colleague Jasmeet joins in with more details on why the sector is rallying in trade as well as the brokerage view on the way forward. Tell us, Jasmeet.
Well, right, thank you for that. As rightly said, the sector is buzzing on the back of multiple fronts. Starting off with the brokerage view first, while the MOSL upgrades their overweight on overall IT sector from the underway, well, that's a positive move. Secondly, if you look at the overall rupee weakness depreciating is also acting as a tailwind for the companies, as on the back of the same tailwind they had beaten the Q2 estimates. So that's creating overall positive sentiments in the market. While thirdly, the Gen AI service to start ramping up soon is something which we will be again focusing and watching out for. While on the fourth hand, we see that the overall valuation perspective, the IT stocks are running at a 5-year low valuation, which makes them very attractive in the current market space where Nifty is about to hit the lifetime high mark. While if you look at the last point, we see that the Nvidia's result recently, which was beat on the estimates, and overall AI sentiment in the market has been taken up by the outlook given by the Nvidia, again giving a positive momentum for the particular stock. Now, if you look at the brokerage MOSL on Indian strategy, what they say is they say that the IT constantly is maintaining the profit mark of 15% in the benchmark since last 4 years, but their index weightage has reduced from 19 to 10% in over, and it's lowest in last 10 decades. Well, that's something to watch out for. Lastly, also make a note that Infosys is a key beneficiary of the overall enterprise AI, and they are very strong on Infosys given they are placed really well where the risk-reward ratio becomes positive.
All right, Jasmeet, thanks so much for putting all that into perspective on what's really playing out in the tech titans for the day-to-day. But another important story that we are really tracking very closely today is the new labor rules that really affects all of us, and it shakes up the gig economy the most with fresh definitions, new contribution norms and early reactions now coming in from the companies as well as the analysts. In fact, our colleague Mahima joins in with the changes that are really going to impact the platform workers and also the wider ecosystem. Mahima, what is it that we need to keep on top of our mind when it comes to labor laws?
Right, so, as you rightly mentioned, Ministry of Labour has announced the implementation of labour codes, and this means that gig workers, platform work, aggregators, etc. has now been defined. So this basically means that aggregators are now required to contribute around 1 to 2% of their total turnover for the welfare of these gig workers, which is capped at overall 5%. Current Act will also, cover all the companies that use gig workers. What companies have said, where Eternal has come out and said that the new rules will not be detrimental to long-term health and sustainability of the business. Swiggy has also said that it does not anticipate any material impact on business sustainability, its cost structure or long-term financial performance. Now, Morgan Stanley, of course, did do a very nice analysis on the impact of this. They believe their implications for all platform companies such as food delivery, quick commerce and online services will have, but the impact will be around 4 to 10% of the EBITDA. Now, if you take a look at how this will fare, so this is the breakdown of revenue per order for Eternal, Swiggy as well as something like an urban company, broken down into food delivery as well as quick commerce. The contribution of 1 to 2% minimum welfare could range anywhere between 0.95 to almost 8.8 rupees, highest seen in quick commerce for Eternal. Going forward, now if you look at the contribution, that will be maximum, that 5% could range anywhere between 2.4 to almost 47 rupees for something like an urban company. This is the minimum contribution that we already talked about. So overall, the range of EBITDA impact on all of these three companies could be anywhere between that 4 to almost 10% mark for something like an urban company. But we'll have to wait and watch out for, because how companies will play with this. Ideally, what brokerages are suggesting right now, that most of this will be passed on to the consumer, but it might happen in a phased manner. So we'll have to wait and watch out for as to how this happens and how this entire cost is being absorbed and distributed between different stakeholders. So this is the overall view as to what this new labor code means for all of these companies that hire gig workers.
Thank you so much, Mahima, for all those details. And of course, how much can be passed on to the consumers really depends on the way the market can really absorb, especially with the competitive intensity, especially in these digital platforms that we are seeing. So a lot needs to be seen there. Another important development today, the MSCI November review is out with the key additions and deletions that could really trigger meaningful index flows for the Indian equities. In fact, 4 stocks are set to enter the standard index and 2 will exit. In fact, our colleague Somit is right here with a look at all the rejig and how it's going to impact. Tell us, Somit.
If you look at the MSCI review, the flows regarding this MSCI review is expected to happen today in the last half an hour of trade. The names of the stocks that are getting included or excluded are already known, but it's the flows that one should be keeping an eye out for. The net inflow is expected to be around $200 million, and most likely this will happen in the last half an hour. 4 stocks are getting added, 2 stocks are getting out of the MSCI Standard Index. When it comes to stocks that are getting added, Fortis, GE Vernova, Paytm and Siemens Energy, and the stocks that are moving out is Container Corp and Tata Elxsi. Now comes the most important part, that is the flows. Obviously, the India's weightage in the index will increase to 15.6%, and this adjustment will be happening today in the last half an hour. If you look at the stocks and the inflows, Fortis Healthcare could see an inflow of anywhere between 436 to 470. Paytm could see an inflow of close to 420 to 460 million US dollars. GE Vernova anywhere between 350 to 380, and Siemens Energy nearly 250 to 270 million US dollars. But the most important part here is the flow. Now, if you look at the volume, this flow is nearly 10 to 19 times the 20-day moving average. A strong volume action could be seen in all these 4 counters. On the flip side, there is Container Corp, which is moving out, our outflows of close to 150 million US dollars, and Tata Elxsi could see an outflow of anywhere between 160 to 175 million US dollars, and this is nearly 12 to 23 times the 20-day moving average. A strong volume action also expected in stocks like Tata Elxsi and Container Corp in trade. And obviously Indigo, which has come in over the weekend, that stock is getting included in the Sensex, and because of which there could be a passive inflow of anywhere between 300 to 315 million US dollars.
All right. Thank you so much, Somit, for all those details. In fact, MSCI rejig is also one of the reasons why there will be some volatility in the market in those particular stocks. Now, Justice Suryakant was sworn in as the 53rd Chief Justice of India, beginning a nearly 15-month tenure at the helm of the judiciary of the country. In fact, born in a small village in Haryana, his elevation has sparked pride as well as celebration amongst the locals, as NDTV captures the remarkable journey of a farmer's son rising to the nation's highest judicial office.
यहाँ एक गांव, हरियाणा का एक गांव है, वो नई दिल्ली लुटियन जोन में एक सुप्रीम कोर्ट ऑफ इंडिया है। सुप्रीम कोर्ट ऑफ इंडिया में एक CJI है, चीफ जस्टिस ऑफ इंडिया। कभी सोचा था कि यहाँ से निकलकर यहाँ के गलियों, गांव की गलियों से घूमते हुए, खेतों से गुजरते हुए, फसल काटते हुए एक दिन आप CJI बन जाएंगे?
नहीं, निश्चित तौर पर नहीं सोचा था। उस वक्त तो ये भी नहीं पता था कि जुडिशरी क्या होती है और उसमें जज की क्या भूमिका होती है। संघर्ष का दौर था, हर गांव के बच्चे के लिए था, तो मेरे लिए भी था। मैं कोई उसमें अपवाद नहीं था। गांव के बच्चे बहुत मेहनत से पढ़ते थे और उनमें से कुछ बच्चे जो है वो कामयाब होते थे। आमतौर पर गांव में हर एक के परिवार की ये जिज्ञासा होती थी कि आपने अगर मैट्रिकुलेट कर लिया है तो आप नौकरी का प्रयास कीजिए, और आप गलती से कॉलेज में चले गए हैं तो कॉलेज के बाद तो कुछ और करने का मतलब ही नहीं है, आप नौकरी के लिए ज़रूर प्रयास कीजिए। तो ये ऐसा ही एक जिसको बोलेंगे एक ऐसी स्थिति मेरे सामने भी आई, पर मैं मेरे माताजी पिताजी को इस बात का पूरा श्रेय दूंगा कि जब मैंने ये अभिव्यक्त किया कि मैं आगे पढ़ाई करना चाहता हूँ तो उन्होंने मेरी बात को माना।
फिलहाल तो सुप्रीम कोर्ट में की बात करें तो वहाँ तो लोग सेटिस्फाई है नहीं। किसी बात पे एक पक्ष कभी कुछ कहता है सुप्रीम कोर्ट ने कर दिया, फिर दूसरा सोशल मीडिया पे ट्रोलिंग शुरू हो जाती है। ऐसे लोगों को कैसे सेटिस्फाई करेगा सुप्रीम कोर्ट?
देखिए, जुडिशरी का काम कोई पॉपुलरिटी गेन करना नहीं है। हाँ, एक तो जुडिशरी को ये बेसिक प्रिंसिपल समझना चाहिए। हमारा जॉब ये है कि हम जब भी फैसला करेंगे तो एक पार्टी के हक में होगा तो दूसरी पार्टी के विरुद्ध फैसला जाएगा। तो स्वाभाविक है कि एक पार्टी तो हमसे नाराज होगी ही होगी। ऐसे में जज को इस बात का कोई स्ट्रेस लेने की आवश्यकता नहीं है कि जी कोई लोग मेरे से नाराज़ हैं और वो सोशल मीडिया का मान लीजिए दुरुपयोग भी कर रहे हैं। ये उसको उनकी नीति पे छोड़ देना चाहिए। जज को निर्भय रूप से बिल्कुल एक इम्पार्शल और एब्सोल्युटली टू द लॉ अपना डिसीजन देना चाहिए। उसके बाद उसको कंप्लीट सेंस ऑफ डिटैचमेंट होनी चाहिए कि मैंने जो मेरी ड्यूटी थी संविधान के अनुसार मैंने उसको पूरा किया है।
All right, important flashes on your screen, and the stock right now that we need to focus on is Hindustan Aeronautics Limited, HAL, which clarifies on the Tejas crash in the Dubai Air Show. The company says that it's an isolated occurrence and that the company is supporting and cooperating with the investigative agencies on this particular matter. And it also clarifies that this particular incident of Tejas Air crash in Dubai Air Show is not going to have any significant impact on its business operations or the financial performance of the company. Remember that after the Tejas crash in Dubai Air Show, the stock today has been under pressure, over 3% down in trade. And this is an important incident, remember, which occurred at Dubai Air Show. And that's the very those were the shots of Tejas aircraft being crashed on in Dubai Air Show. And also remember, our heart goes out to the pilot who was manning that particular Tejas aircraft. But HAL coming out with clarification, calling it an occurrence which is exceptional and not having an impact on the overall performance as well as the business operation. So there you go. HAL stock has taken a beating. It has also dragged the rest of the defense pack as the sentiment has worsened when it comes to this particular incident regarding the defense stocks in trade today. So there you go, a sea of red on that particular space. All right, moving on then, the Indian Navy has scripted another milestone in its indigenous shipbuilding journey with the commissioning of Mahi at the Naval Dockyard, Mumbai. Now, the commissioning of Mahi marks the arrival of the new generation of indigenous shallow water combatants and sleek, swift and resolutely Indian. Built by Cochin Shipyard Limited, Kochi Mahi represents the cutting edge of India's Atmanirbhar Bharat initiative in naval ship design and also construction. NDTV's Saurav Gupta brings us this report.
A major milestone in India's indigenous shipbuilding story with the commissioning of INS Mahe, which is an anti-submarine warfare shallow water craft. This ship has achieved a big goal, which is, of course, Atmanirbharta or self-reliance in shipbuilding, with 80% of its components being indigenous. Commissioning of INS Mahe adds detail, adds precision, and also adds capability to the Indian Navy's operational readiness when it comes to anti-submarine warfare. And that's something that's going to be key in the future, given the military posture that the Navy will have to take over the existing threats in the region. But joining me now is, of course, the commanding officer of INS Mahe, Commander AC Chaube. Sir, I'd like to ask you firstly, when you board this ship and you get a feel of the indigenous sort of manufacturing around it, and then you see the capabilities that come with it. Now, those capabilities built indigenously must be something that also is a matter of immense pride, not just to command the ship, but also to see how India's shipbuilding story has emerged.
So as you brought out correctly, it swells our hearts and soul with pride when we are here, which is a ship which has been indigenized, built with 80% component which is fully here, which is indigenized. The weapons and sensors which are fitted on board ship are indigenized. The capability of our DPSUs and our other partners, civil partners which are there in developing a ship of this caliber and capability is commendable. So the Make in India initiative and Atmanirbhar Bharat is we can depict this thing with this ship.
The advanced weaponry of this ship has also indigenous, and of course that's something that we'll talk about. Now, when it comes to an anti-submarine warship, torpedoes are key. And of course, so if you can tell us a little bit about the weaponry of this ship, which includes, of course, the main component, which is torpedoes, and the level of indigenization and how, of course, it adds to the capabilities of the ship.
Yeah, as I've already told, the ship has been designed with 80% components of Make in India. This is one of the most important component of the ship, which is used to seek and destroy the submarine. These are the tubes, triple tube launchers built by Mahindra Defence. There are total 2 launchers, one is shipped on the left and the right side of the ship, which we call as port and starboard. And it includes 3 launchers in each section.
6 torpedoes.
Correct.
Right, with that, completely out of time on markets at 12. Keep it with NDTV Profit. Thanks so much.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
welcome. You're watching Profit Buzzers right here on NDTV Profit. My name is Puneet Zaveri. With me is Anushi Vakharia. And over the next hour or so, we'll try and get you all the key stocks, all the key stories that are buzzing in trade today. Also get you perspective from our guests as well on what you should do with those particular stocks and stories. But before we move on and start addressing them, let's quickly look at how the markets are doing, because it's been another day of very, very interesting session to say the least. We were in the green for quite a bit of the trading session, but have given up almost all of those gains in the last hour or so. Currently under pressure to say the least. We are still maintaining the 26,000 mark, but away from the day's high of almost 26,150 to say the least. So it will be something that we'll continue to monitor in the next 3 hours of the trading session. But let's quickly look at the heat map as well for the Nifty. We mentioned in the morning, and I mentioned the FNO setup, that autos will be something that we'll be watching out for. Something like an Aisha, while buzzing in trade today, is also supported by the IT majors, as well as something like a Bajaj Auto in the top 5 gainers. Tech Mahindra are currently leading the way. Post the company Mahindra and Mahindra holding the investor day, may be some confidence coming in for meeting their guidance for FY27 in terms of EBIT as well as growth. It was something that was under contention by the market, but maybe there is some more belief post that investor day. Reliance, JSW Steel, Coal India are the top losers for today, but quickly look at the advanced decline ratio before Anushi takes it forward with the broader market check. You can see that post today's trading session, where both the advance and decline came very close and neck and neck. Post that, we've seen a clear pattern by the declines actually now over 1,700 to almost 660 advances as well. But mid caps and small caps, Anushi, have been the focal point for the markets. They were down in last week's trading session as well, and today as well. That's been the other key point of contention for the markets.
Yeah, exactly. The weakness has been holding up in terms of where the small cap and the mid cap indices are. In fact, if you just look at the current levels, about 0.16% is the kind of downtick that we are seeing with mid cap 150, while for small cap 250, the cuts are even deeper, about 0.6% of a decline. This was the case scenario that we had seen playing out in the previous trading session as well. A couple of stocks that are on radar in this front, if you just pull up the BSE 500, something like DCM Shriram, even in Friday's session, it was correcting. It's down about another 5% in today's session is what we are looking at. Apart from that, stocks like Electra, Usha Mart are seeing cuts of over 4% as well. What's also not working out is HAL. We'll be discussing about that also in greater detail on what's happening. But while what's working out so well is Team Lease. Now that's up over 10%, and this is on the back of the new labor rules that are in effect. So that's a positive that we are seeing. Along with that, even ITI, Polymedicure, they are up over 6% in trade today. So it's a mixed picture in terms of how the benchmark and the broader markets are doing. But with that, let me also welcome in for guest of today, Raghavendra Kedia, founder of Prosperity Advisors, joining us on the show to help us with all the stock-related perspective that we have. First of all, Mr. Kedia, just want to get a market perspective overall with this mid pace, if we are looking at that, continues to remain under pressure versus the benchmark indices. Just want to understand your perspective on the same.
Good afternoon, Anushri. Broadly, we believe that a lot of positives have been factored in terms of the RBI rate cuts and the GST cuts across in the last few months. And even the Bihar elections results have been augured well for the stability of the central government regime. So a lot of positives have already can be seen in the Nifty prices, especially in the bank Nifty. So broadly, we believe that market would continue in a range-bound fashion, where a seesaw movement would continue in the weeks ahead. 26,400, which is like 2% upside from current levels, and 25,500, which is around 3-4% downside from current levels, would actually be strong supports and resistances. So a range-bound movement. So it's a buy on dips and sell on rise in a way, but significantly, if we believe that the leadership would continue to be from the banking sector, and we are overweight in public sector banks versus private sector banks, and still adding up the overall banking and NBFC space, we believe that a small bullish undercurrent would continue in the banking space, and market-wise, it's a range-bound movement to continue.
Okay, so that's with regards to the overall markets that we are seeing. But coming to the defense pack in general, now this is the top lookout of the day. We are seeing cuts of over 2% for just the defense pack itself, and one such counter in particular which is facing maximum of this pressure is something like a Hindustan Aeronautics. Now what has happened here is that just 2 days ago, the company had reported that there was a fatal crash involving its light combat aircraft Tejas 1 that we are seeing at the Dubai Air Show. IAF also confirmed about this incident which had took place, and along with that, they also declared a death of the pilot, which was a very unfortunate news that we are looking at. But the reasons, or rather the reasons as to what could be the potential was not given, but HAL just came out with a clarification on this, saying that this incident during a aerial display at the Dubai Air Show is an isolated occurrence, and this incident is rising out of exceptional circumstances which are there. However, they do not see any impact in terms of where the operations or the financial performance. Along with that, even the future deliveries are concerned. But CLSA, they came out with a note on the same, wherein they've maintained a buy call on the company with a target price of around 5,400. So it's a huge upside if you take the current market price in account that we are seeing. They've given 3 possible scenarios as to what could have led to this fatal crash that we are looking at. Firstly, it's the sudden loss of thrust from the GE engines that we are seeing in picture. Along with that, there would be some effect related to aerodynamic. Shall also be induced during a negative G maneuver or a human error which would have resulted in this. Do note that if you take the current order book in picture, 44% of it is from this 180 aircraft, which are Tejas aircraft orders which are in picture. So deliveries and about the GE engine supply is something that is critical to watch out for the business. But Raghavendra, let me come to you on something like a HAL and about this incident which has taken place. What do you make of this incident which is there?
So this incident is definitely very unfortunate, and we'll actually have full condolences on that. Now, specific to the price correction and the prospects of Hindustan Aeronautics from current levels, we believe that the company is on a very steady path. If you see the quarter-on-quarter performance, the revenues have been up by 11%. The PAT, profit after tax, has been up by 10%. It has been a wealth creator in the last 5 years in terms of ROE, ROCE. So that would continue. We believe for Hindustan Aeronautics HAL, full year EPS, earning per share of around 130 rupees is possible. And we give a moderate P multiple of around 40-41 times. So on a full year EPS of 130, P multiple of 41, we're getting a price target of 5,400. So another 17 to 18% upside, and current levels in HAL is highly possible for a 12-month investment horizon. Specific to the Tejas crash, we believe that there are a lot of different products also of the company in terms of Dhruv helicopters being exported to Philippines, the Prachand helicopters being sold to the IAF. So beyond Tejas also, the order book is very healthy. Tejas definitely is in a process of improvisation, and that actually, if we get multiple orders across export orders for HAL, that could be a game changer. But until then, HAL would can be looked upon as a core portfolio stock with a price target of 5,400, 18% upside, 1 year investment horizon.
Got the views. That's Raghavendra's view on HAL. He's seeing an 18% upside, but also multiple positive triggers apart from Tejas amongst others. But let's quickly look at something like a Bata. Look at the 1 year chart as well, and you will see that it's not done very well for its investors over this particular time frame. Ever since the pandemic, the business model of the company has kind of gone through the roof in terms of school. The concentration of revenue from that segment, from the schooling segment, was quite a bit. But the footwear giant has now missed its top line estimates for almost 16 straight quarters, with growth slipping, competition is also rising, and the profitability has continued to be trending lower. What exactly is pinching Bata right now? And why is there a serious gap versus its peers, is what Mahima is now joining in to give us perspective on all of that and a lot more. Mahima, take it away.
Right, so, like you mentioned, 16 quarters of straightly, missing estimates. Now, this is, of course, the data as per Bloomberg, as per what Street was estimating versus what they've come out with in terms of their top-line growth. 9 quarters of top-line growth below the 3 to 4% mark, plus the peers for something like a Campus, Activewear or Relaxo have done exceedingly well as compared to how top-line growth for Bata has been. ROC has also been on a declining trend. Now, if we take a look at the past 16 quarters as to how the revenue growth for the company has been versus the estimates in terms of misses, this quarter, of course, there was a GST impact, but a 7% miss versus what the Street was expecting. So the range of this missing of estimates in the past 16 quarters has been in that, 0 to almost 7%, which has been seen in this quarter, as well as in quarter 2 FY24 and quarter 1 FY24 as well. Now, why is this miss in terms of where revenue stands? Of course, this quarter being GST, driving a major force there. But overall, if we take a look at how Bata has done in the past 16 odd quarters, they're making a lot of changes in terms of where their products are concerned, making a lot of changes in terms of their offerings, making a lot of changes in terms of their stores as well. But competition has been heating up in this space, be it the organized space or the unorganized space, plus in terms of new generation that's preferring more newer designs. And I think that overall what analysts believe is that Bata is not being able to cater to that. Collection in store is also not attractive as per where the competition stands right now, and online sales for them has been a concern which has not been picking up. In terms of how it is done versus its peers, 9 quarters of top line growth, but less than 4%, and growth is much lower than peers. Let's take a look at that as well, because overall, if you take a look at how peers have done, Quarter 2, Bata saw growth of just around 4% versus that of 16% for campus wear and metro at around 11% mark. So, and in the past quarters also, if we see, all of these counters, that is campus as well as metro and even Relaxo for that matter, have grown in double digits versus Bata seeing degrowth for the past 4 quarters straight, just Quarter 2 being in that positive front. And overall, earlier also, if you take a look at how these peers have done, even during a phase where they were seeing a slowdown in terms of demand, the peers have outperformed Bata, and Bata has not been able to give top line growth even near to that 3 to 4% mark. Lastly, in terms of where the overall, and of course, what are the peers doing different? One, they're catering to the Gen Z now, they're catering to newer designs, newer format of stores as well, and plus there's also online sales which is picked up for something like a Metro Brands, which has not been the case for Bata. In terms of ROC, the last one, it's been on a declining trend from a 20% in March 23 to 19% to now 15% in March 25, and we'll have to see, because a lot of changes they've been doing in the stores as well as to how this pans out going forward. So this is the overall view. And lastly, in terms of where the Bloomberg estimate stands, because right now you have just 1 buy call on Bata, 6 hold calls and 13 sell calls with 0 return potential. So even analysts are not very bullish right now when it comes to Bata.
Well, thanks so much for that, Mahima, getting us a comprehensive analysis of what's not working for Bata at this particular point of time. And Raghvendra, let me come to you. Post earnings of Quarter 2, we have been putting focus on a lot of stocks, and Bata is one of them today. What would you recommend for someone who's already holding the shares? And we have seen larger outperformance by players like Campus as well, because while it has done better than Bata, it's not been able to outperform, and that's visible in the share price as well. Would you recommend? What would you recommend for someone who's already holding Bata right now, as well as your view on the space? Is something like a Metro Brands a much better play? Given premiumization amongst others which are working for the counter?
So, Puneet, broadly, if someone is holding the share, actually we can look at exiting this counter. 10 quarters of consecutive decimal performance, unless the stock shows some poise in terms of revenues going up, margins going up, profitability going up, it's an avoid, and it can be actually looked upon as an exit as well from current levels. What changes they have made in terms of their inventory, in terms of their product rearranging, but we guess it is too little and too late, where the online sales have picked up for a lot of brands. Their presence in sportswear has been fairly low versus competition. where like a Skechers or an Under Armour have actually done very well, or even campus footwear. Even in the trendy space where Crocs from Metro has picked up very well, Bata has lost its market share significantly. So we don't see any significant game changer product launches in the next few weeks or quarters. Unless that happens, it's an avoid. Broadly in this space, we do continue to like Metro brands currently priced at 11-20 levels, but Bata, someone is holding, can exit. For anyone looking at fresh buys, wait until 2 quarters of positive performance comes from Bata. Till then, it's an avoid. Broadly, Metro brand continues to be a top pick in this overall footwear space.
Okay, so a strong avoid for Bata is what we are seeing, and in place you can watch out for something like a Metro brand. So that's on the retail side that we are looking at. But coming to the capital goods, or rather the infra space as well, there have been a couple of order wins which are in focus, and because of which some of these stocks are buzzing as well. We'll start off with something like a HG Infra, which is in focus, along with something like a Kalpataru Projects International as well. They've declared an order win of around 1,400 crore, and this, in fact, they've emerged as a lowest bidder for this order by Maharashtra Metro Rail Corp. This is for design and construction of elevated metro viaduct of about 21 kilometers is what we are seeing, with the execution period being around 3 years. Do note that HG Infra will have a 40% of share of this 1,400 crore that we are seeing, while Kalpataru Projects will have about 60% share. So that's on the positive that we are seeing for both of these companies. Only HG Infra is seeing about mild gains at the current levels, while Kalpataru Projects is down about 2%. While if you talk about something like a CG Power now, Chitranjan Locomotive have cancelled their orders, which was awarded towards ARM GG Tronics, and this was awarded in November 2024, which was works related to cover systems is what we are seeing. It's seeing a correction of over 3% in trade right now. Do note that the order size also was roughly estimated to be between 500 crore to 600 crore as well. So some bit of an impact for CG Power is what we are seeing. Now what's working out so well on the street is something like a NBCC, and this is on the back of a 72 crore of an order that they've received from 2 different entities. Order book, if you just take off that, it's a minuscule order in comparison, considering that they have an order book of around 1.28 lakh crore. They've not given the execution timelines of this, but the stock is buzzing. It's up over 4% in trade. Coming to RVNL now, they've emerged as the lowest bidder for a 181 crore of a project in Lucknow, and the order execution period for this is about 2 years. If we take the last order book in check, that stood at about 90,000 crore as such. And the last one, and the big, or rather a significant order that we are seeing, is from Dilip Buildcon. They've announced that they've emerged as a lowest bidder for a NALCO contract worth about 5,000 crore. But do check the timeline for this. It's a 25-year plus of an order that we are looking at, with the first 3 years being an EPC related works, while the balance, that's the 22 years, would be for mining related works is what we are seeing. Order book for this is 18,610 crores. The company in its previous con call stated that it maintains its FY25 guidance despite the overall NHAI ordering activity remaining muted. Raghavendra, let me come to you on a couple of these counters. Just want to understand your topic from this. That's HG Infra, CG Power, NBCC, RVNL, or Dilip Buildcon, because a lot of these companies that we are seeing, one key aspect is the execution part of it. Despite the large order book that they currently have, some of these have relatively slower execution, which has impacted their top line, is what we are looking at.
So, Anushri, in the last 2 quarters, the order wins have been pretty muted across the large cap names across HG Infra, Larsen & Toubro, and similar companies. And we believe that this plateau could continue for another quarter or so. But specifically, what we do like from this engineering construction space is HG Infra, considering a very healthy promoter holding, which comforts us in terms of a longer term investment horizon. HG Infra has different business verticals where they are present across HM, hybrid annuity model, EPC, engineering, procurement and construction, and BOT, the build, operate and transfer model. So they have pretty much in all business verticals. Earlier, it was majorly present in the states of Rajasthan and Madhya Pradesh, but now HG Infra has its presence for road projects across pan-India. Broadly, you can say that. So the stock has significantly corrected considering the slowdown from the order wins, but that has been a more sectoral effect rather than a company effect. So HG Infra at levels of around 870, 880 with a very healthy promoter holding, different business verticals, continue to be a top pick in the entire engineering road construction space. With Mr. Nitin Gadkari as the road development minister, we believe that slowly this sector can again come back in the green, and with the very healthy order book forecast, HG Infra would actually give a 20 to 25% annualized return for the next 3 years. So it's a long-term core investment portfolio stock. We look at HG Infra from current levels of 870.
Well, that's Raghuvendra's pick, HG Infra. It's a key stock which has actually seen over a 30% correction. Maybe a lot of run-up going into sometime last year at the end of September and October, and then seeing a steep correction. So the 52-week high for the stock is almost 1,559. Raghavendra feels it's a good time to look at this particular counter, down 42% in the last 1 year, and you see that a lot of investors just buy into the counter at that time, but it's an interesting one to say the least. But let's pull up something like a team lease, and we are putting focus on the new labor rules which are shaping up the gig economy. Stocks up 9.5%, and we'll get to that in just a bit. But with a fresh definition, new contribution norms and early reactions now coming in from companies as well as analysts. Now Mahima is now joining in back again with what are these particular changes for the labor reforms for platform companies like Swiggy and Zomato amongst others, as well as for the workers and the wider ecosystem. Mahima, over to you.
Ministry of Labour has announced the implementation of labour codes, and this means that gig workers, platform work, aggregators, etc. has now been defined. So this basically means that aggregators are now required to contribute around 1 to 2% of their total turnover for the welfare of these gig workers, which is capped at overall 5%. Current Act will also cover all the companies that use gig workers. What companies have said, where Eternal has come out and said that the new rules will not be detrimental to long-term health and sustainability of the business. Swiggy has also said that it does not anticipate any material impact on business sustainability, its cost structure, or long-term financial performance. Now, Morgan Stanley, of course, did do a very nice analysis on the impact of this. They believe there are implications for all platform companies such as food delivery, quick commerce, and online services will have, but the impact will be around 4 to 10% of the EBITDA. Now, if you take a look at how this will fare, so this is the breakdown of revenue per order for Eternal, Swiggy, as well as something like an urban company, broken down into food delivery as well as quick commerce. The contribution of 1 to 2% minimum welfare could range anywhere between 0.95 to almost 8.8 rupees, highest seen in quick commerce for Eternal. Going forward, now if you look at the contribution, that will be maximum. That 5% could range, anywhere between 2.4 to almost 47 rupees for something like an urban company. This is the minimum contribution that we already talked about. So overall, the range of EBITDA impact on all of these three companies could be anywhere between that 4 to almost 10% mark for something like an urban company. But we'll have to wait and watch out for, because how companies will play with this. Ideally, what brokerages suggesting right now that most of this will be passed on to the consumer, but it might happen in a phased manner. So we'll have to wait and watch out for as to how this happens and how this entire cost is being absorbed and distributed between different stakeholders. So this is the overall view as to what this new labor code means for all of these companies that hire gig work.
Well, thanks for that, Mahima. But a couple of brokerages, Bank of America had actually written on these labor codes as well. What they mentioned that this could be a turning point for these policy reforms into another growth driver with a major step towards formalization as well as scale. They continue to look at this push forward towards organized jobs as well as expansion of social security will be a key benefit to all of these employees who are currently gig workers amongst others, and a strong medium-term tailwind will be for the financial inclusion as well. Something like a Citi also continue to maintain a positive view. They mentioned that social security for gig workers is a key positive for the whole ecosystem, and that the new laws impose a direct financial cost on platforms. So they are estimating that roughly about 30 to 50 basis points impact on quick commerce, food delivery companies like Swiggy as well as Zomato. But platform firms have steadily hiked the convenience fees with a little impact on their growth. So they are expecting that most of the cost increases will likely be passed on to potentially consumers like you and I. So that's largely on the labor codes as well. But apart from that, we will continue to monitor stocks like Swiggy and Eternal as well. Let's quickly pull up those, see how they are doing in trade today, because while the 20 to 50 basis point impact is seen, a lot of those counters are currently trading in the green. So you're not seeing so much of an impact. Urban Company, a recent listing, still not profitable, could possibly see that impact. What was interesting is that Urban Company actually was in the green when it started, while there was a negative impact on Eternal and Swiggy. That tide has now changed ways as well. But a similar story is a key positive for companies like TeamLease as well as Quest Corp. Let's look at how both of those counters are doing, because these hiring linked stocks are actually in focus because of these new labor codes as well, because this will trigger a new set of customers as well as companies coming to them for formalization of their employment, and hence could be a big benefit for someone like a TeamLease as well as someone like a Quest Corp as well. On TeamLease, you are already seeing that positive impact. But let me get my colleague Jasmeet to put all of this into context in terms of these hiring firms and what they mean, what it means for them. Jasmeet, over to you.
Well, right, thank you for that. As you rightly said, one labor law has two impacts, even one we can see on Swiggy and Zomato. But when it comes to hiring, companies like TeamLease and Quest Corp, they're already buzzing in trade today. Now, why is that happening is firstly, the labor law will push the informal jobs into a formal sector, make it more compliant to rules and regulations. And currently, the informal sector forms roughly 90% of the overall employment. We see a huge market coming in there for companies like TeamLease and Quest Corp as the hiring range will increase. If we look at the other perspective, now this will also increase demand to professional staff, where the companies will go to such companies to make them more compliant, as the laws are very stringent when it comes to the employee labor. Well, thirdly, there's a clear fixed term rules which will let company hire short-term workers safely. While increasing short-term worker will also increase the demand for the company. Again, the companies will go into hiring companies where they can hire those employees from those companies and form them under the legal laws. While lastly, we look at the overall compliance heavy and national uniformity of such companies where they're available throughout the nation, makes it very easier for companies to approach them and have the same law applied throughout the organization. So that's why the stocks are buzzing in trade today.
Jasmeet, in fact, TeamLease CFO Ramandati says nearly 90% of India's workforce is still in the unorganized ecosystem, and a gradual shift towards formal employment will meaningfully benefit workers. Let's listen into that as well.
Yeah, it's very difficult to kind of have an estimate on that. But just to give you a sense, right now, 90% of employment in the country are in unorganized sector. What I mean by unorganized is where they are not fully compliant with all applicable labor laws. So even out of this 90%, even if 20, 30, 40, 50% moves to organized players, be it TeamLease or even directly by the compliance, that's going to be a big driver on formalization, social security inclusion for large number of employment. And this is going to have a huge impact on overall productivity of the employees as well, not just formalization, because it's been clearly proven that where employees are in formal workforce receiving social security benefits, their productivity levels are also proven to be much higher. So coming to TeamLease, there are few sectors which we believe will start giving us additional business or going to have a positive impact. So one is again coming to gig and platform-based business, because so far we have stayed away from gig workers because we are not very much sure of what will be the social security impact of these category of workers. So that's the reason we stayed away. So now this sector, because there is almost close to 1 crore workers working under the gig category in the country. So that's going to be a huge addressable market for us. In addition to that, there are lots of other sectors where they are mostly using unorganized staff at entry-level jobs. That will also be a new market for us.
Well, that was the key, management on NDTV Profit exclusively, Ramanidati of TeamLease, and it's a key beneficiary of this labor code. Raghavendra, let me come to you very quickly. Someone who's not invested currently in TeamLease, because we are seeing minimal impact on the platform companies of a 20 to 50 basis point. Is this a multi-year opportunity to buy into something like a TeamLease or Quest Corp? Any preference that you have in this space?
Puneet, we do like both TeamLease and Quest Corp and believe that this could be a more longer-term benefiting law change, where, we have seen in the past when GST was launched, how organized sector benefited, when PRERA was launched, how the large cap, mid cap list
we seem to have lost that connection for Raghavendra, and we'll probably try and get him back for his view, because it's a very interesting one that he's mentioning, that he is preferring both those counters, even though something like a Team Lease continues to have that valuation premium to something like Quest Corp. Raghavendra, if I'm audible to you, please complete your point.
Yes. So Puneet, we believe that after GST and after RERA, a lot of organized.
We are losing him again. Probably we'll just get his view again on Team Lease, because counter almost up 10%. But what we'll do is we'll slip into a very short break. Be right back. Raghavendra will be us on the other side, get his view on Team Lease. Also put the focus on the IT players. The index is on fire today. What's working for them? A lot more on the other side. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope
Welcome back. Still tuned into Profit Buzzers on NDTV Profit. And tell you what, let's also take a very quick look at the markets. When you take a look at the list of sectoral gainers, you do have IT leading the pack, bank, PSU bank in good shape. What's not doing so well right now is a defense, realty, media, metal in terms of sectors. And we'll come to the entire picture when it comes to IT. Take a look at why the sector is buzzing, what brokerages are saying about it as well. But before we do that, let's try and get Raghavendra Kedia back on the line. Raghavendra, I'm very curious to hear out what you have to say when it comes to team Lease as well.
So broadly, we are upbeat with this new labor change reforms, and it could be actually great B2B business where the gig workers, which around 10 million workers are not in the foray and not been catered by Team Lease or companies like Quest Corp. They might come under the in terms of their order book, and a lot of institutions might come to them for a formalization of contracts with workers. Broadly, it's a positive approach. When RERA was formed, real estate companies gained. When GST was launched, a lot of plastic makers, product companies, chemical companies gained because it's benefiting the organized sector, which is largely the listed capital market space. So we believe that Quest Corp, Team Lease would benefit from it. Even companies who employ small workers, which would move into the formal payrolls, would actually do well in terms of tax efficiency, in terms of stability of employees, in terms of low churn of employees. So broadly, it's a very reformist move. The benefits would be far-fetched across many quarters, many years ahead. And Quest Corp and Team Lease on any dips should be taken as two benefiting stocks from this labor reform move. And we are upbeat about Team Lease. If levels of 1750, 1700 come, it becomes a high conviction buy as well.
And thank you so much for helping us out with that update there in terms of your view there. So far-fetched in terms of the move. This move is something that is likely to benefit a couple of counters. Quest Corp as well as Team Lease are the ones that make it to Raghavendra's list. But let's also, since we're talking about a list, let's also be talking about the IT space because that is the top sectoral gainer at this point in time. Jasmeet, in fact, is standing by in terms of the key triggers as well as what MOSL has to say. Jasmeet, first things first, let's take a look at the key triggers when it comes to this space.
Well, Ray, thank you for that. The IT is buzzing on the back of multiple fronts. Starting off with the first one, we see an MOSL note coming up where they have upgraded to overweight from an underweight, which is causing overall positive sentiments. Secondly, if you look at the overall valuation space, the IT is currently trading at a 5-year low valuation, and a lot of stocks are multi-year low valuations, also making it overall attractive space for the investors to dive in. If you look at the third aspect of this, rupee depreciation, which is overall causing the margin impact and helping IT company gain, as the rupee depreciation will help the company score higher top line on the back of most of the revenues based out of US. If you look at the last angle and why the IT is buzzing is on the back of positive NVIDIA results as they were beat in the Q3 results, and the outlook looks positive, which brings back the overall IT and AI positive sentiments back to the market. Now, if you look at the MOSL note on IT, what they've done is they've upgraded the stock from underweight to overweight with a preference given to Infosys. Now, what they say is IT has maintained a stagnant 15% profit in the overall Nifty 50 index in last 4 years. But on the other hand, when it comes to the IT weightage in the Nifty index is reduced from 90 to 10%, making it cheaper and attractive. While in terms of Infosys, they say that the risk and reward ratio is higher for the particular stock and they have maintained their buy on Infosys.
All right, then, so that's a buy recommendation coming in as far as Infosys is concerned. In terms of what MOSL then had to say, and it's IT that is in focus, in good shape, bunch of triggers that we're looking at. But tell you what, let's also take the conversation forward with Amit Bhuptani, who's the derivatives and technical research analyst at Nirmal Bang Securities, joining us this afternoon as well. Thank you so much for taking time out, Amit. And a very good afternoon to you. First things first, I wanted to get a quick chart check going when it comes to IT, which is the one counter that stands out to you.
Good afternoon. So overall, if you look at the overall IT space, the setup looks to be on the positive front. The IT index right now, which we are seeing, is currently on the verge of a breakout, and clearly on the upside, we are seeing that the resistance for this index is at 37,700 level, and about that 38,000, 3,200 will be the initial resistance zone for the IT space. So overall setup seems to be on the positive front, and we can expect more buying to be carried ahead while going forward. Selective counter that looks positive as per my scenario will be the Tech Mahindra. Tech Mahindra looks positive. The stock has given inverse and shoulder pattern breakout. With that, we are seeing that the monthly shifting and weekly shifting will also take place once the counter gives a closing about 3180 levels. Once the TCS goes about 3180 levels, then we can expect the counter to stretch towards the 3300 level to 3250 level. So currently TCS and Coforge seems to be the positive front as far the IT is concerned.
Well, TCS was also in focus because of the 18,000 crore investment that they're doing in the data center capacity along with TPG now. So that is another key trigger for the counter over the last couple of days. But let me get in Raghuvendra's view on something like a Lupin very quickly, because the Goa unit today has gotten 7 observations. Stocks down almost a couple of percentage points, and the facility was in focus because of the US business growth that was going to come from there. Raghavendra, any view that you have on Lupin specifically, because once it gets observation, it is quite difficult to navigate into that for the next few months. How do you see the stock based on this particular news flow?
So Puneet, considering the heavy dependence on US order book and these observations, as you very rightly said, once they come, it takes at least 2 to 4 quarters for them to actually get resolved. So we believe that at current levels of 2019-80, looping can be avoided. There would not be any fresh buying recommendation at current levels. If the stock corrects to levels of 1800, that can be reviewed again. But as of now, it's an avoid. These observations are not 1 or 2, but 6, 7. And usually takes 2 to 4 quarters for them to get resolved in a best case scenario. And there is a heavy dependence on US orders. So it's an avoid at current levels, considering this recent FDA observations.
Well, that's Raghuvendra's view currently on Smiggle Lupin. It's been giving mid-single digit returns over the last 6 months, but we have seen that the rupee actually has had an impact over the last couple of days on a bunch of stocks and spaces. Something like an IT currently trading 89.21. You did see the RBI coming in at the end of Friday to give some positive impetus by selling dollars, and that's what our banking editor Vishwanath has been highlighting since a couple of days. But largely when you focus on companies and sectors, there are a couple of them like IT, upstream oil and gas, as well as city gas distributors that always come in focus at the time of rupee depreciation. So it does make import costly as well as increase the cost of debt. But historically, rupees 1 to 3% depreciation versus the US dollar, the euro or the pound favors the IT companies positively, because this depreciation leads to higher margins for the company, which can be further used by them to increase their competitive intensity in the global world as well. That's one of the key impacts. When you look at the companies, something like an LTI, Mindtree, Wipro, Sagility, as well as Coforge continue to be in focus because of the higher exposure to the US dollar, euro and pound revenue coming in from all these overseas entities. But also keep in mind something like a Persistent, Indegene and Emphasis are the other key beneficiaries because of the higher exposure to the dollar as well as the US economy. The gas space though is not as simple because there are multiple key levers. There are mixed impacts amongst this, because while there is a positive impact on the upstream oil and gas companies, city gas distributors as well as oil marketing companies do bear the brunt in this particular time frame. When you look at the first one, which is of course the city gas distributors, you see a negative impact on them because brokerages largely estimate that a rupee change compared to the dollar in terms of depreciation impacts something like an enterprise gas EBITDA by almost 4.9 to 5%, while a similar impact is seen on MGL, Mahanagar Gas, by 2.6 to 2.8%. Pardon me. Gujarat Gas is the other one, 1.7 to 2% is what is seen. And when you look at the upstream oil companies like Oil India, someone like ONGC is also a key beneficiary in this particular aspect. And Oil India is slightly more sensitive to ONGC because at 1.4%, they do get a positive impact on the EBITDA margins, while that is 1.2 for oil and gas companies. Amit, let me come to you very quickly on this. In the short term, any of these names in the oil and gas space that someone could keep on their radar because of a rupee depreciation impact that could happen even further going forward?
If you look at the overall setup from the OMC space and the oil distribution space, we are seeing that from last 3 to 4 days of trading session, there is some sort of a supply being witnessed from the stock specific front, but still the support is not getting broken out in any of this counter. If you look at the IOC, oil, GAIL, BPCL, HPCL, all the counters are holding the support strongly. So we should wait for any new short position to get created at this point of time. We can expect some reversals in oil and HPCL at this point of time.
All right, then thank you so much for helping us out with that view coming in on Gujarat Gas as well. But let's move on. The MSCI November review is out, and you do have key additions and deletions that could trigger meaningful index flows for Indian equities. 4 stocks that are set to enter the standard index and 2 that are going to be exiting. In fact, Somit is joining in with that update there. Somit, what is the rejig looking like for this one?
If you look at the MSCI review, the flows regarding this MSCI review is expected to happen today in the last half an hour of trade. The names of the stocks that are getting included or excluded are already known, but it's the flows that one should be keeping an eye out for. The net inflow is expected to be around $200 million, and most likely this will happen in the last half an hour. 4 stocks are getting added, 2 stocks are getting out of the MSCI Standard Index. When it comes to stocks that are getting added, Fortis, GE Vernova, Paytm and Siemens Energy, and the stocks that are moving out is Container Corp and Tata Elxsi. Now comes the most important part, that is the flows. Obviously, the India's weightage in the index will increase to 15.6%, and this adjustment will be happening today in the last half an hour. If you look at the stocks and the inflows, Fortis Healthcare could see an inflow of anywhere between 436 to 470. Paytm could see an inflow of close to 420 to 460 million US dollars. GE Vernova anywhere between 350 to 380, and Siemens Energy nearly 250 to 270 million US dollars. But the most important part here is the flow. Now, if you look at the volume, this flow is nearly 10 to 19 times the 20-day moving average. A strong volume action could be seen in all these 4 counters. On the flip side, there is Container Corp, which is moving out, our outflows of close to 150 million US dollars, and Tata Elxsi could see an outflow of anywhere between 160 to 175 million US dollars, and this is nearly 12 to 23 times the 20-day moving average. A strong volume action also expected in stocks like Tata Elxsi and Container Corp in trade. And obviously Indigo, which has come in over the weekend, that stock is getting included in the Sensex, and because of which there could be a passive inflow of anywhere between 300 to 315 million US dollars.
All right, then thank you so much, Somit, for helping us out with that update. So this is something that we're watching out for. And in terms of the inclusions, one stock that is in focus is the Fortis Health. Raghavendra, I wanted to get a quick check going on what you think about this particular counter, because you do have that inclusion and you're looking at anywhere between 436 to 470 dollars in terms of the inflows. What are you making of this particular counter?
So Shreyanshi, we believe that this could be a positive move in the stock, and not only today, but in the days ahead and in the weeks ahead. The stock has slightly corrected to levels of around 930, and that's a good opportunity to buy. Even 1050, 1100 in the next 2 quarters is possible. The average volume expected today are around 20 times versus average daily volumes. That's a positive. The inflows are in the north of 300 million US dollars. That's a positive, and stock is at considerable cheaper valuations what it was 3 months, 6 months back. So that's a positive. So at 920, 930, Fortis Healthcare could be taken as a trading buy for a 7 to 10% upside in the next 3 to 6 months.
All right, then, so that's a positive. And speaking of positives, Raghavendra, let's also talk about Paytm, because even that one is a key inclusion when it comes to the MSCI rejig. What are you making of this counter as well?
So it could again be a trading positive move, but the magnitude of the upside in the next 1 month or 2 months, we believe it could be in the range of 4 to 6%, considering the average volume expected is 10 times, which is lesser versus the other 3 companies which are getting included. Also, the net inflow in terms of absolute value is slightly lesser versus the other 3 companies. Stock is slightly on charts or in valuation basis on the overbought premium valuations. So Paytm would augur well, but at levels of 1260, 1270, we expect more of a trading pop of around 4 to 6% in the next 1 to 2 months. And the other names would augur well on a relative basis versus Paytm.
All right, then, so that's the view coming in as far as Fortis Health as well as Paytm are concerned. So, Puneet, those are the couple of counters to look at in terms of the inclusions, Fortis Health as well as Paytm. There's a bunch of exclusions that we're looking at as well, a couple to say the least, Tata Elxsi and Container Corp that are in focus as well.
Well, most certainly, and they will continue to be that in the last half an hour trade. So watch out for any kind of positional impact that you might see on a bunch of these stocks. And Raghavendra has, of course, given his view as well. Let's pull up something like an IKS now. It's a counter that was in focus in the morning as well and continuing to do so on the back of a initiating coverage note coming in from Nomura. Stocks up almost 4% and they have a target price of 2,000 rupees per share. So they are offering some more upside from these current levels. Mentioning three key points is what Nomura is. The first one, of course, that they feel it's an attractive play on the US healthcare provider space and could be one of the key beneficiaries going forward. The outsourcing market is seeing a growth of 12% from the US between FY23 and 28, as well as mentioning that a comprehensive and integrated platform is what the company offers with its next-gen technology. So you could see that impact. They are expecting a 16% growth in revenue, a 32% growth in terms of EPS over FY25-28, and mentioned that the company's long-term clientele and maintaining those relationships is a key positive for the stock. On the charts, let's get in Amit's view also very quickly on something like an IKS. Any forward momentum as well, which matching with the fundamentals according to Nomura, Amit?
The current setup counter seems to be in the positive front, but stock is witnessing a strong resistance at 1660 level. So it need to get a clearance above that level on the closing basis. Because on the weekly and the monthly chart setup, if you look at the overall positioning wise, we are seeing that 1660 will act as the initial resistance zone for this counter. Above that, there will be a fresh breakout for the counter to move towards 1750, 1780 levels.
And so that's one counter to keep in mind. IKS Health is the one that we were looking at. On the back of that note coming in from Nomura, where they've initiated a buy. Thank you so much, Mr. Bhuptani, as well as Kedia, for joining us this afternoon and helping us out with that update coming in terms of all of those counters. So that's a quick check going on IT, the key triggers, and a bunch of those stocks that are in focus as well. But let's also move on to some news and updates. Justice Surya Kant was sworn in as the 53rd Chief Justice of the country, beginning a nearly 15-month tenure at the helm of judiciary. Born in a small village in Haryana, his elevation, in fact, has sparked pride and celebration among locals as NDTV captures the remarkable journey of a farmer's son rising to the nation's highest judicial office. Let's take a look at what he had to say.
यहाँ एक गांव, हरियाणा का एक गांव है, वो नई दिल्ली लुटियन जोन में एक सुप्रीम कोर्ट ऑफ इंडिया है। सुप्रीम कोर्ट ऑफ इंडिया में एक CJI है, चीफ जस्टिस ऑफ इंडिया। कभी सोचा था कि यहाँ से निकलकर यहाँ के गलियों, गांव की गलियों से घूमते हुए, खेतों से गुजरते हुए, फसल काटते हुए एक दिन आप CJI बन जाएंगे?
नहीं, निश्चित तौर पर नहीं सोचा था। उस वक्त तो ये भी नहीं पता था कि जुडिशरी क्या होती है और उसमें जज की क्या भूमिका होती है। संघर्ष का दौर था, हर गांव के बच्चे के लिए था, तो मेरे लिए भी था। मैं कोई उसमें अपवाद नहीं था। गांव के बच्चे बहुत मेहनत से पढ़ते थे और उनमें से कुछ बच्चे जो है वो कामयाब होते थे। आमतौर पर गांव में हर एक के परिवार की ये जिज्ञासा होती थी कि आपने अगर मैट्रिकुलेट कर लिया है तो आप नौकरी का प्रयास कीजिए, और आप गलती से कॉलेज में चले गए हैं तो कॉलेज के बाद तो कुछ और करने का मतलब ही नहीं है, आप नौकरी के लिए ज़रूर प्रयास कीजिए। तो ये ऐसा ही एक जिसको बोलेंगे एक ऐसी स्थिति मेरे सामने भी आई, पर मैं मेरे माताजी पिताजी को इस बात का पूरा श्रेय दूंगा कि जब मैंने ये अभिव्यक्त किया कि मैं आगे पढ़ाई करना चाहता हूँ तो उन्होंने मेरी बात को माना।
फिलहाल तो सुप्रीम कोर्ट में की बात करें तो वहाँ तो लोग सेटिस्फाई है नहीं। किसी बात पे एक पक्ष कभी कुछ कहता है सुप्रीम कोर्ट ने कर दिया, फिर दूसरा सोशल मीडिया पे ट्रोलिंग शुरू हो जाती है। ऐसे लोगों को कैसे सेटिस्फाई करेगा सुप्रीम कोर्ट?
देखिए, जुडिशरी का काम कोई पॉपुलरिटी गेन करना नहीं है। हाँ, एक तो जुडिशरी को ये बेसिक प्रिंसिपल समझना चाहिए। हमारा जॉब ये है कि हम जब भी फैसला करेंगे तो एक पार्टी के हक में होगा तो दूसरी पार्टी के विरुद्ध फैसला जाएगा। तो स्वाभाविक है कि एक पार्टी तो हमसे नाराज होगी ही होगी। ऐसे में जज को इस बात का कोई स्ट्रेस लेने की आवश्यकता नहीं है कि जी कोई लोग मेरे से नाराज हैं और वो सोशल मीडिया का मान लीजिए दुरुपयोग भी कर रहे हैं। ये उसको उनकी नीति पे छोड़ देना चाहिए। जज को निर्भय रूप से बिल्कुल एक इम्पार्शल और एब्सोल्युटली टू द लॉ अपना डिसीजन देना चाहिए। उसके बाद उसको कंप्लीट सेंस ऑफ डिटैचमेंट होनी चाहिए कि मैंने जो मेरी ड्यूटी थी वो पूरी संविधान के अनुसार मैंने उसको पूरा किया है।
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई।
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई।
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice.
afternoon. You're watching Small Cap Bazaars on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Anushi, if you look at the benchmark index, it has been oscillating under a very tight band, 26,050 to 26,150. And in that tight range, it has moved direction nearly 5 times. Nifty Bank and Nifty IT have been leading the gains, but the pain has been much more when it comes to the broader markets.
Yeah, absolutely. It's a mixed picture in terms of how you're dissecting the benchmark and the broader market indices. While for Nifty 50, we currently see about flattish moves in the last 1 hour. So it's mainly remained in this range-bound range that we are looking at. While for Nifty Bank is something which is holding up well relatively. It's up over 0.6% in trade currently. In fact, if you pull up the point contribution table also, right in the green, you'll see a lot of these banking names emerging. HDFC Bank right at the top. Along with that, ICICI Bank as well. Along with that, IT continues to remain in focus with Tech, Mahindra and TCS also seeing that positive contribution adding up to the Nifty gains that we are looking at. Relative to that, heavyweight like RIL is under pressure. Along with that, M&M, Bharat Electronics is also not doing particularly so well in today's trading session. In fact, if you take the sectoral picture in account, we are seeing a mixed image is what we are looking at. Currently, Nifty IT continues on a strong upward trajectory. This is also supported by the Motilal Oswal note, wherein now they're looking IT in a much deeper lens. The index currently up over 1.2%, while Nifty Defense, if we see, it's cuts of over more than 2% is what we are currently looking at that, and that's led by something like a HAL in which they reported a fatal crash, and there's some bit of that concerns regarding that front. Nifty Realty as well continues to remain under pressure, and this is something that we've reported in these last few sessions as well. If you take a check at the broader markets, however, mid cap 150 down about 0.1%, while small cap 250 deeper pain over here, 0.5% is a kind of a decline is what we are looking at. It's currently trading at the lowest point of the day as well. In fact, if you just take a check in terms of the top losers which are there in small cap 250, all cargo logistics, DCM Shriram emerged. So we are seeing cuts of over 5% for both of these counters. Chemplast also adding up to that. But what's doing relatively well is something like a ITI or Asahi India, as well as Poly Medicure, seeing gains of over 5 to 9% for all of these counters. In terms of other securities also which are in focus, it does include something like a VLS Finance on the back of its buyback announcement. 19% is the kind of up move that we are seeing, considering its relatively low market cap size as well. Team Lease also buzzing on the back of the revamped labor rules that we are looking at. 12% of an upside here. Oriental Hotels clocking about 5% of an uptick as well. While not doing so well is something like a Centrum Capital, and Apex Frozen continues under pressure. Cuts of over 6% is what we are looking at. Along with that, even the other counter is seeing about 11% of a decline is what we are seeing. In terms of higher volumes now, this is volumes more than 3 times or 7 times versus a 30-day average. Aztec Life, Dawson Products, and something like a Ujaz Energy makes the cut. All of these with Ujaz Energy and Aztec Life buzzing relatively, while if you look at Dawson Products, it's down about 1%. So, this is the overall picture, Samit, that we are building in terms of how the benchmark and the broader market indices are doing.
Right. One counter that remains in focus is Imtron Electronics. The company has guided for a strong growth of nearly 40 to 50% over the next few years. What are the factors? Let's get in Puneet first to understand about this company.
Well, thank you for that. It's definitely a very strong picture from the company that they're posting. They are largely in the original design manufacturing space, or ODM as they are called it. Revenue growth in FY25 was strong of over 70%, with a 40 to 50% CAGR, as you rightly mentioned, over the next 2 to 3 years. What's interesting and what I'll be watching out for this conversation will be three key things. 64% of the revenue comes from India. How is that going to shape up in the medium term with the order book that they have? So any kind of geographical expansion is what they can give us some perspective on. The second one is also the industrial business and the IoT business are the top two in terms of revenue. Industrial is almost 36%. But what is the split between that? Because we see for the other listed EMS companies who have a higher ODM share, be in smart meters amongst other key spaces. So that'll be the other second key aspect. And third will be the expansion of export sales as well in terms of the current, what the management sees currently, because we are seeing a lot of international orders also being counted in the India share. So we can give us some specs. So these will be the three things I'll be watching out for from this conversation, with mainly the 40 to 50% YY revenue growth as a key aspect and where that will come from.
To understand more on the company and the future plans, let's welcome in Mukesh Vasani, the founder and chairman of Aimtron Group. Sir, firstly to start off with, the guidance that you have given, 40 to 50% CAGR for the next couple of years, why are you so confident that the company will be able to do this kind of a growth? What are those factors because of which you are so confident?
Thank you, Sumitji, and thank you, the team, having me here in this platform, and thanks to the audience and well-wisher of Aimtron. It's good, I think we have a very good, very strong flow from our customers, ODM customers especially. See, Aimtron, in a nutshell, it has 3 facilities, if I give you a 20 seconds overview, and one in Bangalore, one in Vadodara, and US exposure. So we have, and also we have 100 crore worth of ESDM, a new end-to-end mechatronic project we just started. So coming back to your question, we have a very strong commitment from the customer, stickiness of the customer. In a power sector, we have a customer is US-based customer. They need a China plus one strategy for India. So we are taking those clients. They are based on international and have a local presence over here, and we do them a end-to-end solution for them, so they have a longer stickiness and 5 years commitment for those products we building for them. So that is the reason we are very confident about our ODM model, and a 40 to 50% CAGR, even better. We are performing last couple of H1 and H2, so you can see that.
Right.
Then that's the reason we have a very strong, result and visibility.
Right. Your order book stands at close to 460 odd crore rupees, I believe, which gives us strong revenue visibility, no doubt about that. But what is the kind of margins that you would generate from this order book? Any average margin that if you could guide us for this? And secondly, what is the kind of growth that you're expecting on order inflows going forward?
So, second part is first, we have a very good order inflow, and, again, current PLI, current government initiative, current, electronic boom, we are really in a good space, order inflow. Even looks like the static situation is resolved, and we are getting a lot of activities from US, international order also. So that's second thing is regarding margin. We have a very straightforward, guideline to the street, and we are following that guideline. Normally, all our orders are, same kind of a level, means we take the order with the calculation that we need to make sure that our margin and our EBITDA stay intact. So that's why we take the order, and those are the customer we select, and those are the customer we work with them, have a longer commitment, and at least have some value add or have some engineering support, or that's what they require. So that's why we are very confident.
Hello, sir. This is Anushi joining in as well. Just a couple of questions from my side. If you look at the current margin profile, that's in the range of 25% is what we are looking at. Is that the sustainable range for the next 2 to 3 years, or with the backward integration in place, there would be a further improvement in this number also that you're looking at? And just want to understand this, considering that's higher competition in the EMS segment, would this be sustainable, the range that we are looking of 25%? And also, if along with that, you can talk a little bit about the PLI benefit also that you were just addressing.
Thank you, Anushri. Yes, this current margin is sustainable because of our special service we do for our customers. So we are not next 2 to 3 years. We gave a forecast or margin guideline about 20 plus minus 2%. We are still maintaining, and we will focus on that maintenance, how to get it. So yes, we will be sustaining the margin and focus because of some of the areas we are working right now is international MNC. As I said before, we have most of the client is international, but they have exposure here and they're looking something local here. So that's why we will be maintaining that margins as you look at it on the street.
On that front, about 60 to 65 of your current revenue is from the domestic side is what we are seeing, while 35 to 40% is from the export markets. Now you're exploring new opportunities in regions like Australia along with Europe. So just want to understand going forward, how is this mix going to shape up in FY26 also, or even going forward in something 2 to 3 years of timeline? How is that going to shape up? And is there a difference between margins in domestic versus the international markets?
See, yes, definitely there is a difference, a couple percent here and there. We can see domestic market, but what we select is more international MNC that help us to maintain that. But the growth right now, 60 to 70% CAGR, you can see on the current years. Looks like in the next 2 years we will have we'll have same way. The international exposure we have, US exposure we have. So we are, we had before, if you look at the year before, we had more international exposure. And because of the tariff and current geopolitical situation, we shrink a little bit international and make it more India. But again, we started this activity again, and our, inflow is coming back to international. And that's where we're going to maintain our, revenue ramp up and margin.
I believe recently you did some capital expenditure, right, to set up a plant. Can you just give us some idea on what is the current utilization level and when is the next phase of capex that the company will require?
Yes. So it's a very interesting topic for me also because, like right now we have a facility in Bengaluru, which is focusing more on design, high-tech, medtech, life-threatening medtech devices, that kind of project we are maintaining government defense. Also, we have a plant in Vadodara, which is can generate up to 500 crore, which we think about end of the next fiscal year will be at full capacity. So we need a new setup, as I said earlier, because we have a lot of a push from government and new schemes and everything. So we are setting up 100 crore worth of ESDM in 3-acre land. We have 2 SMT lines, end-to-end solution with AI-enabled state-of-the-art infrastructure, including building and everything. So we already started. So that will be up and running in a year, like a Q4 27 or maybe a Q1 27 or Q4 26. So that's where we start that. And that line will be more focused to mechatronic. So, this is the specialty about Aimtron, design in electronics plus design in mechanical. So we can give a full box system integration for our customer. So that project is already in the process, and I know we are moving forward with that.
Just want to understand, sir, what's the peak kind of a revenue potential that you see with this new capacity additions which are there by fourth quarter onwards? And I'm assuming by the fourth quarter of next year, it would be on the peak levels as you just spoke about it. So is it 1,000 crore of a figure that we are seeing considering all of these new facilities which are there?
So total capacity-wise, we are all set. Once we have a new project lined up, new greenfield project, then will be for 1,000 crore plus minus 10% capacity is available. To reach 1,000 crore revenue, yes, we have to work hard, and we are ready for that, and we already have pipeline for that. So next year we start seeing the revenue. We give that projection to about 10-20 crore for first year, and then it's going to jump more. So in 3 years, after 3 years, total revenue we are eyeing is about 900 to 1,000 crore.
900 to 1,000 crore. So just a follow-up on that. So considering that you are seeing such a huge revenue potential for this, what's the capex requirement currently which is there? Along with that, there's also some inorganic opportunities that you're seeing. You already shortlisted about 5 to 6 or odd. So considering for both of these, are there any requirements for further fundraising?
Right now, we are a debt-free company, so I don't think so we need any money from the street right now. We can get a little bit if needed here and there. But first, we are putting a 2-phase. First phase, we have only 2 SMT lines will be there. So that way, we don't need any more capex. And once you grow, let's say more than 750 crore, we might to add maybe another 50 crore or 100 crore, adding 2 more SMT line or clean room or other customer demands. So when we evolve, new customer evolve, and that's where, based on that customer, we will do a future setup. But to answer your question, right now, no need any debt or any fundraising, but maybe 1 year or 2 years when we cross, it's going to be 750 crore. We might need to add a couple more lines at that time. 50 to 100 crore maximum we need. So.
And anything on the inorganic acquisition side?
We are looking all the options right now, Sumit. So right now, we are looking options, but it's too little too early to announce anything. But yes, we are, and that's the way to grow. So we will have to grow organic and inorganic. Also, we will grow with backward integration and forward integration. In forward integration, we have like a mechatronics. We will put a plastic injection molding. We put a metal stamping, metal fabrication. So those kind of we call packaging in electronics language. So we'll do the packaging, electronics packaging, in the new plant right now in a greenfield project already, starting next year. So you will start that. So back to M&A, I think it's too early to say, but definitely yes, in our horizon, and we will make a right decision. We are not crazy about putting together factories to make but we are very diligent and we are very careful about capacity and execution of the capacity and the team and all over aspect of the M&A, and then we'll do the right M&A for our company's benefit.
Lastly, sir, just wanted to understand how much of your revenue now comes from aerospace and the defense segment, and you also spoke about multiple segments or areas where you have already received approvals from the company. So what is the progress on that front? And both these segments are high growth, aerospace and defense. So how much of a contribution are you expecting from both these segments to come in, say, over the next couple of years?
So we right now, we just received the AS9100 certification, which is a basic requirement for aerospace and defense. So we already started on the PSUs. Currently we got small orders and prototype orders from PSUs. But in foreign, we already started working with a defense drone and defense category worth of product, which we are bringing over here. We got the tooling PUs for that also. At this point, percentage-wise is a little smaller percentage, but it's a high margin, high growth area for us because when we tap a customers like international customer like Caterpillar and those customers, they are Northrop Grumman and those customers will tap so at that time. So, but yes, right now it's a very little slow margin, but we are ready and we have a system ready for that to accept a bigger and larger ODM project for aerospace and defense.
Well, thank you, sir. Thank you for joining us and giving us the way forward for Mtron Electronics. Let's welcome in our fundamental guest, Avinash Gorakshakar, founder and head research of Avinash Mentor Research Services. Avinash, you heard the management. They are saying that the growth going forward would be at a CAGR of around 40 to 50% with margins, with stable margins as well. Have you tracked this counter? Does this seem a right buy for any of your clients at the current valuations? Avinash, I believe you are on mute.
Yeah. So Somit, first of all, thank you for inviting me. I think, this company is very interesting. It operates in the ODM space and numbers have been very solid for last year, for the first half of this current financial year. And I think, the optimism of the promoter is very aggressive. I think we have met him personally and we know that he's actually having a US-based company also, which actually, is a much bigger entity. So I think, the group is very well entrenched in the technology space. They know exactly what the customer wants. But one or two things which I feel, where the market could possibly like to question and get a better understanding from the management is, their operating cash flows last year were negative 19 crores. And this year, if you see their operating EBITDA, which was about 30 crores for September for the first half, just 1.91 crores is the operating cash flow. So the operating cash flow conversion is very low. See, typically where companies where the operating cash flow conversion is very less or either negative, I think future re-rating becomes a little bit difficult. 1,000 crore market cap for a company which generated roughly a turnover of 200 crores last year. So my sense is that, if the stock comes down at reasonable levels, I think could become a good attractive bet. At the current level, I think it's just a hold. I think we continue to be structurally positive here, but valuations seem to be quite fair to expensive.
Expensive valuations, however, the growth story continues to remain strong for Mtron Electronics. So that's the stock on your radar. But along with that, what's buzzing in trade today is something like a VLS Finance. If we just look at the trading volumes right now, 7 times the daily 20-day average is what we are looking at. Even in the 1 month perspective, if we are seeing 40% is the kind of an up move that the stock has made. And on today's up move that we are seeing almost at the levels of touching that upper circuit is what we are seeing is on the company as board approving a buyback program, and this is worth about 100 crore is what we are seeing. Now the company plans to buy back around 26 lakh of equity shares, and the buyback price of PC has been set at about 380 per share, which is a premium of around 24% is what we are looking at from its last trading price. Maximum, if you look at the buyback, overall, how much is it in terms of the percentage capital? That's about 7.7% of it. And record date for this buyback has been set on December 12. Just a quick check in terms of how the second quarter had panned out for the company. Total income had stood about 13.5 crore, and this is with a PAT of around 7.1 crore. But there was a net adjustment in the first quarter, because of which we are looking at this huge variation in terms of where the PAT figure is concerned. So that's the overall perspective that we have for VLS Finance. Avinash, let me come to you on this one. It's an interesting counter that we are seeing almost hitting an upper circuit in today's trading session on the back of this buyback announcement. What do you make of this?
Well, I think, see, these kind of stocks, Anushi, there will be a sentimental positive impact because the buyback price is quite attractive. And I think, it's a thinly traded stock. So stock is very volatile. I don't think, we have any marquee investors in this stock. But overall, if you see the buyback, it is a one-off event. Once the buyback is over, I think the market would like to know what are the kind of growth prospects, what are the kind of scalability prospects for the business. Because, without these things, I think it's just difficult to presume that the buyback is the only solution for an upside. So once the buyback gets over, we like to see what kind of growth trajectory comes in the second half. Because in terms of the revenue, in terms of the profit, I would say that, if they're giving such a big buyback, then obviously, growth potential seems to be quite limited. So my sense is, those investors who have it can obviously book out because, this kind of jump may not be sustainable going forward. But yes, I think from a longer term perspective, it all depends on how they scale the business in the next 6 to 12 months. So it's a hold, it's not a fresh buy.
Okay, so hold is what we are seeing for VLS Finance for now. But, it's time that we take a deep dive into what's happening with the F&O market and how the queues are shaping up for trade currently. Let me go across to Sharath for a snapshot for the trade today.
Anushi, there's a clear divergence coming in when it comes to Sensex and Bankex, and I'll give you the reason for it. But overall for Sensex, there was, you could say, that there was a kind of a downtick coming in, and let's just pull out the contracts where the action is happening, and that's roughly, you could say, around 85,400 levels in the future market. Of course, there is congestion happening, especially in the put segment, 85,300 to 85,400. But that sell-off has started coming in. This is also a time decay coming in as we move towards the monthly expiry end. Let's pull up the Bankex over here, and we see there is a significant support coming, especially for the larger players such as SDFC Bank and ICICI Bank. That's where the support is coming in for the Bankex top trades, and that's where we are seeing the overall options trade also coming forward to see the bigger names. All of them are in the green, and that's why Bankex was trading near the day's high levels as well. Also pulling out the stocks which should be in focus, the key longs which have developed in these markets, these include the stocks such as Emphasis and AB Capital. AB Capital was there earlier at our 10:45 show as well. And also if you see the short covering, two names are coming in. They include NBCC, and from IT space we see Tech Mahindra. That's an outlier also, we could say, when it comes to the order win. Also the long unwinding shares, they include NHPC and Sammaan Capital, which was recently coming out of the F&O ban, and also the key shorts which are developing, they includes HAL, but however that has actually come off. It was almost down 3.5%, now it's down almost 2.5%. But Solar Industries, another defense name, also tanking in the trade. So these are the important stocks which are buzzing in the F&O space.
Well, thank you, Sharath, for that snapshot of the F&O segment. Sika Logistics is another stock that remains in focus. The stock has slipped over 5% in last 6 months and is down nearly 39% so far this year, even as its trading volume continues to remain higher. Let's get in Jasmeet with more details on what's been buzzing in this counter.
Well, right, thank you for that. Before we start with the recent news, let's quickly understand what does the company do. Well, company operates in integrated logistics solution space, while they also give multiple services, including dredge removal services as well as other mining services to different states. Now, if you look at the overall recent news, why the stock is buzzing is, on the back of the news, the company's arm has received approval of the Central Railway to start operations of its new Gati Shakti cargo terminal. With this particular start of the terminal, which is happening in Tamil Nadu, will boost company's overall logistics space and and turns out to be very positive for the company. Well, if you look at the key financials for the company, the top line has been flattish for FY25 and 24 for the company, but the margins have improved by 200 basis points in FY25. It will be interesting to watch out how this particular thing adds to the top line of the company going forward, and how does the Q3 and Q4 pans out for FY26.
Right, thank you Jasmeet for that roundup when it comes to Sikal Logistics. Avinash, have you tracked this counter Sikal Logistics? Any view here?
I think, Swamit, this is a very thinly traded counter, and I think, my sense is that this 5% uptick you're seeing today, one will have to see whether this move is sustainable, because, this is not a very large institutional or a kind of a, retail favored kind of counter. But yes, if numbers are good for the second half, then I think some traction could continue. They operate in the logistics space. I think they have a very long legacy, but I think numbers need to improve. In the last 1 or 2 years, numbers have not been all that great. So we'll prefer a hold. I think any fresh buying, once we see the next 1 or 2 quarters, one can take a fresh review. But as of now, no fresh buying. One who has the stock can definitely continue to hold.
So hold is what we are seeing for Sikal Logistics as well. Currently locked in a 5% of upper circuit. But thank you so much, Avinash, for taking out the time and sharing our perspective on all of these stocks that we've discussed on the show. But viewers, that's all the time that we had on this edition of Small Cap Bazaar. Stay tuned. India Market Close coming up next.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show.
A range-bound trade is what has continued for the day in terms of where markets are concerned. There is some bit of positive momentum that's coming in from the European markets as well, which actually opened in the green. We're literally seeing 100 to 150 points range. In fact, welcome to India Market Close with me, Hiral Dadia, and my colleague Sharad Dubey. Overall, if you see in terms of Nifty 50 as well, 26,070 is what you're tracking, but pretty flat right now. If you see the intraday chart, that will tell you the story, but there is some bit of momentum that's coming in from banking majors as well. Outperformance there. We're nearly at the day's low, trying to get into the red, but it's absolute borderline. Where we end up is going to be interesting to watch out for. Let's quickly pull up Bank Nifty on the screens. You're seeing that momentum which is sustainable right now in terms of Bank Nifty, 0.6% higher. Let's pull up the PSU Bank Index and the Private Bank Index, and that will tell you the story. 0.4% higher in terms of Nifty PSU Bank, and if you pull up the Private Bank Index as well, 0.6% higher. So similar moves and similar momentum coming in across the banking space as a whole. Let's look at the Nifty contributors, and then we'll look at the sectoral indices as well. If you see in terms of Nifty contributors, you mainly have banks which are contributing along with the Tech Mahindra. These are the four names which are providing support, but what's pulling you lower is the Reliance Industries, which is one of the highest contributors there. M&M, BEL and ITC. In fact, the entire defense pack is seeing a one-way move, complete profit booking coming in on that front as well. Let's look at the sectoral heat map as well and see what the sectors are telling you. IT, the top gainer, that's the way the day started off as well. Banks were there in the positive as well. You know, few of the other indices which actually turned into the positive in the first 1.5 hour of trade have also turned back into the negative. Auto down 0.2%, consumption trading under pressure. Healthcare, which was seeing some bit of positive momentum, is down almost around 0.4% along with pharma. Defense 1.8%. These are the kind of cuts that you're seeing in terms of where the defense pack goes. Real estate, the cuts have deepened further, now down almost 1.2%. Oil and gas and metals. Metals also has seen major gyrations. If you see, gyrations, if you pull up the metal index in terms of the intraday chart, that will tell you what's happened with the metal index. For a brief period after starting in the negative, it actually went into the green, and now almost at the day's lows is where you're seeing when you talk about metals as an index. Broader markets, let's pull up the mid cap and the small cap index and see what they are doing in trade, because it's a lot of stock specific individual action that you're seeing. You at the day's low in terms of the metal 150 as well, mid cap 150 and the small cap 250, down to the tune of 0.7% trading at the day's lowest levels. Individual stocks, if we can just pull up NSE 500 to see what is that trend looking like. Team Lease is again buzzing on the back of the labor code changes. ITI is seeing some strong moves. Polymed, Asahi India, NBCC on the back of an order win is doing pretty well. Quest Corp, the gains are not as much as Team Lease, but still trading in the positive. What's losing out? DCM Shriram. I think on Friday's session as well, the volumes were very heavy on the DCM Shriram. The volumes have continued today, and that stock is down almost 5.5% in trade. Mishra Dhatus trading under pressure. Deepak Nitrite, KIOCL, so few of the chemical names which are down and about in trade. Shoppers Stop and CG Power on the back of cancellation of an order is seeing cuts of nearly 4%. So that's what the markets are looking like. Let's just look at the advanced decline ratio as well and see what the VIX is doing after that. If we can just have the advanced decline ratio, there you go. The mouth is actually widened with almost 1,800 declines to almost 600 advances. You know, you can see the way the trend has been reversing right now. And to add to that, let's just pull up India VIX and see what VIX is doing. There you go, 6% lower, but it still remained in that 12 to 13 kind of a range, which is still giving you some bit of stability. But it's an interesting market because you're not really finding any major opportunities. You know, by the time one identifies an opportunity today, tomorrow that opportunity is almost lost. And that's what is happening right now, Sharad.
There is divergence happening all across the board, be it the small cap or the large caps and even the options trade. So that's where the confusion is happening in the markets. Nifty is in the range for the second straight day, and the range is becoming tighter and tighter, 26,050 to 26,150, 180 levels. This is where Nifty is gyrating. The 10-day DMA 25,917 is a key support level if you are having positional holdings. But today's closing of 26,100, that is something we'll be watching out for. But net, Nifty has corrected from day's high level. But there's a different story for Nifty Bank. Sustained strong up move coming in 59,100 to 59,500 is the range which we are looking at. And HDFC Bank and ICICI Bank, both of them have higher contribution to Nifty Bank, and both of them are in the green. Overall, looking at the setup, the small caps are seeing sustained selling, nothing major happening there. Nifty bank setup, of course, is stronger than Nifty, and buying is happening in IT, private banks, which are FI heavy counters, along with selling in the defense and realty space. Now, remember, tomorrow is monthly expiry and options premium time decay is going to happen, and the next 90 odd minutes would be very volatile. And to add to it, two more important triggers are happening in the next 90 minutes is rupee is still volatile even after RBI's interventions earlier in the morning, and MSCI's rejig impact would be there, where stocks such as Fortis, Paytm, Siemens Energy would be buzzing in these counters as well. Last 30 to 40 odd minutes, you will see a lot of changes happening in these stocks. And Hiral had mentioned earlier, European markets, they are opening in green, and we are seeing that the global cues are improving as a higher chance of Fed rate cut. So a lot of moving factors, not a clear trend coming. Just to give us the entire sense, how things will move, we are having two guests with us, Hemen Kapadia from DR Choksi Finserv, and our funda guest, Nirav Ashar from Latin Manarlal Securities. Very good afternoon to you both, gentlemen. Divergence trends coming across, but of course, overall, the technical setup still looks good. I'll start with Hemen. Hemen, Nifty Bank, what would be the key strategies right now? And of course, in the next one day, we are going to have the monthly expiry as well. A lot of moving factors and global cues this week as well.
A very good afternoon to you, Sharad. Thank you for having me on the show. It's always a pleasure. I believe we came close to the all-time high as far as the Nifty is concerned. Currently, I don't think I have a strategy on the Nifty. Stay away. Like you said, we have the monthly expiry coming up. The days keep on bouncing around willy-nilly. 26,277, we posted a high on 27th September 24. We came close to that, 30 points away. And it's natural that if you come to an all-time high, overcoming that at the first attempt doesn't seem very plausible. So that's what has happened. Having said that, it's been a very insipid market in the sense, I mean, you must have read enough data that 8 stocks have moved the Nifty. Overall, if you see, there is nothing which is happening. It's just a few bunch of stocks which are moving the market. So from that point of view, the market breadth and even the whole, a bull market feeling is not coming. You had the VIX went up to 13 plus, has come off a bit now. The currency is all over the place. Bank Nifty is the only thing which is holding on. So a narrow move compounded with n number of other factors. So market isn't bad, but it's only a small bunch of stocks. And if things need to improve, firstly, 26,104 is the level we couldn't overcome for a couple of attempts. Now we need to sustain above that. And yes, no rocket science that we need to close about 26,277 for a further upside to come in. For the Bank Nifty, it's 59,400. So I would say wait it out. There's nothing very compelling in terms of buy or sell, but yeah, there is a little bit of a negative overhang which somehow refuses to go away. Sharad.
It's interesting, Hemen, because as we speak right now, you have markets which have actually headed to the day's low, especially when you look at Nifty 50. Let's just pull up that intraday chart on the screens and that will tell you the story. We are actually in the red right now, almost inching towards that 26,050 mark. Where from here, whether we close below that 26,000 level or not is the key question. And absolutely, there is no direction that we are able to find, as Hemen was mentioning. Hemen, when you're saying that it's banking majors which are coming and supporting markets to some extent right now, first up, your top picks overall, and do you have any banking names that could be buying opportunities in spite of the run-up?
Okay, Hiral, I'll start with the first picks. There's a buy call on Bajaj Auto at around 9020, stop loss 8920, target of 9220. Logic above the 55-day exponential moving average, high top, high bottom on the daily chart. The oscillators have given a crossover buy. Even the weekly picture seems copacetic for an up move. So a buy on a Bajaj Auto. I have a sell call on Bharat Electronics, BEL. Overbought, rounding top distribution pattern. We are ripe for a correction. So a sell call on BEL at 410, stop loss 425, target of 380. Coming back to the bank stocks that you mentioned, Hiral, I think HDFC Bank looks relatively better. Kotak hasn't done anything for the last 4.5 years. Nothing spectacular expected also. HDFC Bank, okay, post the ex bonus, we are we posted a new high and we're floating close to that. So I believe above 1016, HDFC Bank should open up a decent, if not good, upside. Now, whether that happens now or we see a market correction first, HDFC moving sideways and then moving up, but the setup seems positive as far as HDFC Bank. But I think 1016 needs to be taken out on the weekly chart here.
Okay, let's pull up Reliance once. The stock, of course, not doing much, but an important report has come in from JP Morgan. They have maintained overweight with a target price of 1727. Valuations are relative to their peers are still attractive, and they're estimating Reliance still trading at a 15% holding company discount. Earnings drag from weak refining petchem through FY 24-25 is over. Expecting earnings growth should be better going ahead, and current refining strength has the potential to drive upgrades. Catalysts in 2026 include Jio IPO, tariff increase, new energy commissioning, more stable retail growth, which can be supportive of growth as well. Nirav, I want to get you into this. Reliance, of course, we'll be asking the major long-term triggers going ahead. What do you think about this company right now? Is the risk-reward ratio actually favorable in current terms?
Yeah, good afternoon, and thank you for the invite. Yes, Reliance Industries is looking quite interesting. We had a very strong set of numbers, quarterly numbers in Q2. We have seen very good performance coming in from O2C, that is oil to chemical business, downstream petchem business, and the retail facing businesses have been doing quite well. For example, Jio and as well as the Reliance Retail. Almost all the divisions have managed to show double-digit growth, and this is very, very heartening. And we have a cash profit of close to 35,000 crores, and the capex was around 40,000 crores. So it's on a self-sustaining basis that the capex is taken care of by the internal accruals which are being generated by the company. Going forward, the company expects to double its operating profits by 2027 on the basis of the strong performance of the consumer-facing businesses. And they expect the new economy businesses, that is the semiconductor-related businesses, to be as big as the O2C business in the next 5 to 7 years. So definitely the outlook seems to be quite positive.
The outlook is positive when it comes to Reliance Industries. Hemant, what are charts indicating for RIL? Because currently you're seeing levels of around 1537. What's the upside?
We walked into a familiar nemesis at the 1550 level, Hiral. If you see, there was a swing high made somewhere in around 8th or 10th of July, around 1550. So we walked into a resistance level. That too after the move from 1360 to 1550. Reliance is a behemoth. So after such a fantastic move, plus obviously it's an FNO stock, unchecked further upside doesn't seem to be practical. Okay. On the other hand, there are three bullish gaps. At least I think two can be covered up. One is sub 1430. I mean, that's too far away to make any sense of Hiral. The second one is sub 1500, and the third one is just around here, below 1526. So a small hiatus, a cool off coming in, consolidation, as you may term it in technical parlance. One or two of these gaps, I believe, would get covered up before it resumes its journey. So 1550 needs to get taken out. But after a 10% move, I think we're going to give Reliance some time before it resumes its journey and the gaps get covered up. Hiral.
Okay, yeah, that's going to be an interesting take where fundamental views that are coming in are bullish, but charts probably may not support it as well. But moving on, the stock of the day, Team Lease is back in focus. As India moves towards unified labor codes, the company actually has emerged as a fishery with informal jobs that will start shifting to organized structures. Jasmeet joins us to tell us more. Jasmeet, the stock has cooled off from the day's highest levels as well, up around 6.5% right now. But fundamentally, we've called it a stock of the day because of the kind of moves it's seen. We've spoken to the management as well. What are you picking up?
Well, thank you for that. So labor law has had double impact altogether if you look at the stocks. Some stocks like Zomato and Swiggy have suffered in trade, but something like Lease and Corp have done really well. If we talk about Lease as a stock, we see that the labor codes to push formal jobs into an organized structure, which basically means roughly 90% of the unorganized job to move into a formalized structure, creating an enormous demand market for the company going forward. If we look at the other aspect, there's higher compliance costs that a company might face when it comes to formalizing all the informal workers, where the companies might push such work to companies like Lease, where they'll take care of the overall compliance, again benefiting compliance overall. If we look at the third aspect, we say that they have cleared the rules for the fixed term roles, which means that now companies can hire employees on a fixed term basis as well, unlike the previous time where the rules were confusing, again increasing the overall demand for Lease as Lease operates in the contracting space. While lastly, we look at the overall gig and platform is a new segment where company can cater into. We spoke to management today where they said that it's a new segment where management would like to increase their stance and hire more people going forward. If we look at the key outlook of the company, we see that the company will increase the hiring in GCC, which might be seen from the H2 onwards. On the other hand, we also see the early signs coming in terms of demand recovery for general staffing. We also see company has a special segment called as GCC hiring for specialized staffing business, where they have the highest margin. So moment of that will be something to watch out for. If you look at the overall stock performance and how the stocks have seen altogether, this particular stock has 12 buys with 0 sells and 0 holds, so it's all buy stock. If we look at the current valuation of the stock, we are currently trading at almost 39% lower the Y2D basis. Now, in terms of return potential, it stands at 23%. So, all in all, we see positive up move for the stocks coming up after the new labor laws.
Okay. So, that's the gain here. In fact, along with this, you have a Corp also, which could be one of the beneficiaries. Thank you, Jasmeet, so much for that one. In fact, we did speak to the management of Lease, who says that nearly 90% of India's workforce is still in the unorganized ecosystem, and a gradual shift towards formal employment will meaningfully benefit the workers. Let's quickly listen in.
Yeah, it's very difficult to kind of have an estimate on that. But just to give you a sense, right now, 90% of employment in the country are in unorganized sector. What I mean by unorganized is where they are not fully compliant with all applicable labor laws. So even out of this 90%, even if 20, 30, 40, 50% moves to organized players, be it Lease or even directly by the compliance, that's going to be a big driver on formalization, social security inclusion for large number of employment. And this is going to have a huge impact on overall productivity of the employees as well, not just formalization, because it's been clearly proven that where employees are in formal workforce receiving social security benefits, their productivity levels are also proven to be much higher. So coming to Lease, there are few sectors which we believe will start giving us additional business or going to have a positive impact. So one is again coming to gig and platform-based business, because so far we have stayed away from gig workers because we are not very much sure of what will be the social security impact of these category of workers. So that's the reason we stayed away. So now this sector, because there is almost close to 1 crore workers working under the gig category in the country. So that's going to be a huge addressable market for us. In addition to that, there are lots of other sectors where they are mostly using unorganized staff at entry-level jobs. That will also be a new market for us.
Oh, so that's the opportunity that Lease is actually sitting on, and that's the reason why you're seeing these kind of gains. But one segment which will actually get impacted will be the platform companies, because the government is defining gig work and platform work and aggregators as well under this implementation. What they've said is that they will have to contribute 1 to 2% of their annual turnover, which is capped at almost 5% of the amount paid or payable to gig and platform workers as well. Current act will cover all companies that actually use gig workers, and on the back of which, if you see an Eternal, Swiggy, these are few of the names that will see an impact. If you talk about an impact of 4 to 10% that will come in when you talk about their adjusted EBITDA this time around. In fact, analysts are saying that the cost could potentially be shared between all the stakeholders, and the shared cost will reduce the overall burden on the platform companies. So names like Swiggy, Zomato, Urban Company could be getting an impact on the back of this as well, but more clarity is still awaited. In fact, let me get in Nirav as well to tell us more about how is he looking at this entire math. Nirav, my question to you is, Few of the companies like a Team Lease, Quest Corp do see a positive impact of this, but your platform companies or even a lot of other companies which would see gig workers will see a negative impact on the back of higher expenses. What is your view and your, and picks in terms of both these segments?
Well, I think it's a kind of GST movement as far as GST type movement as far as the labor laws are concerned. We've seen in the case of sales tax, there was a kind of each state had its own set of rules. And finally, we had this common law which was introduced. And similar things are being worked out as far as the labor law is concerned. I think there was a pressing need for this. So that the wages, the extent of wages, the working conditions, the social security, the formalization, etc., is worked out well. And definitely, this is an opportunity as far as companies like Team Lease, Quest Corp are concerned, because apart from the staffing requirements, there will be a lot of regulatory work. There will be a lot of assignment-oriented work or a consultancy-oriented work, which these entities will get on account of the new laws and regulations, which will increase their revenue streams. And at the same time, as you rightly pointed out, I think it will increase the cost for all the platform-related companies where there is some amount of disorganized nature as far as the employment is concerned. So I think this should increase the cost structure for them, but a large part of this will be a pass-through. So I think in the medium term, this is likely to even out.
That's a take coming in for Team Lease. But look at the stock. There is a sudden sell-off coming in Team Lease. Its stock is down almost 2% or 3% from the day's high. I just want a quick view. Is this profit booking coming in, Hemen? And if you are holding this stock, this has tested the patience of the investors. Not much returns have come in for the last 1 month. Even 6 months, it's been a downtick. A sudden up move coming in, a little bit of profit booking coming in. Will this be a good positional buy, or it should be a good profit booking and leave the counter?
No, Sharad, I think it seems more profit booking. The volume, okay, the remarking at this point in time will come after market. But volume this month is highest in 9 years. So obviously something is cooking and it seems good. Stock is at lows, a base formation is placed, oscillators turning positive. Everything seems to suggest that we are turning the corner. So I'm not sure about a fresh buy yet, but if your positions hold, keep a stop loss of 1650. I believe things are on the mend.
There might be a turnaround in Team Lease. They're currently trading at around 1740 odd levels.
But I mean, see the kind of downtick it's seeing as well. So that profit booking has started to come in. How much investors are, wanting to continue holding the stock is the question. In fact, an interesting take that Ravi Dharamshi, founder and CIO at ValueQuest Investment Advisors, also told us about the new labor codes. Let's listen in.
From the point of view of continuing the momentum on the reforms, it was absolutely a must. For some time now, some of the reforms related to the labor market, farm market, judiciary have stalled since a while, and there is an urgent need to push them through. So from that perspective, it's a welcome relief. And the fact that there is enough room available for the state to form their own policies and their own rules adds a lot to the overall regulation. And I think this will do a world of good for India. Of course, I mean, it was in the coming since a while, and we are just glad that it has come through. And also in the perspective of the overall cyclical recovery in the economy that we have been waiting for, I think this is an added push that will add to the overall federal competitiveness in the economy. So the states will competitively frame regulations which are competitive versus other states. So that will hold us in good stead.
That's Ravi Dharamshi's view coming in, this entire news flow coming off the labor code. But let's pull up the IT index. That index has been doing a strong move coming in, starting from the day itself. And of course, we are seeing it's maintaining it. Let's just pull up the constituents of the Nifty IT index. Largely, there was Motilal Oswal's upgrade also, and they have upgraded the entire sector. from underweight to overweight, and interestingly, the rupee is also near the record low levels. Nirav, your question is on the fundamental aspect of it, because the medium term, long term basis, there are of course factors which are still uncertain for the Indian IT space. Is this just a technical up move, or some good green shoots have started coming in for the Indian IT players? Of course, the valuations are attractive and below their 5-year average, but what would be your fundamental views on the IT space, Nirav?
Well, I agree with you that valuations do look attractive, and at this point of time, I think most of these stocks have corrected very sharply. There has been a sharp deceleration in the price to earning multiple. If one were to look at the larger companies, then the PE multiples have shrunk from 30-32 levels to currently 22, 23, 24 levels. So I think one of the factors which could be attributed to this is that even at the current levels, the PEG, that is a price earnings growth, still does not look attractive, because growth has been quite anemic. So I think this has been a cause of concern. Hopefully things should improve from here, although we are not seeing any signs of that as of now. But I think there is a ray of hope, considering the fact that the mid-cap IT companies, some of the mid-cap IT companies have given in very strong performances. If one were to take into account companies like Coforge, Persistent Systems, Mphasis, then I think the order booking in Q4 of FY25 has been very, very strong. At the same time, some sectors are showing signs of recovery. Persistent, for example, has spoken very well about the order books. The Mphasis has been very positive about the developments in BFSI and technology, media, telecom. So I think overall there is still hope, and I think there are a couple of other factors which are working. One is the Infosys buyback, which has been quite impressive. And the second factor is the rupee depreciation. So I think at this point of time does warrant bargain buying, which is happening at the moment.
Bargain buying for IT stocks coming in from Nirav. But some of the stocks that are making news are HAL, IKS Health, VLS Finance, RKEC Projects and NBCC. These are small cap names, but Anushi is joining us with all the details. Anushi, what are you picking up from these stocks?
Sharad, I'll start off with something like a HAL, which has taken quite a beating in trade today, and this is on the back of the fatal incident which took place in the Dubai Air Show, wherein if you just look at what has happened, there was a fatal crash regarding Tejas Mk1A. This marks the second such incident which has happened, and unfortunately, because of this crash that has happened, pilot has also passed away in this. The company came out with a clarification on the same. They said that the recent incident during aerial display at the Dubai Air Show is an isolated occurrence. Incident has arrived out of exceptional circumstances, but they do not see any impact on business operations or any of the deliveries that they have slated for the year. Do note that currently exports contribute about 1% of the overall FY25 top line, but now this would raise concerns regarding companies' focus on increasing their export mix. So that is on HAL that we are seeing. A very, very small cap company focuses something like RKEC Projects. If you just take the market cap in picture, that's around 150 crores or also that we are looking at, but they have received an order worth about 198 crore from ONGC, and this work order is regarding jetty revamping projects. So a significant upside is what we are seeing for this particular counter. Other stocks in focus includes NBCC, which is also buzzing on the back of a 72 crore of an order win, and this has received from two different entities. Order book, if we take that in context, is about 1.28 lakh crore. So a minuscule order is what we are seeing considering the overall order book that is there, but a good stock reaction is what we are looking at for NBCC. Coming to IKS, that's Inventurous Knowledge Solutions. Here Nomura has initiated coverage on this with a buy call of around 2,000 rupees. They say that the company presents an attractive play on US healthcare provider space, considering that the US healthcare outsourcing market is likely to see about a 12% of a growth, that's CAGR growth between calendar year 2023 to 28. So a huge potential on that front. They expect about a 16% of a revenue growth, along with that a 32% of a EPS CAGR as well. So that's on IKS. We are seeing in the last talk in radar, which was just just a little point shy away from touching that upper circuit of 20% is VLS Finance. Here the company's board had approved a share buyback program which involved company buying about 26.3 lakhs of its equity shares. Buyback price has been set at 320 per share, 380 per share, which is about a 24% of a premium that we are looking at. So an attractive premium positioning is what we are seeing. Maximum buyback outlay, if we see, that adds to up to 100 crore or so, which showcases about 7% of the overall share capital position that is there for the company. Record date for the same has been set at December 12th. So do keep this stock on your radar as well. So these are a couple of news makers that are in focus today.
Very much, Anushi, for that. But speaking of the defense pack, they have been under selling pressure over the last 3 to 5 odd sessions. And Hiral, there was over the weekend, of course, there's a negative impact in the street coming in from HAL's aircraft fall. And also, we could say that there's a technical sell-off also happening.
There's a technical sell-off happening. Plus, when you talk about any of the wars across, that cool-off is something which is probably having an impact on the stocks as well, because your automatic order book which is there is okay, but an additional order that could be potentially coming in, exactly, that is something which will get impacted as well, right? Because none of the countries will be in a hurry to procure at that speed at which they were planning to. So probably this could be a sell-off that one should be watching out for, and whether it continues to see a sell-off or is it just going to plateau at these levels is what we have to wait and watch and see. But let's just quickly pull up a 1 month or even a 3-month chart when you talk about the defense sector as a whole, because that will tell you what's happened. In today, it's down nearly 2%. But see, in the last 1 month, the kind of gyrations that have come in, almost 2.5–3% downtake is what you've seen in the last 1 month. Let's just pull up a 3-month chart as well of India defense. And there you go. It did see a massive surge. It's still in the positive with gains of 3%. So don't be surprised if you see a plateauing effect coming in here. Hemant, with regards to defense majors, how are you looking at it? I know BEL has been one of your top picks in today's session, but apart from a BEL, all the other companies which are seeing a sell-off today, are you seeing support anywhere? Because CLSA is of the opinion that HAL is a strong buy the moment it sees a correction.
I'll just take 30 seconds more, Hiral, if you don't mind.
Sure.
If you look at the Nifty India defense, Hiral, like you just pointing out, so in this calendar year itself, it moves from 5,000 to almost 9,200. Markets have not made a new high. And now there's been a distribution happening. And like you said, there is a sell-off. I believe there could be some more sell-off. We are currently at 7,955. I wouldn't be surprised if we break 7,800, we come to 7,400, because it's corrective. It's moved too fast. It needs a time price retracement. In fundamental parlance, you would need valuations to play catch up. Coming back to HAL that you mentioned, okay, there has been relative strength. There's a range between 4,300 on the downside and 4,950 on the upside. There is a gap down today, which is not a good sign. Normally gaps get covered up within 4-5 trading sessions itself. So this week, if the gap doesn't get covered up, I think there could be some more pain to 4,300. So if I were to look to buy HAL, it would be only at 4,300 and not before that. And I would wait to see whether the support works. So everything is hunky-dory if you take a longer term view. But all these 10-20 time multi-baggers need a couple of years to correct. And the time of correction has still not happened here.
Nirav, the question actually, Hemant has only raised it and it has made my job easier. So the long-term perspective, what happens now for the defense space? It is hunky-dory as what Hemant had stated, but Nirav, what's your view on that?
Well, I think the defense firms have had a good run, and I think by the inherent nature, the defense contracts tend to have the non-disclosure agreement clauses. At the same time, there is a lumpiness in the contracts. Most of the firms which qualify for defense contracts, they have to go through a very, very rigorous exercise for the approvals. So it's not easy. It is a business where you have to spend at least a decade before you start seeing the results in terms of the financial performance. Case in point would be Bharat Forge, which started off in 2014 and really started getting the fruits from 2024 onwards. So I think most of the firms in this space have done their hard work or continue to do the hard work, and they will reap the benefits of that. Some of the companies are looking very exciting. For example, solar industries, how it has graduated from being a supplier of technical grade ammonium nitrate to makers of Pinaka rockets. There are companies like Data Patterns, which are doing quite well, their contribution to BrahMos. At the same time, we have Bharat Forge, which is doing exceptionally well as far as the advanced towed anti-gun artillery systems are concerned. So there's a lot of meaningful work which is happening. But at the same time, the unfortunate incident which we have seen in the case of HAL, Tejas aircraft, just shows that clearly there seems to be a lot of work which needs to be done. A lot of upgrades.
Nirav, thanks for that, for your views coming in. Thank you, gentlemen, Nirav and Hemant, for joining with us and giving your important views. We'll take a quick break. Stay tuned to NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
अरे और रहमान. सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
Welcome back to India Market Close. An interesting day of trade. 26,050 is what we were tracking in terms of Nifty 50. We were at the day's lowest levels, and I think right now as well we've broken that 26,050 mark, inching further lower. It's mainly support coming in from the banking majors. Let's just quickly look at the contributors on the screens and see where is that pressure further building up from, because initially it was mainly, that's Bank Nifty. If we can just have the contributors in terms of Nifty 50. Because that's what will tell us what's dragging markets lower right now. Reliance Industries, M&M, BEL, Bajaj Finance, these are a few of the other names that we should be watching out for. But Somit, clearly, this morning as well, when we were talking about the kind of action that we could expect in the markets today, the expectation was of sustainability. There is that cautious optimism that has continued to prevail as well. And the way markets changed direction on Friday's session, are you seeing something similar today as well?
Yes, similar move compared to what we saw on Friday. In fact, even if you look at the cash turnover volume, still 2 p.m., it was down nearly 11%. On Friday, it was down 5% compared to the previous day. So weak volumes is what we are seeing in the markets overall. And this might remain the case, at least till expiry is what I'm picking up. And some flows could come in the last half an hour, but that would be most likely related to MSCI. Around $200 million of flows is what is expected on the MSCI front. Okay, let's get in Amit Goel, Blue Oak Wealth. So firstly, to start off with, volumes are quite strong when you look at counters like ITI, Team Lease. Anything on the technical front that you're looking at here?
Let me just pull up the chart for ITI. This counter seems to display, spurts of very strong volumes with very strong price action. But if you notice the chart and the price action, these kind of spurts in prices and volumes tend to get faded out almost immediately. So a caution to any investors looking to enter into these news-based spurts counters. Kindly avoid from entering into them, or keep a very strict percent stop loss of about 2-3% if you really want to try and play the momentum on the upside in these stocks.
Siddharth, SBI card, that counter at one point of time today was up around 3.5% in trade, and this was largely on the back of the credit card data that came in for the month of October, which suggested that spending continued to remain on the higher side even post festive season. Stock is now down around 0.5%, could be because of market weakness. But how are you looking at a counter like SBI cards? SBI cards, Siddharth.
Yeah, right. So basically, if you look at some of these new age fintech companies, I think SBI cards, the consumer spending that had not picked up, and there was a hope that during this festive season we will see some recovery in terms of the spending. But I think the broader market is continuing to witness the pressure that we are seeing, and on back of that, the stock has seen some pressure of late. But overall, I would say that the consumption spending that is picking up. We are seeing the retail lending side, which was under pressure for last couple of quarters, even for the likes of Bajaj Finance, Poonawalla FinCorp, IDFC First. They are all showing signs of improving trend both in the credit offtake as well as in the asset quality. So I would also tend to believe that an SBI card in the same league should start seeing some improvement in numbers. But as I said, I think the current market trend, the broader markets is witnessing pressure, and hence the stock is down. Otherwise, I would gradually look positively towards the retail lending businesses.
Siddharth will focus on the retail lending business for SBI card that's coming in. But on to the next segment, the top gainers in the day's trade today. Mahima is here to actually give us all the details, and all the top losers on the other side. Joining us is Puneet, where they'll give us the flavor of the overall market. So start with Mahima. What are the stocks in your list today?
Right, so as Somit was mentioning, ITI is seeing strong volumes coming in. That's at the top of my list. The volumes are almost 50 times its 20-day average. The stock is sustaining well above the 20-day EMA at that 317 levels, and the stock has delivered. However, we've seen that in the past the stock has not delivered any gain when it comes to the overall chart YTD. The next one is Thangamayil Jewelry. Now, this stock has seen momentum since the time the company came out with commentary saying that the festive season is looking very strong and there is volume growth coming in. Trading volumes right now are 37% In terms of where the 20-day average is concerned, the stock has gained 66% in the past 52 weeks. The stock price crossed highs in October 2024 and then in November 25 as well. The next one is Polymed. The stock is trading 9 times its 20-day average. The stock has seen 18% decline in the past 6 odd months and trading around 200, trading below the 200 EMA at the 2095 levels. Lastly, Asahi India, the stock is trading at its all-time high and the stock is up 43% in the past 6 months. So these are some of the top gainers. Of course, no news flow per se, but buzzing in terms of where the volumes stand.
Okay, so interesting names which are buzzing in trade as we speak. In fact, Amit, let me come to you from the gainers list right now. Anything that you would want to bet on as a momentum play?
I'm actually trying to give you a contra play here, purely basis the price action on HAL, if you're interested. If not, then we can move to Shriram, which I think. Okay. So now if you look at HAL's price action, I'm sure we are all aware of the unfortunate incidents and our condolences to the bereaved family. But if you look at the price action purely from a technical standpoint, there has been a lot of buying interest from the lows of today's dip, gap down opening, and it continues to show strength and retain that strength. And this also comes at a previous support level, purely from a technical standpoint of about 4350, 4300 levels. So keeping a stop loss from a trader's perspective of 4300 levels and entering at the current level, we could look at initial targets of 4700 and dare I say even 4900 in the days to come. If the low is broken, then obviously the downtrend will continue and we should exit with our losses.
Okay, so that's a counterplay coming in on HAL. But we have Puneet who's still standing by with us. Puneet, you're tracking the ones which are losing in trade today. Which are the top losers that you have?
Well, something like a Jai Balaji, transformers and rectifiers amongst others are the key ones that are down in trade today. If you can pull up the stock, the volumes are up almost 4.1 times this 30-day average. Stock's almost down a couple of percentage points. But largely, it's been a negative day for Jai Balaji. When you look at the other makers also very quickly, you will see that volumes are thinning out for all these losers in trade today. Lloyd's Enterprises down volumes are at 0.8 times this 30-day average. Stock performance as well has been quite weak. And for Taril as well, it's down 0.49 times this 30-day average. And for transformers and rectifiers, even after the World Bank debarred the company from participating in further projects, but even after that has been removed, we haven't seen a recovery in that key stock coming back. So it continues to be down 5.4%, hitting continuous lows one after the other. So continue to have this one focus. The last couple of stocks as well, which are in focus, amongst others, something like a Garware High Tech as well. Very thin volume, stocks down almost 5.6% in trade, as well as revenue largely being flat for Garware Tech in the first half of FY26. And the last one is DCM Shriram. Stocks, the volumes again 0.64 times is 30-day average, but stocks down 5%. Not a lot of news flow on this in the recent counter, but H1 again has been weak for both DCM Shriram as well as Garware High Tech. So these are the 5 names that are in focus on the back of pressure in terms of the stock price performance, some on the back of volumes, while some have been impacted by fundamentals, the likes of Trill amongst others.
Thanks, Puneet, for that. What's interesting is that when we do this segment, which is the top losers or the top gainers, usually the volume trend is in double digits. Today is a time when it's probably 0.5 times, 0.3 times, and that actually tells you the story that in spite of this big moves in terms of stocks like this, the volumes are extremely thin, as Somit was pointing out.
And even the mid-cap, small-cap indices are at the day's low. You can just pull up the mid-cap 250 index, small-cap 250 index, no major support coming in. Feels like the market is being dragged by just a handful of stocks, if you look at the Nifty. But there's also a handful of stocks which Somit gets in for us in our special segment, Heard on the Street. Somit, what are you gathering?
Be quiet. Well, multiple stocks in focus. Firstly, it's Glenmark Pharma. Now, what dealers are indicating is that there are buy flows on PMS desk in this count, and they're expecting some positive news flow regarding one of the key drugs to which the company is a supplier, and also related to its US facility that is expected to come in. When it comes to prime focus, there are buy flows on large HNI desks. Dealers expect some positive development on this counter as well. For Karnataka Bank, that stock was up at one point of time around 7.5% in trade. and it has been bucking the trend overall in the mid cap and the small cap space if you look at. And there are positional buy flows on the PMS desk is what dealers have indicated for this counter as well. And lastly, when it comes to Hindustan Aeronautics, now that counter is seeing selling pressure owing to the Tejas incident, but multiple dealing rooms have suggested buy calls to their clients for the month of December specifically. So they are expecting a turnaround from the current levels when it comes to Hindustan Aeronautics. In fact, the stock has already recovered around 1.5% from the day's lowest point. It was down around 4% at one point of time. So some buying action seen at lower levels when it comes to Hindustan Aeronautics.
Interesting names there. I think Karnataka Bank is one that I would want to pick up over here as well. Good moves coming in terms of today's day of trade, 6.5% up move. Siddharth, your view with regards to where Karnataka Bank goes and the kind of support that banks are giving markets in today's session to some extent, where would you place your bets?
So, Hiral, if you look at the mid-sized private sector banks, I think that is something that has been showing a lot more resilience after some of the deals that has happened. So I think there is a lot of buzz around the consolidation expected around the mid-cap private sector banks. And I think even if you look at the results, they have shown much better improvement in terms of growth, be it credit growth and as well as the NIMs, which have been major concern for the large private sector banks. So while Karnataka Bank, we don't have in coverage, but I think within the mid-size private sector banks, what we like a Federal Bank, which is our top preferred pick there. We also like IDFC First Bank, as I said, the retail lending that is picking up, and which is where IDFC First can has been started reporting good numbers. And the third one is AU Small Finance Bank. It is only among the few small finance bank which has now got a full commercial license that will lead to higher growth opportunities. And I think the stock has consolidated a lot. The valuations have come off from its highs. And with the improvement in growth next year, we are expecting earnings growth in excess of 30%. We see decent upside in AU Small Finance Bank as well.
Right. Around $200 million of flow is what is expected in the last half an hour of trade, largely owing to the MSCI inflow. Now, these changes were already announced a month back. It's just the inflow, passive inflow and outflow that will happen in trade today. So, stocks that one should watch out for: Fortis, Paytm, GE Vernova, Siemens Energy on the back of positive flows, while Tata Elxsi and Container Corp on the back of negative flows. Few other large cap stocks that could also see a higher weightage here is Asian Paints, Apollo Hospitals, Lupin, SRF, flows of anywhere between $30 to $100 million on these counters, what is expected by the street. And when it comes to stocks like Samvardhana Motherson, Dr. Reddy and REC, they could see outflows of anywhere between $47 to $53 million. Amit, any stock that looks strong on technical charts, be it Asian Paints, Apollo Hospitals at current levels?
So Asian Paints, after good numbers, has sustained about 2800 levels for the last few trading sessions and has been in this range of 2838 and 2920. So I believe that we are forming a base, a fresh base here for the next leg up. So any continuation here, maybe a little bit of accumulation that one can look at doing from a slightly longer term perspective, maybe a few weeks trading perspective, keeping the low of 2800 as a stop loss. One could target Asian Paints, and we could even target and see about 3000 as a next target level on this counter. This, I believe, has a trend in place and is even counteractive to the broad weakness that we are seeing in the broad indices like Nifty and others.
Coming in the Asian Paints counter, this is from Amit. But IT space is something which we'll be focusing on. After a prolonged underperformance, the stars are finally aligning for Indian IT stocks as the sector enters a more favorable phase. In our bull versus bear segment, we break down for Infosys what's working and what's not. Jasmeet, can we say that the good times are here for IT stocks, or is this just a mere up move?
Well, that's still a wait and watch for complete IT pack. While today in bull and bear we have Infosys. Starting off with the first bull case, we see that Motilal Oswal has upgraded the stock to buy from neutral, showing a positive momentum and up move in the stock. But on the other hand, you look at the bear case, the growth remains around 5.5% in FY26. It's the expected range. They still remain low single digit, while that's something to watch out for. If you look at the other bull case, we see that the rupee weakness is something that's supporting the margin. And as the rupee fell today, that has led to the overall IT pack boost in trade. But on the other hand, the fundamentals remain the same. The business is still the same. It's just the rupee which is weakening that's supporting the company grow. And even the Q2, we had seen that the Q2, most of the IT pack was beaten estimates, but that was again on the back of rupee depreciation. If we look at the third bull case, we see that Infosys is the key beneficiary when it comes to AI spending, as the company is seeing up move in terms of AI spending as well as the AI structural movement. But on the other hand, the discretionary spending for tech budget still remains tight in a lot of other pockets. While though the Fed rates have been cutting, we saw in the previous month, but still the discretionary spending from the US is still weak. If we look at the other bull case, we see that the IT valuations are attractive at this point of time, given they are low at a 5-year average. But on the other hand, we look at the bear case, the sector is a matured sector. The structural up move in the growth is slower for this particular company, given that there's a lot of competition and a very tight margin space. If you look at the other bull case, we see that IT is currently in 10-year low decay when it comes to the IT weight in the overall Nifty, which boosts the risk-reward ratio. On the other hand, the bear case would be the low weight signals basically underperformance and pressure on the stock movement, as the overall IT pack is down 18 to 19% Y20 basis. If you look at the last bull case, we see that the company has 37 buys with the top target price of 2,150, which is an upside of 38% from year on. On the other hand, we said that the lowest target price is set at 1,470. You see the huge variance coming in, and that is on the back of weak sectorial movement and weak trend in the IT, which we have been seeing from past few quarters.
Siddharth, coming to you, obviously Motilal came out with this note today in the morning on the IT sector. Multiple positives is something that they have highlighted. But as per you, what has changed today? I understand that rupee is depreciating, valuations are low, but these were the case, I believe, at least 15-20 days back or 1 month back as well.
Definitely, I think, Sumit, what looks like is that, yes, we are a little bit ahead in upgrading the sector, but we believe that while Q3 could still see those furloughs-related slowdowns, but I think market will now start looking ahead in terms of the outlook. That is clearly what we believe that the near-term demand softness is already in the price. And beyond Q3, what we look at is over the next 3 to 9 months, which is essentially the H2 of CY26. We believe that the AI projects scales beyond the pilots, deal activity improves, bulk of the infrastructure setup, I think that has already been done. Now the transition, we are expecting the transition from hardware heavy investments to robust services demands, where the Indian IT players are positioned pretty well, especially if you look at something like an Infosys, where the Topaz is perfectly best suited. We have the other ADMs which are there for Infosys, clearly aligning to benefit out of this services demand from the AI-led investments that has already done. So again, what we believe is that Infosys, with its Topaz suites of AI services, full stack app service capability, would be a key beneficiary of the enterprise-wide AI spends. And at current valuations, we believe that the upside risk clearly outweigh, and hence we have upgraded the sector as well as Infosys to a buy from a neutral rating. We have a target price of 2,150, giving almost 38-40% upside from current levels on Infosys.
Okay, so that's the target price coming in on Infosys as well. But moving on, the Indian Navy has actually scripted another milestone, and this is in its indigenous shipbuilding journey with the commissioning of Mahi at the Naval Dockyard, Mumbai. Now, the commissioning of Mahi marks the arrival of a new generation of indigenous shallow water combatants, sleek, swift, and resolutely Indian. This has been built by Cochin Shipyard Limited. Kochi Mahi represents the cutting edge of India's Atmanirbhar Bharat initiative in naval ship design and construction. NDTV's Saurabh Gupta brings us the report. Let's quickly listen in.
INS Mahe, the first of the Mahe class of anti-submarine warfare shallow water crafts, has been commissioned into the Indian Navy by the Chief of Army Staff, General Upendra Dwivedi, this morning at the Naval Dockyard in Mumbai. Now, apart from the importance of this particular ship, which is 80% Indian components, and also the fact that it's a shining example of India's Atmanirbhar Bharat idea and goal, the ship itself is important from a strategic point of view, and there are two reasons. And this particular commissioning ceremony is sending out probably two messages. One, of course, is the fact that the presence of the Chief of Army Staff at the commissioning ceremony of a naval ship marks also the importance of synergy and jointness between the Army, the Navy and the Indian Air Force. And with India discussing theatre commands, with India also looking at joint synergy that will exist between the forces with the theatre command, this is a shining example of coordination between the three wings of the military with the presence of the Chief of Army Staff, General Upendra Dwivedi. Also, another important aspect of the commissioning of this particular kind of ship, which is primarily an anti-submarine ship, is also looking at what the possibilities and the threats are going to be in the future, especially with the prospect of Pakistan acquiring the Hangor class of submarines. The Indian Navy, especially the Western Naval Command, will have to boost its anti-submarine capabilities, and this modern anti-submarine ship is in that direction, and the commissioning of this ship marks the beginning of an enhanced anti-submarine capability of the Navy, which is also homegrown and proudly Indian. And like Vice Admiral Swaminathan, the Flag Officer Commanding of the Western Naval Command, the Flag Officer Commanding in Chief of the Western Naval Command, said that this ship is Indian in soul. And that's also something that India, the Indian Navy and the Western Naval Command can be extremely proud of.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
अरे और रहमान.
Small cap is the space where we are seeing most of the action given the strong selling pressure when it comes to the small cap stocks. Let's get in Anushi to understand which are the key stocks that have been buzzing when it comes to the small cap segment.
So a couple of stocks that we've picked out for today. First one on the radar is Mechanic Cloud. Now, if you look at the volumes, 11 times 20-day average is what we are seeing. While Sika Logistics, we are seeing about 7 times the volumes compared to its 20-day average. Firstly, about Mechanic Cloud. Now, the stock has seen subsequent correction in these last 5 sessions, but it isn't just about the business. It's in IT services and software development along with consulting. In the second quarter, their revenue and net profit remained flat, but the company was in focus after the board approved a fundraise of up to 500 crore. Coming to Sika Logistics now, this stock has seen correction as well over 6 months, and year to date also if you see 39% is the kind of downtick that we've seen, but today locked in an upper circuit. Now the company operates an integrated logistics solution provider, and company's arm has received railway approval to start operations at its new Gati Shakti cargo terminal is what we are looking at. So these are the 2 counters in focus in terms of where the small cap action is concerned.
Thank you, Anushi, for that roundup when it comes to the small cap segment. Siddharth, coming to you on Swiggy, that stock has seen a sharp up move. It's up 6% despite the fact that the labor code implementation could be a bit negative on the margins for the company. That stock has moved up 6%. Anything on that?
If you look at the entire e-commerce space, quick commerce space, I think post the quarterly results, there was some pressure, especially given the aggression by Zepto again in terms of discounting. But I think the overall outlook for Swiggy as well as Eternal remains pretty strong. If you look at Swiggy, the company is transitioning towards profitability supported by operating leverage, efficiency across both food delivery as well as the Instamart. What we are also clearly witnessing is that unlike the past where there was a very aggressive capex, this time the capex is much more measured as well as calibrated. So the losses would not mount to that extent what we had seen. So a disciplined way of capacity expansion, especially in the dark stores, that is what we are seeing. So the other challenge was specifically for Swiggy was the fundraise that the company had announced of about 10,000 crores, which kind of made the street a bit jittery about so much of cash being raised and what kind of cash burn. But I think at the current valuations and looking at the strong growth over the next 2-3 years, the quick commerce is something that we are very positive on. Swiggy particularly is one of our preferred picks there. At the current valuation, we have a buy rating and a target price of 550. We also like Eternal in the same space, which has been the market leader and continues to do well as well.
And let's pull up the Reliance chart. Amit has just picked out this stock. We're seeing a significant volatility in the counter, and our stock is at the day's low level. Amit, a quick check on the technical levels for Reliance. It's at around 1530 odd levels. Of course, this monthly expiry play is also coming into it, and technical play is also in focus. But what would be your view on a short-term basis for Reliance?
Yeah, so I've been maintaining a buy call on Reliance since 1420 breakout levels. And multiple times I've said the same thing on the channel, and it's always been a buy on dip for me. However, my target were around the previous resistance levels, which is currently where the market is taking some correction. So anybody who has entered at earlier levels of 1420, 1450 levels can look to take some profits off the table, because I believe the recent leg up in this counter has come to a medium-term halt, and any dip towards 1500 levels could give us another opportunity to re-enter in this counter. Anyways, this entire move of the last few of this year has actually been in fact banking-led and the large cap-led, and Reliance has been on the forefront in the last 2-3 months. So I continue to be positive, and it's a buy on dip for me.
A buy on dips on that one. In fact, let's just pull up Reliance Industries on the screens. And as Soumit was pointing out as well, I mean, the selling that has come in right now is on the back of the MSCI rejig, a sharp sell-off in terms of Reliance Industries, and that's having a bearing on the markets as well. To this, let's just pull up Nifty 50 on the screens and you'll see the kind of cuts that are coming in. 1534 is where Reliance is trading at. There you go. Can we just have both the charts of Reliance Industries and Nifty 50? I think both of them are kind of mirroring in the last couple of minutes of trade, and that'll tell you the story, the kind of impact the stock is having. But very quickly, Amit, a quick question on Reliance Industries. Would this be an opportunity to buy today with the fall that we are seeing, 1534 in terms of levels?
Now, I see, if you're a fresh entrant, I'd rather wait till it retouches around 1500 levels, because that would also be a technical support from both the derivatives data as well as from a price point. Not at the current levels. If it dips, let it dip another 30-35 points, and then that would be a good place to enter.
Okay, so that's with regards to where Reliance Industries go. 1500 is a good level to enter. That's the word coming in. And there you see the charts with the kind of sharp correction on both of the Nifty 50 index and Reliance Industries. But moving on, Bata is an interesting one to watch out for, because apparently the last couple of quarters, if you see in terms of the performance, it's actually giving a shoe bite to the investors. That's what it seems like. Let me head across to my colleague Mahima to tell us more in terms of what's really not working. Mahima, over to you.
16 quarters of straightly, missing estimates. Now, this is, of course, the data as per Bloomberg, as per what Street was estimating versus what they've come out with in terms of their top-line growth. 9 quarters of top-line growth below the 3 to 4% mark, plus the peers for something like a Campus, Activewear or Relaxo have done exceedingly well as compared to how top-line growth for Bata has been. ROC has also been on a declining trend. Now, if we take a look at the past 16 quarters as to how the revenue growth for the company has been versus the estimates in terms of misses. This quarter, of course, there was a GST impact, but a 7% miss versus what the street was expecting. So the range of this missing of estimates in the past 16 quarters has been in that 0 to almost 7%, which has been seen in this quarter as well as in quarter 2 FY24 and quarter 1 FY24 as well. Now, why is this miss in terms of where revenue stands? Of course, this quarter being GST, driving a major force there. But overall, if we take a look at how Bata has done in the past 16 odd quarters, they're making a lot of changes in terms of where their products are concerned, making a lot of changes in terms of their offerings, making a lot of changes in terms of their stores as well. But competition has been heating up in this space, be it the organized space or the unorganized space, plus in terms of new generation that's preferring more newer designs. And I think that overall what analysts believe is that Bata is not being able to cater to that. Collection in store is also not attractive as per where the competition stands right now, and online sales for them has been a concern which has not been picking up. In terms of how it is done versus its peers, 9 quarters of top line growth but less than 4%, and growth is much lower than peers. Let's take a look at that as well, because overall if you take a look at how peers have done, Quarter 2, Bata saw a growth of just around 4% versus that of 16% for Campus Wear and Metro at around 11% mark. So, and in the past quarters also, if we see, all of these counters, that is Campus as well as Metro and even Relaxo for that matter, have grown in double digits versus Bata seeing degrowth for the past 4 quarters straight, just Quarter 2 being in that positive front. And overall, earlier also, if you take a look at how these peers have done, even during a phase where they were seeing a slowdown in terms of demand, the peers have outperformed Bata, and Bata has not been able to give top line growth even near to that 3 to 4% mark. Lastly, in terms of where the overall, and of course, what are the peers doing different? One, they're catering to the Gen Z now, they're catering to newer designs, newer format of stores as well. And plus, there's also online sales, which is picked up for something like a Metro Brands, which has not been the case for Bata. In terms of ROC, the last one, it's been on a declining trend from a 20% in March 23 to 19% to now 15% in March 25. And we'll have to see, because a lot of changes they've been doing in the stores as well as to how this pans out going forward. So this is the overall view. And lastly, in terms of where the Bloomberg estimate stands, because right now you have just 1 buy call on Bata, 6 hold calls and 13 sell calls with 0 return potential. So even analysts are not very bullish right now when it comes to Bata.
So, we'll take a question on Bata, but very quickly, Somit just noticed that we are already below that 26,000 mark yet again, and that's the story of the markets in today's session. Let's pull up that one on the screen. 25,954 is what you're staring at the day's lowest levels. Anything that Sharad and Somit you would want to add, because we are again closing below that 26,000 mark?
The fresh fall is largely led by Reliance. It can be clearly seen on the chart. There was some MSCI selling that was expected. But given the fact that the volumes are so low in market today, this selling could not be absorbed, and that's the major reason why we saw that sharp fall coming in for Reliance Industries, which also led the market below the 26,000 level. But Amit, coming to you on Bata, if you look at the charts of Bata, it seems to be finding some support around the 1,000 rupees mark. How are you looking at this counter, Amit?
Yeah, I agree that it is see, Bata has been a rank underperformer and for a very long time. So, given the context of the market, which is, fairly flat to negative for the time being, any fresh pickups in Bata from a higher time frame perspective does not warrant an entry right now. The movement that we have seen on the reversals on the support side for Bata at 1,000 levels also needs to show some more evidence before we actually, consider taking a fresh counter trend trade in a rank weak counter like Bata. So I'd rather stay away from such counters given the overall context of the market.
Siddharth, on Bata, every quarter there is some or the other thing that goes wrong, and the company has not performed for a very long time that I remember. How are you looking at this counter? Do you expect a turnaround, and then is it a value buy at this valuations?
I think the numbers, Mahima clearly highlighted past several quarters, they have reported weak numbers. I think they continue to face sluggish recovery. Profitability is still below the pre-COVID levels, despite a lot of efforts by the management to rejuvenate the brand, distribution. I think even from the current levels, what we are expecting a very modest revenue growth of about 4% and a PAT CAGR of 10% over the next 2 years. And with that kind of growth, I think valuations, even after this current fall at 35-40 times, I think is pretty high. Till the time you don't see any earnings recovery, I think the street would still remain negative. So currently we have a neutral rating and a target price of 985. So we don't see upside in the near term.
Major upside coming in for Bata as per Siddharth. But let's move on. The rupee slide to a record low is being driven by a cocktail of global and domestic pressures. Risk-off sentiment across international markets has intensified, and once the psychological level of 89 to the dollar was broken, speculative activity in the currency market picked up sharply. Traders now believe the RBI may step in closer to the 89.5 mark to contain the volatility, but there is a potential stabilizer on the horizon. Puneet, could you just give us the entire impact analysis for all the sectors or the stocks with the rupee depreciating and coming at its record low levels?
Well, thank you for that. We definitely saw the RBI come back in action at the end of last week and puts in focus two key sectors that get the benefit of the rupee depreciation, while some do get impacted because of that. The first one is largely IT, and we've seen that impact always. The 1 to 3% depreciation on IT, versus the US dollar, the euro, and the pound favors the sector. The higher depreciation also usually leads to better margins for the companies in any set quarter, and that can be used to increase their competitive positioning in the global market versus the other IT major players. You also see companies with a higher offshore employee mix get that benefit in terms of depreciation. So we've decided to have a couple of key differentiation between the companies. When you look at companies like LTI, Mindtree, Wipro, Sagility, as well as Coforge, they get a benefit of the rupee depreciation because of the higher exposure to US dollar, euro, as well as pound revenue of more than 80% across geographies, whilst companies like Persistent, Indegene, Emphasis, amongst others, get that benefit because of the higher US exposure in terms of their revenue. When you look at the oil and gas space, it's not as simple as the IT players because there are mixed reactions and impacts across sub-segments while a positive impact is seen in upstream companies. City gas distributors is one of the sector that gets majorly impacted because of the rupee depreciation. So when you look at the city gas distribution companies, brokerages estimates that generally a 1 rupee increase versus the US dollar gives a negative impact to Indraprastha Gas EBITDA by almost 4.9 to 5%, while the number is roughly 2.6 to 2.8% for Mahanagar Gas and 1.7 to 2% for Gujarat Gas. When you look at the other key aspect, which is the upstream companies, those get a huge benefit as well, because companies like Oil India as well as ONGC, because of the exploration projects, the selling and the buying is in USD, so they get minimal impact here and also get a positive impact because of that. For Oil India, it's slightly more sensitive compared to ONGC, a 1.4% positive impact, while for ONGC is roughly around 1.2%. We also see some other companies like Petronet and Reliance also get that benefit, but minimal given the lower exposure as well. But overall, we see some key winners in terms of the IT space, while for oil and gas, it is the upstream one that do get the benefit. And that's the profit intelligence segment, getting in some perspective of rupee depreciation on all of these sectors as well as companies.
Thank you very much, Puneet, for that. I'd like to just point out Apollo Tyres. There's a significant spike coming in the stock itself. Stock is up more than 4% in the day's trade. Siddharth, the tire trade, which we are talking about now, it's up almost 4.5%. You're seeing that there's a buying coming in this tire segment. Positionally, how does it actually look? Because there are some important factors. The crude is benign and the replacement demand is also going up. How will you view this tire space, and which stock would be having a good risk-reward ratio currently?
Definitely, I think if you look at what has happened in the past couple of months, the auto sector has seen a lot of improvement in terms of sentiments, especially after the GST rate cut. Plus, we have seen record sales during the festive season, be it at the time of Navratri and then later towards the Diwali festival. On back of it, we are seeing improved demand from the tire sector as well as the benign rubber prices. That has been helpful. So within the tire space, what we like Apollo Tyres, where we have a buy rating and we have a target price of almost 600 rupees. We also like Scient, which has been consistently reporting strong numbers. If you see, Apollo Tyres reported a very healthy Q2, both margin expansion in India as well as in European business. The softer rubber prices, improved mix, that help the overall profitability. We believe that the medium-term outlook remains positive. We are expecting a robust revenue as well as PAT CAGR, and valuations look attractive for Apollo Tyres. And again, as I said, we maintain a buy rating with a target price of 600.
Okay, so target price of 600 in terms of Apollo Tyres, that's a strong one coming in there. Amit, at this hour, your BTST, STBT calls?
Yeah, I would like to go for City Union Bank, banking, financials and IT. IT being a contra play and banking and financial being a momentum play are the two pockets in the market which have been performing and keeping the market afloat. So most of the banking sector mid-cap stocks have already seen a sharp run-up, like the case of Canara Bank, Indian Bank and others. City Union Bank has also been moving up very sharply, and after a dip in the last 3-4 sessions has shown a sharp recovery today. So keeping a stop loss of about 260, entering at around the current levels, one could target for another continued up move of about 10 rupees here, and the target would be 280.
Okay, so those are the BTST, STBT calls that we're talking about. Auto is one sector I want to talk about as well. You have Eicher Motors, Bajaj Auto, both of these counters are seeing some good moves in today's session. Apart from that, on the losing end, you have a BEL, JSW Steel and Max Healthcare, which are losing out. Siddharth, with regards to auto, especially the two-wheeler pack, you're seeing some good buying interest that's coming in today's session. How are you looking at them? And then in the next couple of trading sessions, you will see the auto sales numbers that will trickle in for the month of November as well.
Yeah, Hiral, I think as we just discussed for the tires as well, the two-wheelers is something that we are very positive on, especially after the GST rate cut. I think the entry-level two-wheelers, that is something which we are seeing significant revival in terms of growth. What is also supporting is some of these players are now well entrenched into the EV two-wheeler space. So, for example, TVS Motors is now on a monthly basis the leader in terms of two-wheeler EV two-wheeler sales, and that is consistently doing well. So clearly, our preference is towards a much more diversified business model, and companies like TVS Motors, which is a preferred top pick within the two-wheeler space. Followed by a Hero MotoCorp, where valuations are comfortable. The recovery, rural recovery is there. Monsoon has been pretty good, and interest rates have been lowered this year. So all put together, we believe that going forward, Hero Moto, which had been under pressure and is trading at a significant discount in terms of PE compared to some of the other leaders, we believe that that discount is unwarranted, and that could see significant up move from here on as well. So Hero Moto, we have a target price of 6,500.
That coming to you quickly on Indigo, last sharp fall that we saw a few minutes back. Yes, Indigo stands to lose out given the fact that rupee depreciation will increase the overall cost for them. But at the current valuations, given the fact that the Q3 number is expected to be on the stronger side, given air traffic is expected to be better, how are you looking at this counter?
So, Sumit, we are very positive on Interglobe Aviation. I think if you look at the overall view in terms of Q3, as we are heading into the holiday season, the festive season, and we have seen the prices going up. Crude oil prices have remained benign, so that is also another key positive factor. One of the biggest growth driver for them is the consistent capacity addition. Every week they are adding a new aircraft, and luckily for them, their aircraft's orders has been placed with Airbus, which is not facing any supply chain issues in terms of engines or otherwise. The company is expanding both domestically as well as in international markets, and that in while domestic market they continue to remain market leaders with more than 60% share. I think the global market expansion, that is where the dollar rupee hedge will come in, where the earnings will also be in terms of foreign currency, and that is a growth that we continue to like. So overall, we see a steady 17-18% earnings growth over the next 2 years, and we believe one can definitely look at Indigo from a 2-year perspective. We have a target price of 7,300. We remain very positive on Indigo.
One more question is there for the Rubicon Research. This is another stock in focus, and we had a chat with the management in our show KYC today, and the key takeaways include that the nasal spray base, that's getting a faster approvals. They are doubling their portfolio every 2 years, and of course the management has been bullish when it comes to the 23% margins going ahead. Stock is days low, down or 3% Rubicon Research coming from Motilal Oswal. Siddharth, if you could just give us the views on the company, and in this dip, will this be a good time to buy the stock?
Yes, sir. I think stock had seen a significant run-up post the Q2 numbers, and as you rightly said, there is significant growth drivers, including the nasal spray, where they have recently got approvals. So I think what we like is that the management's focus on discipline, R&D, compliance, the specialty product mix, which provides structural growth opportunities. And what we are forecasting is about a 30% revenue and a 44% net profit CAGR, backed by the strong R&D execution, how high commercialization rates, and also the fact that the company continues to remain focused on the specialty product portfolio that continues to expand. So pretty strong name in the pharma R&D space, and in the current environment, the good part is that the compliance is pretty strong. The regulatory approvals are there. I think the correction is a good opportunity to enter. We had seen the stock run up to almost 740, 750 levels. So at 650 odd levels, we believe it's a good buy. We have a target price of 780, so giving a good decent upside from current levels.
Rubicon Research, there's Tata Elxsi, which Somit is going to talk about, but one quick view I want on a BSE. The stock is up nearly 15% in the last 1 month. Siddharth, are you seeing any further steam, though there is selling pressure today? What's your view?
I think, Hiral, I think BSE, the clarification from the both the SEBI as well as the Finance Ministry in last couple of weeks about the continuation of the weekly expiry, that supported the sentiments for BSE, especially in which had been a key overhang. I think at current prices, I think once the stock stabilizes, we could see further upside, because the cash volumes are a little bit down as we see in the market. The broader market is not participating. So Q3 may not be that strong, and I think a little more consolidation could be in the offing. But purely from a long-term perspective, 1 year plus perspective, I think the capital market theme continues to do well. And if the weekly expiries on the derivative segment that continues, BIC will be a major gainer. So from that perspective, we like the stock.
Tata Elxsi is another counter that remains in focus. Strong volume action. This is largely owing to the MSCI selling. The stock has also fallen sharply, 3% down in trade. Amit, any technical views on Tata Elxsi?
Yeah, I'm just having a look at it. So I guess around 4,800, 4,900 would be the levels from where it has given a recent uptick, and the trend is very, very down. It's a weak stop, and any support, if it sees around 4,800 levels, 5,000 levels, is where one could look at picking it up. But the trend continues to be weak, and given the context of the market, I do not see any strong recovery at the current levels.
Thank you very much, Amit and Siddharth, for taking out the time and giving your views on the technical and the fundamental perspective. Looking at the markets, an important sharp sell-off coming in the last 90 odd minutes, and we see Nifty going below the 26,000 levels, and Nifty Bank also, that was up almost 0.8%, but see the downtick coming in, that's also coming in the red. That means a sharp sell-off coming in. Of course, Reliance was one of the main key contributors where the sharp sell-off was there. Let's see the stocks in the heat map for Nifty, and we see largely the IT names and select auto names doing well, but on the red side we have metals, we have BL from defense, where the reds have become on the higher side. Let's look at the sectoral moves where things have actually moved. Only the IT space has managed to stay in the green, entire sea of red coming in, big selling in the metal, realty and the defense counters. Also, let's pull out the advanced decline ratio, what the broader indices are suggesting, and largely you see the ratio now it's moving up to almost 4:1 when it compared to bears versus bulls. Also, the mid cap 250 and the small cap index, almost all of them are closing near their day's low level. The volumes are drawing up when it comes to the broader indices, and of course the MSCI adjustments and expiry ending is also impacting the markets. BSE 500 contributors, IT, ACC, RVNL, these stocks are buzzing in trade on the higher side. Lower side, if you look at it, Orient Electrics, Raymond, DCM, Shriram, they see some selling pressure coming in as well, but the volumes are drying up for the broader indices. Also, let's see what you should be ready for the key data for tomorrow, where our eyes will be the shares will be exiting anchor lock-in. That's go digit 20% tomorrow, so that counter is something which we'll be looking out for. Important board meeting, environment infra, there's a fundraise going to happen, and also interestingly lot of data from the Fed would be coming this week as well. So global cues and domestic cues, they will be in focus as tomorrow we get Nifty's expiry. So that's it for India market close. Stay tuned to NDTV Profit. Up next, Himangshi gets you market buzzers.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The markets move fast.
And so should your portfolio. expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. First up, let's see how the markets have fared today. So benchmarks started the week on a weak footing. The Nifty slips below 26,000 levels to shut shop near the day's low. The Sensex sheds more than 400 points. The advanced decline ratio was tilted in the favor of the declines. Now let's also look at the sectors. So most sectors have shut shop in the red, with defense and realty leading the losses. Metals and energy were on the back foot. Meanwhile, if we talk about the only shade of green on a sectoral basis was IT. So that was also aided by a weaker rupee and multiple triggers. Sectoral picture tilted sharply in the favor of red, with just one gainer and a bunch of sectors that have, gave up gains towards the end of the session. Viewers, India is heartbroken as our beloved Dharampaji, the man whose warmth lit up the screen long before fame found him, is no more. The 89-year-old legend who gave Hindi cinema its gentlest hero and its strongest man has passed away today in Mumbai. The towering 65-year career over 300 films, from Satyakam to Sholay, he wasn't just an actor, he was a feeling. A softness wrapped in strength, a hero who has shaped generations. He had been unwell for some time, in and out of hospital, before the family brought him home earlier this month. Mumbai police have confirmed his passing. Tributes are pouring in from across the industry and beyond as fans reflect on his unforgettable screen presence, versatile performances and also personal warmth. Now, viewers, let's look at some corporate action there. Hindustan Aeronautics is in sharp focus after a fatal crash involving the LCA Tejas at Dubai Air Show. The Indian Air Force has confirmed that the accident and the loss of the pilot. This is the second Tejas crash in nearly 24 years. The incident has raised fresh questions over the jet's export potential, especially as exports currently contributing just over 1% of HAL's revenue. So the company, however, maintains that the crash is an isolated case and has no bearing on its operations, finances, or even the future deliveries. Next up, we have HG Infra and Kalpataru projects, and they are teaming up for a big metro order in Maharashtra. The joint venture emerges as the lowest bidder for a contract worth a little over 1,400 crore rupees. So the project covers more than 20 kilometers of elevated metro viaduct, and also the work is to be finished in about 3 years. So in this partnership, Kalpataru takes the larger share while HG Infra holds the rest. Chitranjan Locomotive Works cancels its Loco Kavach system order that was earlier awarded to the CG Power's arm CG Tronics. So the cancellation comes because supplies were not started within the required timeline. The order had been issued last November, and also today's move raises fresh questions around the execution delays at the vendor level. Viewers, NBCC picks up fresh work orders worth about 70 crore rupees from the National Institute for Empowerment of Persons with Multiple Disabilities and the National Horticulture Board. So the new win adds to NBCC's already strong order book, which stands at over 1.2 lakh crore rupees as of September. Rail Vikas Nigam emerges as the lowest bidder for a rail project in Lucknow valued at roughly 180 crore rupees for the Northeastern Railway. So the work is to be completed over 2 years, and this only adds to RVNL's already sizable order book of around 90,000 crore rupees. Dilip Bilkon, if we look at, has emerged as the lowest bidder for a major NALCO contract valued at about 5,000 crore rupees. So the work covers EPC development for the first few years and long-term mining thereafter. So this wins further strengthens Dilip Bilkon's order book, which already stands close to 18,500 crore rupees. Now let's look at some brokerage notes. So Nomura has initiated coverage on IKS Health with a buy rating and a target price of 2,000 rupees. The brokerage calls the company a strong play on the fast-growing US healthcare outsourcing market. It says that IKS offers an integrated tech-driven platform and also maintains deep relationships with large healthcare clients. Nomura expects revenue to grow 16% and also EPS to rise 32% annually through FY25 to FY28. VLS Finance has confirmed its board approval for a new share buyback program detailing the size and key pricing mechanism. So the company plans to acquire 26.31 lakh equity shares. The buyback price is fixed at 380 rupees per share and a price point which represents a 24% premium over the stock's last trading price. So the total cash outlay for this program will be 100 crore rupees. This maximum size accounts for 7.7% of the company's total paid up capital. This is eligible, for shareholders, and they must also note the critical record date for the program, which has been set for December 12th. Viewers, Lupin is in focus after its Goa manufacturing unit has received 7 regulatory observations. So this follows an inspection and also, the places, the facility under which this increased, scrutiny is there. So, however, the company's immediate US business growth is expected to remain shielded from its development. The company notes that its crucial growth products for the US market, including generic versions of high-value drugs like tolvaptan and Gispirivia, I beg your pardon for the pronunciation, and also mirabegron and albuterol, and they are excluded from the Goa unit's offerings. Lupin's management has already designated the Nagpur unit as the primary facility to handle the future manufacturing needs for its expanding US business, suggesting a strategic de-risking of its core pipeline. So the market will now watch for the company's action plan and also remediation status for the 7 observations at the Goa site. Viewers, Tata Consultancy Services has been hit by an unfavorable ruling from the US Appeals Court, which has upheld the damages of $194 million, which is equivalent to approximately 1,720 crore rupees. The ruling confirms an earlier district court order in a long-running case involving the alleged misuse of confidential insurance software information belonging to Computer Sciences Corporation, or the CSC. So critically, if we look at the appeals court confirmed that the company remains liable for the full damages amount. The court also ordered a reassessment of an existing injunction related to the case. Viewers, the outlook for Infosys remains mixed as analysts balance potential upside against structural headwinds. While the recent upgrade to buy by MOSL highlights benefits like rupee weakness and also aiding the margins, growing enterprise AI spend and historically low valuations, concerns persist over the low single-digit revenue growth, also constrained discretionary tech budgets and the mature nature of the IT sector. So brokers have target price span wide range from around 1,400 1,570 rupees to 2,150 rupees, and this is reflecting the differing views on risk and reward. UBS has kicked off coverage on Shell Engineering with a buy rating, citing the company's compelling mix of high potential, high growth and high optionality in its specialized manufacturing segment. So the brokerage sees multiple levers for growth, indicating the potential for a positive surprise in the company's performance ahead. A key factor which is driving this optimism is the company's strong positioning for the potential launch of generic semaglutide, which is a high demand, high value product. Also, UBS expects the company's traditional consumer and industrial segments to deliver steady growth, and this is providing a foundational stability to the overall business model. So the note underscores Shell Engineering's increasing capability to capture the high-value contracts and also capitalize on the structural tailwinds in both the healthcare and the industrial sectors. US Tata Power has announced a major strategic move, signing a pact for a new hydropower project in Bhutan. So this agreement underscores India's push for cross-border clean energy collaboration. The company has planned a phased investment, committing 1,572 crore rupees in tranches to the project. So this infrastructure is expected to take several years, with the commissioning date currently projected for September 2031. So the power distribution model is key for India. The agreement dictates that a massive 80% of the power generated by the new hydro facility will flow back to the Indian grid. JP Morgan is maintaining its overweight rating on Reliance Industries and also setting a price target of 1,727 rupees. The brokerage argues that RIL's valuations remain attractive, noting the stock still trades at an estimated 15% holding company discount relative to its peers. JP Morgan also sees a crucial shift in the company's financial trajectory. They believe that the earnings drag caused by a weak refining and petrochemical cycle through fiscal years of 2024 and 25 and is now firmly over. So consequently, the firm projects that RIL's earnings growth should be significantly better moving forward. Next up, we have Interglobe Aviation that has climbed to their highest levels in 3 months after the company was selected to replace Tata Motors passenger vehicles on the S&P BSE Sensex effective December 22. So the addition comes amid the demerger of Tata Motors passenger vehicle business, prompting a reshuffle of the benchmark index. Market observers say that such changes drive fund flows as index tracking portfolios adjust ahead of the implementation date. Next up, we have Mangal Electrical Industries that has fallen more than 2% on Monday after its 3-month IPO lock-in period has expired, freeing up over 10 lakh shares or about 4% of its equity. So the stock has slipped as much as 417 rupees before trimming the losses, while broader markets have stayed flat. Analysts say that the unlocking could actually add selling pressure as early investors are now free to exit. In fact, MOSL has raised its rating on Indian IT services from underweight to overweight, citing strong growth prospects from enterprise-wide AI adoption. So despite IT underperforming recently, markets have bounced back and valuations are now attractive after 1 in 3-year underperformance there. So analysts are seeing an inflection point in Gen AI spending likely in the coming quarters, which could actually benefit major players like Infosys. So the sector's share of Nifty profits has remained steady at 15% over 4 years, even as its benchmark weight fell to a decadal low of 10%. US state-run aerospace behemoth Hindustan Aeronautics Limited, that is the HAL, on Monday has called the deadly Tejas fighter jet crash during an air show in Dubai an isolated occurrence. So the shares of HAL has tumbled over 8% during the morning trade. The company said that the crash was caused by exceptional circumstances. At the NSE, the HAL stock dropped 4% to hit the day's low of 4,405 rupees after the Tejas jet crash on last day of the Middle East's largest aviation event, which started on Monday. The company said that it was deeply saddened by the loss of life of the courageous Indian Air Force pilot. So the incident has marked the second crash involving a Tejas aircraft in less than 2 years. In March 2024, a Tejas fighter jet went down in Rajasthan's Jaisalmer, the first such accident in the aircraft's 23-year-old history since its maiden test flight in 2001. Here's India's economy is expected to grow 6.5% in the current financial year, and this is driven mainly by strong domestic demand, recent tax cuts, and also monetary policy easing. And a new, this is there in the new S&P report. So the data also projected growth to rise to 6.7% in the next fiscal, with risks to the outlook remaining balanced. India's growth momentum has remained strong, with the real GDP expanding 7.8% in the April-June quarter of FY26, which is the fastest pace in 5 quarters. So the report also said that the ratings, has described the growth outlook as balanced, with no major downside risk for now. Magic Pin and Rapido have joined hands, viewers, to take on the duopoly of Zomato and Swiggy, whereby the country's third largest food delivery player will plug its nationwide restaurant network to Rapido-owned platform only. So the partnership will open up Magic Pin's large restaurant base for Rapido, which launched only in August and has been looking to scale beyond Bengaluru. So once the onboarding process is complete, Rapido's only will have access to over 80,000 restaurants across the country, whereas Magic Pin will gain access to Rapido's delivery fleet in certain locations. Baiju Ravindran has refuted judgment made by a US bankruptcy court in Delaware, which made him liable to repay over $1 billion in damages in litigation connected to allegations involving transfers of funds tied to Baiju's Alpha and US-based lender Glass Trust Company. So as per a press release issued by Baiju's legal team, his legal counsel, Meknath, stated that they consider that the US court faltered in its judgment of this matter and will be filing the necessary appeals and other contestations related to this judgment and also related orders. So Baiju also underlined that the judgment is a default judgment, implying that the court issued it without Baiju's, being permitted to present a defense, and also essentially deprived Baiju of the presentation of a defense by relying on its prior order of contempt. Google has firmly denied claims that it scans users' Gmail's messages and also attachments to train its Gemini AI models, describing these allegations as misleading. The controversy began after Malwarebytes published a report claiming that the only way to prevent Gmail from accessing personal data for an AI training was to switch off the platform's smart features such as spell check. So the claim sparked a wave of outrage online as users voiced frustration over the idea that Google was using their personal data for AI training without consent. So in a recent post on social media, Google has clarified that it has not made any changes to user settings and does not use Gmail content to train its Gemini AI models. Viewers, in a surprising move, Google says that it has cracked Apple's AirDrop, at least for its own Pixel 10 phones, I beg your pardon. So with a fresh update to its quick share feature, Pixel 10 users can now send files directly to iPhones, iPads and Macs. And vice versa. So Google has developed this integration entirely on its own without any collaboration from Apple. And transfers happen straight between devices peer-to-peer without going through, any servers there, which Google says that helps safeguard the user's privacy. Australia's upcoming social media ban for under 16 is already prompting creators to rethink their business model. Storytellers, YouTubers and influencers fear a sharp drop in views and also ad revenue, and some are planning to actually relocate abroad. Established creators like 23-year-old gamer Jordan Barclay have raised the alarm that advertisers may pull back. The sweeping law, effective December 10, threatens to reshape Australia's digital content economy. Now on to some national news, viewers. Justice Surya Kant was sworn in as Chief Justice of India by President Draupadi Murmu at Rashtrapati Bhavan today. The 53rd person to serve as CJI, Justice Kant is scheduled to demit office a little over 14 months from now and on February 9, 2027. After taking oath of office at Rashtrapati Bhavan's Gantantra Mandap, formerly Darbar Hall, Justice Kant walked over to and shook hands with Prime Minister Narendra Modi and also greeted other top officials present, including Vice President, the Home Minister, and also the Lok Sabha Speaker. So he was also embraced by his immediate predecessor, Justice B.R. Gawai, over the weekend. Justice Kant had focused attention on the need to clear the Supreme Court's growing backlog of cases. On to some more national news. In a big boost to India's indigenous shipbuilding, the Indian Navy has commissioned INS Mahe, the first vessel of the Mahe class anti-submarine warfare shallow water craft at the naval dockyard in Mumbai, marking a major milestone in India's indigenous shipbuilding journey. With 80% indigenous components, INS Mahe significantly enhances the Navy's operational capability in detecting and also neutralizing underwater threats. The union government has introduced a major overhaul of labour laws, merging 29 existing regulations into 4 new codes effective November 21. So the 4 labour codes include the Code on Wages 2019, the Industrial Relations Code 2020, the Code on Social Security 2020, and the Occupational Safety, Health and Working Conditions Code 2020. So this reform is part of a broader effort to modernize India's labour framework, promoting ease of doing business and also ensuring workers' rights are safeguarded. If you're employed full-time, on contract, part-time, or even working via digital platforms, these changes could actually impact your earnings, job terms, and also benefits and rights. Here's a protest against Delhi's worsening air quality at India Gate spiraled into violence on Sunday evening, with police arresting over 22 demonstrators after some allegedly used chili spray on personnel attempting to clear the blocked road. So a group of people even raised slogans supporting Madhvi Hidma, top Maoist leader who was killed in an encounter in Andhra Pradesh earlier this month, prompting legal action. So when the police intervened and also asked the demonstrators to stop the protest, they reportedly turned violent and broke barricades and sprayed chili spray, injuring 3 to 4 cops. 6 people died and 28 were injured in a head-on collision involving 2 private buses in Tamil Nadu's Tenkasi district on Monday. According to police, a private bus travelling from Madurai to Saint Kotai and another heading from Tenkasi towards Kovilpatti collided. So the impact left both vehicles mangled and triggering a massive rescue operation by local authorities and also firefighters. So all 28 injured passengers are receiving treatment at nearby hospitals. Health officials at the scene said that the condition of some victims remains serious, adding that the death count is likely to increase. Now let's shift our focus to some global news. In a significant diplomatic breakthrough, India and Canada have agreed to launch negotiations on a high-ambition comprehensive economic partnership agreement, and this is marking a major reset in ties after years of turbulence. So the development was announced following a meeting between Prime Minister Narendra Modi and also Canadian Prime Minister Mark Carney on the sidelines of G20 Leaders Summit in Johannesburg. So the Canada-India CEPA negotiations began in 2010 and also gained momentum in 2022. However, the talks were suspended by Canada in 2023. According to a statement issued by India's Ministry of External Affairs, both the sides are committed to pursuing an ambitious trade pact aimed at doubling bilateral trade to $50 billion by 2030. Now in Pakistan, a major security scare unfolds after suicide bombers attack a parliamentary headquarters, killing 3 people. The assault targets the Frontier Corps facility in the troubled Balochistan region, which is an area that has seen repeated militant strikes over the years. So security forces engage in a fierce gunfight before neutralizing the attackers, but the incident once again highlights the serious threat posed by insurgent groups operating in the region. Officials also say that an investigation is now underway to find out how the attackers have breached the compound. US and Ukrainian negotiators have drawn up an updated and refined peace framework and also a plan to continue intensive work on a peace plan over the coming days. So the countries have announced this on Sunday. A joint statement said talks on a US-backed plan in Geneva had been highly productive. US Secretary of State Marco Rubio said that there had been a tremendous amount of progress on honing a US-backed plan, but there was still some work to be done before any final agreement could be put to Russia. So the plan's original draft, which is the details of which were leaked last week, was cautiously welcomed by Russia, but not by leaders in Kiev and Europe who saw it as too favorable to the Kremlin. Viewers, with that, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Market ends low for the second consecutive day, with Nifty ending below 26,000 after the last hour plunge, while the Sensex settled near day's low. All sectors barring IT finished lower. Hiring companies gain on the back of new labour codes as it overhauls workforce practices and benefits. Team Lease CFO Ramani Dati says these laws will make it easier for the companies to hire and fire, thus aiding ease of doing business. Government cuts eligibility for gratuity to 1 year from 5 years under the new labour laws. Requires an employee's basic salary to constitute at least 50% of their total CTC or meet the government specified percentage. HAL says recent accident at the Dubai Air Show involving Tejas aircraft is an isolated occurrence and makes no impact on operations, financial performance or its future deliveries. Incoming Chief Justice of India Surya Kant pledges a citizen-first Supreme Court, tells NDTV that he aims to transform the Apex Court from an elite institution that serves the citizens first. Indian Navy commissions INS Mahe, the first of Mahe class, the anti-submarine warfare shallow water craft designed for waters boosting coastal defense. Built by Cochin Shipyard, it will detect and neutralize enemy submarines. Indian film industry's iconic man Dharmendra passes away at the age of 89 in Mumbai from a prolonged illness. Bollywood actors such as Amitabh Bachchan, Amir Khan and Shah Rukh Khan reached the crematorium to pay last respects. Tributes poured in from across India's fans, film icons and political figures remember Dharmendra. PM Modi calls his death the end of an era, while President Murmu describes him as a towering figure of Indian cinema. US and Ukraine draw up a revised and refined peace plan to end the war with Russia in Geneva. A joint statement between both the countries said that any eventual deal would fully uphold Ukraine's sovereignty. Hello and welcome viewers, this is Profit 360. Like always, it's 4 p.m. sharp and I'm your host Malika Mishra. Today we're starting the show on a somber note because India is heartbroken as our beloved Dharam Paji, the man whose warmth lit up the screen long before fame found him, is no more. The 89-year-old legend who gave Hindi cinema its gentlest hero and its strongest man passed away today in Mumbai. A towering 65-year career, over 300 films. From Satyakam to Sholay, he wasn't just an actor, he was a feeling, a softness wrapped in strength, a hero who shaped generations. He had been unwell for some time, in and out of hospital before the family brought him home earlier this month. Mumbai police has confirmed his passing and preparations are underway for his final rites at the Pavan Hans crematorium in Vile Parle. Let's go across to my colleague Abida now, who's reporting from Ground Zero on this.
November 24th, a huge loss for the Indian film industry as we lose the legendary actor Dharmendra. He has been ailing for quite some time now and we know that he was admitted in Breach Candy Hospital end of October. We have seen actors like Shah Rukh Khan, Govinda, Amir Khan, Salman pouring into the hospital to be by the side of the actor as well as his family. Then the family took a decision of moving him from the hospital to their residence here where I'm standing right now in Juhu. This was on 12th of November where he was taken from the hospital in an ambulance into his residence because his family decided he should be in comfort of his own home and around his loved ones. His sons, the Deol brothers, Sunny Deol, Bobby Deol, they all live together here in this bungalow with their mother. Dharmendra mostly used to live in his Khandala farmhouse and used to occasionally visit here. We have also seen how all his fraternity people were pouring into Pavan Hans crematorium. His body was taken from here in an ambulance, followed by all his family members. It was a very intimate cremation that happened. We are still waiting to hear from the family a confirmation about his passing away, but we have heard nothing. The family made sure that media stayed away from all of this, and it was only very personal and very few people who were allowed inside the crematorium. Media and fans stood outside the crematorium to pay their last respect. We saw actors like Amitabh Bachchan, Abhishek Bachchan, Salman Khan, Amir Khan, Salim Khan, Shabana Azmi, Sanjay Dutt, everybody coming in and paying their respect. The cremation is over, and we also saw all celebrities leaving from there. It was absolute chaos outside the crematorium, but there was police and security handling the media as well as the fans. Right now we are outside his residence, and all the ceremony has been done. We are still yet to hear from the family if there's a prayer meet or not, maybe tomorrow or day after. But for now,